to take the Nifty past its previous record high, which is 25,078, which it had hit last month. But since this is expiry week, will that sentiment be kept in check? Because the banks have been fluctuating between gains and losses, one day up, one day down. The IT index is also not contributing to the gains as well. So will that keep the Nifty gains in check? And of course, last week was one full of block deals, almost 20,000 crores taking place in the last 3 trading sessions. And will that continue this week as well? And will that have an impact on the market? So plenty of questions to be asked. It is expiry week. We'll keep an eye out on some key levels on the index. The GIFT Nifty still suggesting a 60-point uptick at the start of trade. Over to Abhishek now, who is going to list out the stocks that you need to watch out for in today's session. Abhishek, good morning. What's on your list?
Good morning, Homa. So to begin with ONGC, they have started production from the 5th oil well in the block KG that is there, cluster 2 asset. So earlier in January, oil production were commenced from the same asset with 4 of the 13 wells already flowing. Gas production is also advancing with 3 of the 7 wells online. Reliance Power and Reliance Infra in focus. SEBI has passed its final order with respect to Reliance Home Finance and others. Reliance Power and Reliance Infra were not a noticee or party of the proceedings before SEBI. ZS Life, they have bought 50% stake in Sterling Bio for consideration of rupees 550 crores. Finmin has given a nod for FIS stake to go up to 49% in Geofin. Akums Drugs, they have reported the Q1 numbers, revenue up a little more than 5% YOY, and they have turned profitable in Q1 of this fiscal when compared to a loss that they have reported in Q1 of previous fiscal. KEC, they have got new orders nearly about 1,080 crores. Back to you.
Abhishek, thanks a lot for that update. We'll keep an eye out on all of these names. And lastly, Sudarshan joins in with cues from the FNO space. Sudarshan, continue to remain within touching distance of 25,000. How's the setup looking like on the FNO side of things?
Morning, Omas. That's correct. So just if you talk about the last week amid consolidation, we saw market recording gains for second straight week. But on Friday, it was a tight range of trade, and amid that, we saw Sensex and Nifty closing with minor gains. But one sector that has been focused for the last few weeks and might remain in the focus for today as well is the Nifty IT. That's on the back of statement of US Fed chairman saying the time has come for the policy to adjust. Now, talking about the institutional activities, we saw both FIs and DIs buying shares in the cash market. FIs bought shares of almost 2,000 crore, while DIs buy figure was almost 3,000 crore. Now, if you talk about the August so far, DIs have bought shares of more than 45,000 crore, and they have been buying for 15 consecutive sessions, while sell figure of FIs is almost rupees 30,000 crore. In the index future, amid tight range, we saw FIs buying shares of rupees 92 crore index futures. In the Nifty, they have cut positions by almost rupees 170 crore, while in the Nifty Bank, they have added positions of more than rupees 237 crore. Talking about the long contracts and exposure, they have added contracts of more than 25,000, and with this, long exposure remains constant for 52% for last 4 days. Now, talking about the options, on the call side, 24,800 call, we saw addition of more than 21 lakh shares with premium at 159. And for 24,900 call, we saw addition of more than 14 lakh shares with premium at 107. On the put side, for 24,800 put, we saw addition of nearly 24 lakh shares. And for 24,700 put, we saw addition of more than 15 lakh shares. With these important levels for Nifty, support is seen somewhere around 24,700 and resistance is seen somewhere around 25,000. Lastly, in the stocks in focus, there are 13 stocks in the band and new entrant is Balrampur Chini. But keep an eye on those two stocks that have come out of the ban, and those are LIC Housing and Piramal Enterprises.
13 stocks still in the FNO ban is starting expiry weeks. Darshan, thanks a lot for that update. On to an important news story then that came out over the weekend. The cabinet has given the nod for the implementation of the unified pension scheme. Now, this is a reform that is aimed at benefiting around 23 lakh government employees. The new scheme, in addition to gratuity, will also include a lump sum payment option upon superannuation. Some of the key features of this pension scheme include an assured pension, where employees will receive half of their average pay from the last 12 months before retirement if they have completed 25 years of service. The spouse will also be assured of 60% of the pension amount in case of the employee's death. Now, the employees will also be guaranteed a minimum pension amount of 10,000 rupees a month upon retiring. Now, it is key to note that the employees will be able to choose between the new pension scheme and those that are already existing as the existing pension scheme as well. Time for a short break here on Power Breakfast. Up next, we get to cues from the commodities market. Stay tuned. Back on the other side. Welcome back. Now, ceasefire talks for the Gaza conflict have stalled without a deal, with neither Hamas nor Israel agreeing to several compromises presented by mediators, casting doubt on the chances of success in the effort to end the 10-month-old war. Now, US officials in Cairo commented that the recent conversations were constructive and said that the parties were working to reaching a final and implementable agreement. Now, separately, militant group Hezbollah launched hundreds of missiles after Israel conducted a massive airstrike on Lebanon using hundreds of jets. Now, this exchange marked one of the major clashes in the ongoing 10-month conflict in the region. Now, both sides have communicated their desire to avoid further escalation. And Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. Looks like this conflict has sent oil prices higher yet again.
Oh, well, absolutely. The couple of points that you mentioned, Harmaz, one, that no progress towards Israel and Hamas ceasefire, and the second about Israel and Hezbollah exchanging missiles over the weekend, clearly has taken the crude oil prices on the higher side. From the kind of lows that we saw in the previous week, we are up by nearly $4 to $5 from those kind of levels. The markets are looking at support from supply risks, escalating fears of broader conflict in Middle East. Also, the U.S. rate cut cheer seems to be supporting many commodities right now in Asia. The dollar index is trading at a 13-month lows, is benefiting buying for many of those. For the crude oil prices, a couple of concerns clearly come in from the fact that the demand growth in 2024 is now being revised lower from various banks and brokerages. Morgan Stanley's latest report has done that. OPEC, while stands tall, but we've seen various other brokerages do that. In the meanwhile, you have the gold prices, which are holding above $2,500 an ounce. Silver prices gained up 2.5% on Friday. The U.S. Fed Powell at Jackson Hole meeting saying that the Fed is now ready to cut rates clearly has led a lot of dollar-denominated commodities trading in the positive. So whether it's energy, precious metals, base metals, we are starting Asia on a positive note.
Manisha, thanks a lot for all of those updates there from the commodity space. Oil prices moving higher again after finding a floor at around $75 a barrel. Moving on to some more international updates now. Pavel Durov, the billionaire founder of the messaging app Telegram, was arrested in Paris on Saturday over alleged offences related to his messaging app. Now, Durov has been travelling from Azerbaijan and was arrested on the back of a warrant as part of a preliminary investigation. Now, the Telegram co-founder is a Russian citizen, and the Russian embassy in France has demanded consular access to Durov and also demanded that his rights be protected. And before we call time on this edition of Power Breakfast, let's first take a look at how the Asian markets are doing now. There's been no change to the losses of the Japanese indices, though. The Nikkei continues to remain 1% lower, as does the South Korean indices that continue to trade below the flat line. The Shanghai index has also now trading below the flat line, trading with modest losses. But the two outperformers are on your screen right now, the Hang Seng and the Taiwanese index, both of them trading with gains of over 1%. Similar quantum to which was at the start of the show as well. So these are the two indices that remain the outperformers across the Asia Pacific. Losses coming in from Japan, South Korea, and of course the Shanghai Composite as well, who are trading with modest losses. But the losses are being led by Japan, and the GIFT Nifty continues to indicate a slightly positive start for our own markets as well. With that, it's a wrap on this edition of Power Breakfast from me and the team that put this show together. Thank you so much for watching. Bazaar Morning Call comes up next.
US Vice President Kamala Harris created history when she accepted the nomination to contest the US presidential election. She's the first woman of color and the first South Asian American to become the presidential candidate. She has Indian roots. 59-year-old Kamala Harris is half Indian and half Jamaican. Her full name is Kamala Devi Harris, daughter of Shamla Gopalan Harris, a biologist from India, and Donald J. Harris, an economist from Jamaica. Kamala Harris's mother is from Thula Sendrapuram, a small village in Thiruvarur district of Tamil Nadu.
India's market news headquarters. cutting-edge analysis, influential insights, market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call, start of a new week. And it's an important week because of what has happened on Friday. I mean, Fridays are turning out to be sort of important. I mean, there was that 5th of August Friday when markets kind of capitulated. That seems like a distant dream now. So we're starting on a good footing. We're coming to you from the CNBC TV18 Motilal Oswal studios. I'm Prashant, with me my colleague Surbi and Nigel. Guys, good morning.
Hi, morning guys. That was a manic Monday, I thought. But anyway, I think the Fridays and the following Mondays end up being pretty eventful for markets. That's what's happening. But let's say we're ending the month in not such a bad position, despite all the topsy-turvy and the up and down.
Well, when you started off the month, everyone was wondering whether we are bracing for a sharper correction. Now we're talking about fresh all-time highs. So in a matter of a few sessions, that's how things have turned.
I mean, we say that cycles are not years and months.
Yeah.
I think they're weeks.
Now they're weeks.
And it's so fast, right? I mean, the change in perception and how markets take it. So let's kind of rewind the clock back and tell you and take it from where we left off on Friday. And what's important from Friday? What's important from Friday is Fed Chair Powell pretty much promising and leaving absolutely no room for doubt that rate cuts are coming. And this is, Jackson Hole's speeches, and we were talking about this last Friday as we went into that, his speech. They're rarely eventful. They're rarely market moving in that sense. But this one was. The last one, I think, was 2021. Well, his key message were twofold. He said Fed, and I quote, will not seek or welcome further cooling in labour market conditions, which means, they're not going to wait for another disaster of a jobs report to start to act. Second, he said the time has come for policy to adjust. And I think this is pretty much as clearly as they come. I mean, a message. I think he could have might as well said, well, I'm cutting rates by 25. So September meeting, markets are at 25. It's a toss-up. Some are saying 50, but more likely than not, it's at 25 basis points, the start of a rate-cutting cycle. Equities naturally responded. The S&P was up 1, NASDAQ was up 1.5, and of course, the small-cap index in the US was up over 3%. Again, I was talking about, in a reverse 180-day about-face type of reaction to what happened in early August to what happened now. Pretty large moves. I mean, for example, the NASDAQ futures crossed their 55-day moving average. They're above the psychological resistance at 19,700, which basically portends more gains as we come into this week for the US. The 10-year yield was down 5 basis points. We're at about 3.8, but you also had the 2 and the 5-year, which basically tested month-to-date lows. The dollar index from 103.5 a few days ago, it's back at testing. I mean, it's essentially looking at maybe into the double-digit handles. So 100.68 and the multi-year supports at about 100.5. We almost tested those supports, and then there was a bit of a bounce. Oil prices jumped about 2.5%. We're back above $79 a barrel. Remember, commodities, not just oil, but everything, global commodities are all priced in dollars, US dollars. And when dollar falls, prices rise. I mean, that's the reaction function. You also have a bit of news flow over the weekend in terms of US elections, and this is going to gain importance as we go into the next couple of months. So it was looking like, Trump was on the back foot with Kamala Harris replacing Joe Biden as the Democrat presidential candidate. And so she was riding this big wave. She's still doing very well. They're neck to neck. It's a toss-up, basically, if you go by polls. But you basically have a very popular independent candidate, Robert F. Kennedy Jr., endorsing Trump. He basically suspended his campaign. He was polling about 4.5% of votes nationwide. And he's one of the most popular independent candidates in decades. And him throwing his weight behind Trump basically gives, puts Trump perhaps a little ahead. We'll have to wait for actual fresh polling through the course of the week to see whether that is the case or not. But it was sort of, the question is, have we seen in a way peak Kamala Harris? And, you're basically going to see a more even kind of sort of polling and coverage, etc., from here on. So just to circle back and leave it off as far as levels are concerned, it's not very different. So Nifty upside level, of course, I've been saying this for about 6 or 7 trading sessions. We seemed like it was looking like we had a path to all-time highs looking clearer and clearer. So 25,078 is the all-time high. for the Nifty. Supports come in at the 40 hourly exponential, which is 24,692, and then the 20-day moving average, which is 24,544. They are, some distance away, though the hourly average is close by. Bank Nifty ended Friday with a minor cut. It was a sort of negative day as well. It was a red candle, which is not very positive, but it's been the weaker of the two indices. The falling resistance line at 51,150 will be the immediate resistance. I think that should go. And above that, you're looking at the daily upper Bollinger Band, which is 51,897, 51,900, roughly. That's essentially the next sort of target. And supports here come in at the 20-day moving average, which is 50,685, and the low, which comes in at 50,333 again. These are, for the Nifty Bank, they're not very far away. The supports, they're around. But let's hope the Bank Nifty is also kind of able to bulk up a little bit and pull its weight. On your screen, the open, about 50 points. It was on Friday when you looked at these US markets and the reaction in dollar and the yields, etc. It looked like a very large start. It's not. It's a more measured start, which exactly is not a bad thing. You've been adding 30, 40 points every day for the last few sessions. Friday was quiet. So, I think that'll do. A slow and steady march upwards, I think, is perhaps better than a fast and furious rally a day or two, which then kind of starts to fizzle away. So it's a more measured 50-point gap up that you have on our hands. Surabhi.
Absolutely. Prashant, I guess, it wasn't entirely new. The market was anyway penciling in a September rate cut, right? And the comments only reinforced that. There was no fresh shocker in terms of how the Fed chief is thinking. And maybe that's why you're getting a more measured start across Asia this morning. Just to reiterate the comment, to go back to the central theme, what we are really focusing on today and what markets around the world have been focusing on is the Fed chief saying, two things. He said that my confidence has grown that inflation is on a sustainable path to 2%, which was questionable in the earlier commentary, the previous policy meeting. And then he went on to say that the upside risks to inflation have diminished and the downside risks to employment have increased. And then, of course, he went on to exactly cue for a September cut. However, look at Asian screens this morning. So it's not all it's no tidal wave of green. Markets are mixed. Singapore's a little flat. Mainland China is not doing much. Hong Kong's actually started out positive. But you have Japan down. So it's a mixed picture across Asia. That's what we're getting at this point in time. But yes, building on those gains, you can safely say. Now, what's happening in the Middle East has stirred up oil prices. Remember, in the middle of the week, oil was falling to 76. That's Brent. Now we're talking about prices coming back to closer to 80. So what happened over the weekend? Some 320 rockets fired by Hezbollah onto the Israeli side, and in a preemptive strike, Israel kept on pounding with airstrikes. So basically, according to a lot of the commentators, this is the biggest escalation we've seen in the last couple of months. It's been ongoing for a while, but that's why even the oil markets are taking a little more note, because it's the size of it is increasing, and those airstrikes are happening in Lebanon. Let's not forget that. Anyway, back to our markets, the fund flow picture. Remember, the data has been skewed very heavily because of all the blocks that are happening. It's block season big time. FIIs were buyers, almost 2,000 crores. Domestic institutions were buyers to almost to an extent of 2,900 odd crores to be more precise. So the fund flow picture is not bad at all. The blocks are happening. Let's just recap the distance from the peak. Will the bulls prevail, and will we get that all-time high? If not today, but later this week. We're not too far away. Nifty 1% higher, the mid-cap index 1.2%, small cap also about 1.5%. And the bank Nifty, that's the one that has to travel the most, 4.5% from its peak. A lot of index changes, by the way, both here at home and global indices. So back home, NSE has made the official announcement. BEL and Trent will come into the index, the Nifty 50 that is, and Divi's and LTI Mindtree will make their way out. No word on Zomato. The market's been, of course, toying with that idea of Zomato in F&O and then Zomato in Nifty, but we have to wait on it. These changes are effective the 30th of September. And FTSE has announced a whole range of changes to its indices as well, to the all-world index and then to the all-cap index as well. The changes to the all-world index are on your screen, about some 13 stocks which get added. So we'll watch out for any further excitement, any trading bounce on some of these names. But it's been sort of doing the rounds anyway in the market, so perhaps on expected lines. And then there are 48 additions to the all-cap index as well. Last but not the least, keep an eye out on the Adani Group, especially Ambuja Cements. Remember, that was a big headline on Friday with the block happening. And guess what? It is GQG Partners once again striking their sort of affirmation and their belief, because among others, they were the buyers in the blocks that happened on Ambuja. on Friday. So lots to watch out for, lots of individual stock-specific action. But I guess the setup doesn't look too bad, Nigel, overall.
Well, that's right. And it appears that Powell's speech has set the bulls, talking about fresh all-time highs again. So Powell's speech could practically take the Nifty towards those fresh all-time highs, powering them in that direction. Well, the geopolitical situation is still a little bit fragile, but the Israel stock market was open yesterday, and actually that market went to fresh all-time highs. So hopefully for the good of, of humanity, for the good of financial markets, for good of everyone, hopefully there is de-escalation on this entire geopolitical issue out there. And this week, well, things will rev up towards the second half of the week because on Thursday, we'll have the August monthly expiry that will play out. So that's why we'll see some bit of volatility coming in there. What do the FIs do? 7,000 long, 7,000 short contracts. So the long short positioning doesn't move much, where they are mildly net long with close to 52% of their positions on that side. Even if you look at it at an absolute basis, both the FIs as well as the clients, they remain net long with close to 35,000 contracts to around 25 to 35,000 contracts on the long side itself. So that's par for the course. Well, what about the PCR? In Friday's trading session, we made this point. It's moving towards the upper end of the range. Now, it cooled off a little bit because we had a day of consolidation on Friday. The PCR is holding at around 1.27 odd, more or less, somewhere in the middle of that broad range that we've looked at. Two strikes are fairly active. And given that it's the monthly expiry, we'll keep an eye out on these strikes as well because these contracts will expire in the next few sessions. 24,800 call as well as put. You put the premium together, the rough premium is around 250, 260 rupees odd. So the sense you get is that maybe there's a bit of a strategy that's playing out here, which is known as the short straddle. That's you write the same strike call as well as put, pocket that 250 rupees odd, and gets you a broad range. So on the downside, you're looking at the 24,550 odd mark holding out. On the upside, it will be 25,050 going by the options data. Keep in mind the 20 DMA as well as around this vicinity, and you'll want the markets to move to a fresh all-time high, which is up for you on the screen. The Nifty Bank, well, that's been facing resistance above that 51,000 odd mark. So the broad range you're looking at is the 50 DMA comes in this vicinity. It almost went to this 51,300 odd mark. So that's a resistance. The DMA on the downside, the important one to look at is the 20 DMA. So that 50,600 odd mark should hold out. Sectors that I'm looking at for today in particular, given the global backdrop, metals as well as tech. Both those two indices are going to be in focus in today's trading session, and they could relatively outperform going by the comments we've seen globally and the global cues on the whole. Stocks that I'm looking at, well, there are some changes in the F&O banned list. So that's where we're looking at that. Balrampur Chini has moved into the banned list, and we have a couple of stocks that have come out of that list. So LIC Housing Finance and Pyramid Enterprises. The start is going to be in the green, but today has the makings of a good session. So let's see how that goes.
Later this week, Nigel, there is, we talk about Thursday, that expiry.
Yeah.
Thursday is also the Reliance AGM.
Absolutely. Big one.
So that's a big one. And usually, Reliance is a big one. And something is expected. And leading into it, if Reliance starts to move, that's the other one. But before that, before Reliance, globally, there is NVIDIA results on Wednesday, which I think... So, it's a packed one. Both globally and locally as well. Ed Yardeni is president at Yardeni Research. He's with us to take some questions. Ed, good morning. Great to have you with us here. Thank you. So, Powell, all about just confirming what you've been saying for a while, Ed, that rate cuts are coming. And it's just, 25, 50, doesn't matter. And do you think the equity markets will like 25 better, actually?
Yeah, I think so. I think the equity markets would like to see interest rates drop gradually, not abruptly. Abruptly would suggest that the Fed knows something that we don't know. Remember, it was only at the beginning of August that when the stock markets took a dive on the unwinding of carry trades, that there were some hysterics out there saying that the Fed had to lower interest rates immediately by 75 basis points. So I don't think the Fed wants to signal that there's any trouble out there because there really isn't. And 25 is enough in September, and I think they should wait. I don't think they should do another cut in November and another one in December. I think they need more data to confirm what the status of the economy is. And I think the economy is going to surprise everybody to the upside. I think it's going to be stronger than expected. And if that's the case, then there's absolutely no rush to lower interest rates.
Okay, so Ed, hi, great to have you on. So if you could expand on that.
Thank you.
So we get that first cut in September, and then are you saying that we'll keep getting gradual rate cuts with a strong economy? So then what I'm hearing is that Goldilocks will dance into the end of the year. Is that the market scenario we're looking at?
Well, I think the markets are expecting 3 cuts in the federal funds rate between now and year end. I think there's a likelihood that we'll only get one of those cuts in September, and that the economic news will look so good that the Fed will conclude that, maybe rushing interest rate cuts isn't the best thing to do.
Word on all the political rhetoric that's now heating up. And we know that, there's this big talk about raising corporate taxes, which is the stated sort of policy objective by Ms. Harris. We've not seen the market react too much to that. So what should we be prepared for in terms of just the market reaction, the equity reaction to what's happening in politics?
Well, honestly, that's been my position, is I'm not going to react to it until I know exactly who wins, not just who wins in the White House, but what the makeup is in Congress. Clearly, if we get a Democratic sweep, that's one set of policies that will be very likely suddenly. If we get a Republican sweep, it'll be the other way. I think we're going to get what's called gridlock. I think whoever's in the White House isn't going to find it that easy to get things through Congress. If that's the case, then all of these policy suggestions may not even have a chance of occurring.
Hi, Ed. Good morning and good to see you. When Ed, I recall earlier this year, we were talking about the S&P 500 moving to around 5,400. I think that was the target that you had, that 4,800 to 5,400. We're currently at around 5,600. Where do you see the U.S. markets go by the end of this year? And also, I want you to comment on this, on the geopolitical issue, Ed. It seems that the equity markets are just ignoring that. Your comment out there.
Yes. Yeah, the equity markets are ignoring the domestic political situation. They're ignoring the geopolitical situation. They're just focusing really on the Fed, inflation, the economy, earnings, and those are all positive right now. I'm thinking now that we could get to 5,800 by year end. I am actually concerned about a melt-up. The problem with a melt-up is it's hard to really put in any sort of target because you don't know. It's all kind of becomes psychological. And I think Powell actually made a mistake. I think he was too dovish on Friday. He should have basically signaled that September there'd probably a rate cut, and then we'll see. But he seemed to be really putting a lot of weight on concerns about the labor market, and I don't see that there's a lot of reasons to be concerned. Even he admitted that whatever increase we've seen in the unemployment rates has not been related to layoffs. It's just been more people coming in to the labor market thinking that there's job opportunities out there, and it's just taking them a little longer to find those jobs. So I think he was too dovish, but it doesn't really matter what I think. What's important is what he says, and what he said was very dovish.
No, it matters what you say, Ed, because markets listen to you, and we do too. Thank you very much for joining us.
Thank you.
And running us through what you are, what you think the Fed will do, and your assessment of the entire situation. Ed's been sort of bang on over the last many months with his assessment through the sort of waxing and waning in terms of rate expectations, up and down. It's gone on and on. But he's been on the ball. Well, let's get you some opinion now. So we'll start with equities. This is Sunil Kaul of Goldman Sachs, who says that MSCI India's calendar 2024 earnings were cut modestly by consensus despite slightly better than expected results in the quarter, suggesting concerns around forward-looking guidance. He says, incorporating the first quarter FY25 earnings trends and reflecting the economy's recent GDP growth downgrades, he's trimming the full-year calendar 24 EPS growth forecast by 1 percentage point. So from 15, they're down to 14. They're retaining their CY25 forecast at 15% in line with consensus. He says, relative to consensus sectorally, they're expecting slightly higher growth in consumer sensitives and defensives, but lower growth in commodity, capex sensitive sectors.
All right, let's move on and get you some money market views as well. Kunal Sudhani of Shinhan Bank says the dollar got sold across the board on fresh dovish signals from the US Fed Chair Powell. He says fresh bearish acceleration is now pressuring targets for the dollar index closer to 100, 100.29 and 100.18 as well. And the psychological level of 100 itself, violation of which would be a signal towards the end of a wider multi-month range and spark a stronger drop. For the USD INR, he says 83.70 acts as the support, while 83.90 is a resistance.
Okay, well, on bonds, Vishal Goenka of IndiaBonds.com says the much-awaited statement by Fed Powell at Jackson Hole on Friday set the stage for U.S. to cut rates in its next September meeting. However, he says the pace of rate cuts remains data-dependent. Brewing situation in West Asia rallied oil prices by approximately 5% in the last 2 days. He adds some relief for the rupee with the U.S. dollar weakening is likely, and bond market will remain stable. The 10-year, according to him, should trade between 6.84 to 6.89%.
Well, we have a lot of stock-specific action track for you. We'll get to that in just a bit in our special Top 10 segment. For the time being, we run you through the list. We're looking at tech stocks, Geo Financial, Akim's Drug, DCW, KEC, ONGC, Ambuja Cements and Nykaa. All of them will be reacting to positive news flow. On the flip side, Zydus Life Sciences as well as Tata Technologies will be reacting to negative news flow. Well, we'll get to that in bigger detail, but before we slip into that short break, just want to wish all our viewers very happy Janmashtami. Wishing you, your families, all the love, peace, happiness, today, and may you have a good day as well. Well, on that note, we'll slip into a short break. You come back, we'll continue our focus on the stock-specific action, and we'll go into further detail in our top 10 stocks. Don't go anywhere.
A cancer researcher had migrated to the US in 1958 and graduated from the University of California, Berkeley. She met her husband, Donald J. Harris, at the university, and the two got married in 1963. Kamala Harris has a sister, Maya, who was seen at the Democrat National Convention as well. Now, throughout her campaign ahead of the 2020 presidential election, and even now in the run-up to the 2024 presidential election, Kamala Harris has spoken about the profound impact her mother had on her life.
My mother, our mother, Shamala Harris, had one of her own, and I miss her every day, and especially right now. And I know she's looking down smiling.
Kamala further said that after finishing her graduation in the United States, her mother was going to return home to India, but she met her father, Donald J. Harris, fell in love and got married. The Democrat nominee described her mother as a tough, courageous trailblazer in a fight for women's health. Harris said that her mother taught her to never complain about injustice, but do something about it. Dr. Shamla Gopalan Harris died in 2009, a year before Kamala Harris was elected as California's Attorney General. In the past, Kamala Harris has often said that India was a very important part of her life, and her mother would take her to India pretty much every year. Those trips to Chennai helped her to understand where she came from. She got to spend time with her grandparents, with her uncle and her chitties or aunts, and got to understand the love of a good idli. Kamala Harris's grandfather was a civil servant who participated in India's freedom struggle against the British. Her mother, Shamla herself, participated in the civil rights movement in the United States. In the small village of Thulasendrapuram in Tamil Nadu, where Kamala Harris's mother grew up, a set of people have been praying for Kamala Harris to win the presidential election. They hope Kamala Harris will one day visit the village and do something for them.
Welcome back. Well, it's time to boil down all the action to the individual stocks that should be on your radar this morning. There's a long list out there, and we have our team standing by with the CNBC TV18 list of top stocks to watch. Guys, good morning and happy Monday to all of you. Rima, let me start with you first. Focus on IT stocks this morning. What's the latest?
Well, the latest is the expectation of a Fed rate cut. Remember that Indian IT stocks like Nasdaq tend to react positively to any cut in the US interest rates. In fact, even if you see the commentary from the corporates over the last couple of quarters, when they talk about the decline in discretionary spending, the tough macro, they have alluded to high inflation and high interest rates in the US. So now that that tide is hopefully turning, there will be a sentiment rub-off on the Indian IT stocks. So Salil Parekh, for instance, just to give you an example, in the conference call which happened just in July, said the macro environment, at least in Western markets with high interest rates, has curtailed most companies from spending on big programs on digital transformation. Even C. Vijay Kumar, CVK of HCL Tech, has said, when asked about discretionary spending coming back, in July he said, I think even now there is some amount of discretionary spend happening, but for customers to become a little more liberal in terms of spending, I think it's largely driven by economic pressures, whether it's interest rates or inflation. So high interest rates has been a factor in impacting the macros in the US. So that will be a positive when that reverses. The Indian IT stocks ended down 1% on Friday, but since June, when the rally began, the index, Nifty IT index, is up 27%. Back to you.
Okay, all right, Rima, thanks a lot for that. Well, let's focus on one of the pharma counters, then that will be in focus. Zydus Life. Ekta, morning.
Morning. Well, important news which has come in for Zydus, and it was expected, where Teva has received US FDA approval for Asacol HD generic, which is basically a drug used for ulcerative colitis. Remember that this drug has been very important for Zydus because it accounted for 3 to 4% of Zydus's revenue, 8 to 10% of their EBITDA in FY24. And the assumption is that the product contribution will drop to less than 1% of revenue and less than 3% of EBITDA in FY26 on account of competition for Asacol HD. Now, the sharp decline, according to Jefferies, in earnings from new entrants in Asacol HD declines anyway because Zydus has launched a particular drug which is used for overactive bladders, which is Mirabegron generic, as well as increasing contribution from Revlimid generic should probably just about compensate the competition that we are seeing in Asacol HD. And this is despite it even coming earlier than what it was anticipated to be. Separately, Zydus is buying 50% in Sterling Biotech for 550 crores. This is one of the leading producers of pharma gelatin. FY24 revenue was 555 odd crores. Sterling Biotech was acquired by PEs under NCLT. Post-acquisition, it's going to become a joint venture company for Zydus.
All right. Ekta, thank you very much for that. Well, we also have Geo Finance, which should be in focus. Abhishek is here to tell us why. Abhishek, morning.
Morning, Prashant. So, GeoFin has got, a finance ministry approval for taking up their FDI stake in the company to up to 49%. Currently, FIs own about 17.55% stake as per the exchange's notification that we have. Company had sought this approval from shareholders as well to enable foreign investment of up to 49% in the company in May of 2024. So, stock is also in focus ahead of the AGM that is on 29th of August 2024. Back to you.
Okay, all right, got it. Abhishek, thanks very much. So, Geo Finance in focus as well. Back to Ekta. Ekta, we have numbers from Akam Drugs. How do they look?
Well, yes, operationally good. So that's why I expect the stock to be in the green. Revenue was up around 5% year on year. EBITDA 128 crores versus a loss of 125 crores year on year. Margins 12.6%. Profit 60 crores versus loss of 188 crores. Q on Q as well, there was an improvement in terms of margins, 12.6 versus 0.3%, and a turnaround on the bottom line. The CDMO margins, which is bulk of their business, improved to 14.4 versus 13% year on year, and branded formulations 10.3 versus 4% year on year. So expect the stock to be in the green, but this kind of performance should be sustainable for the company going forward.
Okay, Ekta, thanks for that. Well, let's wind this down then with some stocks in the news. Vamakshi joins us to help us out with that. Vamakshi?
Well, good morning, Nigel. Let me first start off with DCW Limited. The company is expected to open higher today, and that is because the FinMin has imposed definitive anti-dumping duty on CPVC imports from China and Korea. The earlier anti-dumping duty was imposed back in March 2020 and was set to expire yesterday, that is on August 25th. With this notification now coming in, this duty will be valid for another 5 years. But why does this bode well for DCW? Because the company had filed a petition seeking sunset review investigation on CPVC imports from China and South Korea. This essentially protects the business from cheap imports from these two countries, and business will continue as usual for DCW. So overall, going with the green for this counter. The next stock on my radar is KEC. Some order wins coming in for the company. They've secured new orders worth 1,079 crores in transmission and distribution and cable businesses. The company said that significant orders across Saudi Arabia, Oman as well as UAE have substantially expanded the company's international T&D order book in the Middle East. And with these orders, the year-to-date order intake has now surpassed 8,700 crores, reflecting a growth of almost 60% on a YOY basis. And lastly, let's also watch out for ONGC. The stock is also expected to open higher, and that is because the company has brought on stream its 5th of the 13 oil wells in the Krishna Godavari basin.
Okay, got it, Vamakshi. Thanks very much for that. Guys, just mentioning, I mean, on the CPVC news, I was looking at the reaction on the pipe makers, because for them, it's a raw material that they consume. So let's see how pricing plays out. Because if there is an anti-dumping duty, which means that now domestic prices are not that pressured by the imports coming in, is pricing going to increase for them? So that's why Astral, Prince Pipes, a lot of these stocks were under pressure. Epigral has a large facility as well. That was also down. So just mentioning that aside of DCW, a lot of these other sort of side stocks, part of that CPVC chain, we'll keep an eye out on them as well.
Oh, absolutely. Well, we'll try to speak with some companies as well in that space as we go along. But some block deals, right? I mean, that's essentially been a constant in these markets. Vivek is here to summarize. Vivek, morning.
Well, that's right. Quite a few block deals that happened in trade on Friday. Looking at the list of buyers and sellers that were declared post-market hours. First on the list, Ambuja Cements. Like we had mentioned, the promoter holder in investment sold close to 2.84% stake in the company at 625 rupees a share. Amongst the list of buyers, one of the largest chunks was picked by GQG, and GQG Partners picked up close to 0.7% stake, almost 2.6 crore shares. List of buyers otherwise took quite strong. NPS Trust, SBI Life, Mirai Mutual Fund, Morgan Stanley, they all picked up significant chunk as well. The next stock on the radar, Nykaa, again, something that we had flagged off earlier. Harinder Pal Singh and Associates, a pre-IPO investor, sold close to 1.4% stake out of the total 6.5% stake that they held at the end of Q1. Amongst the list of buyers, Goldman Sachs, Kotak Mahindra Mutual Fund, SBI Mutual Fund. Remember, this particular deal happened in the block deal window itself, and the stock rallied after that. And lastly, another large block deal that happened in the middle of the day was Tata Technology. Alpha TC Holdings, sold close to 2.4% stake in the company at the end of Q1. This particular entity held close to 4.34% stake. Going with the red on this particular name, given the fact that we are unaware of what exactly they plan to do with the remainder of the stake, the list of buyers not yet disclosed, assuming that the buying was less than 1%.
All right, got it. Thanks very much, Vivek, for all the recap of the block deal action that we've seen. Let's quickly look at the list for stocks to watch today. The ones that have positive news flow around them are IT stocks, Geo Financial Services, Akam Drugs, DCW, KEC International, ONGC, Ambuja Cements, and Nykaa. The ones that have negative news flow around them are Zydus Life Sciences and Tata Tech. All right, with that, let's head across to Manisha Gupta, get a roundup of all the commodity market action as we come out of the weekend. Manisha, so it seems the rate cut indeed is coming in September. Tell us what's the read-through for commodities?
Oh, well, absolutely positive in that sense, because we've seen the dollar index also trade around those 13-month lows, and that clearly has been supportive. So on the Asian markets right now, we are trading in the positive across commodities. There are concerns coming in from the Middle East. There are supply risks and escalating fears of a broader conflict in the Middle East with what is happening between Israel and Hamas, and now also Israel and Hezbollah, and that has added premium to prices also. So we have seen the crude oil prices come off its 8-month lows. It gained 2% on Friday. It's trading in the positive in Monday as well. Good gains is what we have seen in metals also. So you have gold prices back above $2,500 an ounce. Silver prices gained 2.5% on Friday, yet again trading in the positive right now. And you have the base metal prices trading firm as well. The copper prices have put in 2 weeks of gains now. There is bargain buying on the lower levels and also improving sentiment from China. All of these factors supporting the industrial commodities also in Asia.
Okay, all right. Manisha, thank you very much for that. So that's commodities in focus. We'll take a quick commercial break here. Stay with us. We are back. Prakash Devan will join in to talk about some of these individual names which our research team put out. What should you be doing with them and more. That's coming up in just a bit.
Overall, the economy continues to grow at a solid pace, but the inflation and labor market data show an evolving situation. The upside risks to inflation have diminished, and the downside risks to employment have increased. As we highlighted in our last FOMC statement, we are attentive to the risks to both sides of our dual mandate. The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. We will do everything we can to support a strong labor market as we make further progress toward price stability. With an appropriate dialing back of policy restraint, there is good reason to think that the economy will get back to 2% inflation while maintaining a strong labor market. The current level of our policy rate gives us ample room to respond to any risks we may face, including the risk of unwelcome further weakening in labor market conditions. Pandemic-related distortions to supply and demand, as well as severe shocks to energy and commodity markets, were important drivers of high inflation, and their reversal has been a key part of the story of its decline. The unwinding of these factors took much longer than expected, but ultimately played a large role in the subsequent disinflation. Our restrictive monetary policy contributed to a moderation in aggregate demand, which combined with improvements in aggregate supply to reduce inflationary pressures, while allowing growth to continue at a healthy pace. As labor demand also moderated, the historically high level of vacancies relative to unemployment has normalized primarily through a decline in vacancies, without sizable and disruptive layoffs, bringing the labor market to a state where it is no longer a source of inflationary pressures. An important takeaway from recent experience is that anchored inflation expectations, reinforced by vigorous central bank actions, can facilitate disinflation without the
Welcome back. Hope you're having a good morning. Well, we've listed all the top stocks for you. Let's get into some fundamental analysis on that. Prakash Sivan joins us to help us out with exactly that. Hi, Prakash. Good morning. Good to see you in as always. Well, going by the global backdrop and what Powell said, IT stocks will be in focus today. And just to remind our viewers that yesterday marked 20 years since TCS's IPO. And I'll tell you what, the IPO price was 850 rupees. The dividend itself is close to around 4,500 rupees. Forget about the stock price appreciation. So that's been one of the big quality names out there. Prakash, what's your view on tech? It could get a leg up today. What's your approach out there? What do you like from the tech space?
Good morning, Nigel. So, you're right. The IT pack has, of course, in anticipation of this rate cut being kind of a buzz. But what's going to be interesting now is that there will probably be a little bit of a relook at some of the names that have not done well, because what you're anticipating is a decent change in mindset from companies to start, releasing orders, and which will largely be from Jan onwards, right? So it's not that immediately things are going to change. It's going to take a while for the interest rate cut to kind of get digested and processed. But I would specifically answer your question, look at something like Wipro. Now, why I'm saying Wipro? Because Wipro hasn't, been the best in shape in that sense as compared to some of the other bigger names like Infy and all. But where things change is that Wipro has very decent long-term contracts, which it always gets awarded when things look up for the underlying client segment. And if that were to happen with this interest rate cut and it signals a change in that mood, you'll probably see a little bit of that come through, and Wipro gives you that comfort in terms of valuation as well. So I would only look at that. Of course, the mid-cap IT has been doing well and will continue to do well. But there's not much to be made out there, is my sense. You'll probably have a higher delta in the case of Wipro because it's a large business, which is still undervalued.
Prakash, hi, good morning. Good to have you on. So, just to take off from the point that Prashant was making earlier, this week, one big event is going to be this Reliance AGM, right? Thursday, where usually we get, a roadmap, big announcements. I mean, I think it was 2 years back when we got the whole new energy sort of rollout announced by Mr. Mukesh Ambani. The market's been holding its breath on any potential demerger of any of the businesses, but I don't know if it gets it or not. What would you watch out for? And what's your, expectation of the stock itself? In the last 2-3 days, we've got a lot of target price revisions of northwards of 3,000.
Good morning, Subi. So you're right. It's a big piece in the hall right now. My sense is the AGM is going to, of course, not come with very detailed roadmaps and all, but it's going to give a broad direction and possibly timelines, which is what the market will love on the potential demerger of the retail business. The interesting thing is just see the change that's happened on Jio Financial Services, where 49% foreign ownership has been allowed. So what it does is it opens up another piece where capital raise could happen at the right valuation, right time. So, markets will probably start building that in terms of expectation. My sense is the biggest change, the biggest announcement related to the new energy verticals is going to be key. Because all of us are trying to, we know the quantum, we know the broad contours of how the spend is being done or is being done, but it's the timelines and what is it that, is the commercialization is going to look like. So That, I think, in my view, is going to be a big piece. How much are they going to span in terms of the expansion? When is it going to start? So if that happens, then you have the stock starting to re-rate the earnings from that business at some point in time. On the stock, I think it's definitely undervalued from my perspective. I believe the sum of parts is far bigger, and you would still have a 15-20% upside if you were to look at that. And if the market gains this liquidity-driven momentum, I don't see any reason why Reliance would probably not scale up to these recent highs and probably cross that as well. But you've got to be patient. It doesn't move when you expect it to move. It moves along with the market. It makes the market move along with itself. So you'll have to wait, but I definitely feel there's headroom out there.
Prakash, morning. You know, some of the earlier sort of multi-bagger sectors, you take PSUs, for example, right? I think zero returns since mid-June. You look at defense as a sector, I mean, if they were an index, I think you'd be down from mid-June. Are there, I mean, what do you make of this entire space and any opportunities here? Or you think it's just sort of too overdone still, even with the slight sideways or even pullbacks, especially in defense?
Good morning, Prashant. No, you're right. I mean, the erosion in, it's not like, a drastic change yet, but I think it's a soft bleed that's happening in the case of defense PSUs. While there is enough news flow to bolster, the expectation in terms of earnings, all of these are way ahead in terms of anticipation. I mean, the results of whatever new order flow that you're seeing, new capabilities and JVs and all of this is all beyond 27. 26, 27, 27, 28 is ballpark where, things change. So what happens is this period from now till then is as I said last time, is going to make them very vulnerable. Because people might decide, say, hey, if everything's going to happen in 26, 27, why am I buying it right now? I could probably look at it 6 months later. And because there's profit for most people who've entered at decent levels, you will see some sort of profit taking, while new buyers might not want to be so enthusiastic in terms of time. So that's where, the PE multiples are contracting. And that's good for the market because all the exuberance that you had will probably soften without creating some sort of a liquidity overhang from these stocks. So I would believe there's still some time for people to re-enter. The only PSU back that I find extremely promising, and I mentioned this about a week back when we were discussing, is the oil marketing companies. I mean, you very clearly have an IOC at 2.5 lakh crores, 40,000 crores profit available at 6 point whatever odd P, and there's still much more to go. So I think you would rather be in a space which is still government-led, still driven by expansion, but you're not paying top dollar for the valuations.
Okay, all right. Prakash, Vivek, my colleague, was just talking about some large trades that took place on Friday. And one notable name is Tata Tech. I recall when it listed, the stock went hammer and tongs, it went through the roof. And from there, it didn't do anything. We had a large trade that took place at around 1,020 rupees on Friday. And from there, the stock showed some traction. Now, this technical overhang is out of the way. The business has plenty of promise. What's your view on the stock?
Interesting stock that you pick, Nigel. Of course, there's a lot of, whisper on the street in terms of who the buyers are. We know the sellers, but in terms of, majorly the buyers. So if, Alpha TC is selling out, people probably can also interpret that as a negative. But my sense is, the market in its wisdom gave it the right price, wherever it went to 1,200 odd, I don't remember, and came back to this 1,000 levels. Now the stock probably has to perform and start delivering. And the commentary that they have, the tie-ups that they made, the contract with the BMW, there's much more in the offering. Their CEO came and explained quite a few things that are in the pipeline. So my sense, it's a great company, great business that's being, just being shaped to kind of, scale up in terms of a global footprint. But the valuations are not expensive at all, though they might seem more so from what we've seen in other smaller tech companies. This could also start doing well. It'll be lumpy. The news flow will drive the stock to be very lumpy. From 1,100, from 1,000 odd, you'll probably see it go to 1,250 and then rest there for some time. Very similar to Tata Communications, the way it went from 500 to 3 years back to wherever it is today. So I think that's the piece, but definitely it's very interesting. I would believe it's a great buy. And I've been speaking about this on the technology side as well as a pick. But you'll have to be patient. There's no fireworks in the making as of now, at least.
No fireworks. Speaking of fireworks, Prakash, Trent is finally making its way to the Nifty, and what a journey, what a story, right? I was just looking at a longer-term chart. The stock used to be just about 1,500 odd, and that was a level. Yeah, 1,500 was a level not too long ago, July of 2023, and then everything's changed since then, right? So what's your sense? The question is, typically when stocks finally enter the Nifty is when the juice is over in the trade. What's your view on this?
So, just a sec, yeah, sorry. So, first and foremost, as a matter of disclosure, I will not be able to give you any very clear this thing on the stock view because of the position that I have. But I can only tell you one thing, that this is a space that has seen disruption and still has room to see disruption. The only thing is that, it's very difficult to find larger players. I mean, this name has gone all the way to become so big that it's reserved a seat for itself in the Nifty. But there are smaller names that will start, re-engineering themselves, given the changes that are, very clearly on the anvil on the e-commerce policy, the way the consumer behavior is changing. So I would believe you will see more disruption happen here. On this, of course, this is an event that a lot of people were anticipating and waiting for. So I would love to, wait to see the reaction of the market and once that event is done. So, that's all I can say right now. But yes, it's a great space to fish, even for some smaller names.
Yeah, I'm just correcting the dates. The 22nd of May 2023, so just a little over a year back, the stock was trading at just around 1,500 rupees. And look what happened after that. I mean, just phenomenal stuff on Trent, almost closing in on 7,000 now. Well, Prakash, do stay on. We have more questions for you, but we need to take a quick break. We'll come back on the other side and also, of course, get a technical spin going. Trading calls for the day coming up with Sudarshan Sukhani as well as Srikanth Chauhan in just a bit.
This narrative attributes much of the increase in inflation to an extraordinary collision between overheated and temporarily distorted demand and constrained supply. While researchers differ in their approaches and to some extent in their conclusions, a consensus seems to be emerging, which I see as attributing most of the rise in inflation to this collision. All told, the healing from pandemic distortions, our efforts to moderate aggregate demand, and the anchoring of expectations have worked together to put inflation on what increasingly appears to be a sustainable path to our 2% objective. Disinflation while preserving labor market strength is only possible with anchored inflation expectations, which reflect the public's confidence that the central bank will bring about 2% inflation over time.
Almost 20,000 crores of block deals done, and it looks like it's only the promoters and the private equity which are laughing their way to the bank. Look at today's 4 large block deals itself. The largest was Ambuja Cement. The parent Adani promoters sold nearly 3% equity, and they've raised close to 4,250 crores. Tata Technologies was another large block, 2.5% equity got changed hands in a deal worth 1,000 crores. Nykaa saw a large block in the morning trade of 1.4% equity, and the entities raised close to 800 crores. And GMR Airport saw a large block of 1 crore shares, and they raised close to 500 crores. So this was today's large block. But look at even yesterday, there were some large block deals. The biggest of them was Kalyan Jewelers. The Warburg Pincus, the private equity has completely cleaned out. They sold 6.5% in a block deal, and they've raised close to 3,500 crores. The other large block was PNB Housing.
Welcome back. Well, Prakash Diwan is still with us. Prakash, I wanted to ask you about Ambuja Cements. How do you read that development? Part of the street was a little skeptical that the promoter converts shares at 419 and then offloads some share at around 425 rupees. And all of this in a matter of around 8 to 9 months. But the other part says that we want large cap names. So that's why we view this positively, because it's deleveraging the parent, similar to what we saw in Vedanta. Your view on Ambuja Cements?
Extremely positive. What has led to this situation where the promoters could encash is the change they brought about in a sleepy company, starting to work on the internals, especially logistics. There's so much of cost saving that is already visible within its metrics. And this will continue, Nigel. It's you understand the business. When you don't, and in this entire period, you've not actually had very great pricing pass-ons, right? I mean, you still have an opportunity when prices reset themselves post the monsoon season, that things will look up for most large players, especially the ones who have footprints in demanding geography. So I think it's a very wise thing. The business doesn't alter just by this minor dilution by the promoters, and they need, as you rightly said, not just to deleverage. It could kind of give them opportunities to acquire some other businesses as well, and for that the balance sheet also starts kind of getting in a position to have more money coming in for strategic buyouts. So there's lots that's kind of in the pipeline, I'm sure, and this is just a precursor. I'm quite positive on the underlying business. Forget all the all the headwinds that you have ahead of us in terms of mergers and all. But I think the sheer size and scale of business that they are managing, they're the only ones who will compete with Ultratech, right? I mean, and there's somebody who's at least there to kind of capture markets that Ultratech is not expanding into. So in that way, both of them will grow together, but will grow at a very decent rate.
Prakash, throwing some more index changes at you. This time the FTSE review. Now, a lot of additions to the all-world list. Let's put up the list that I was alluding to earlier as well. Bank of Maharashtra, Bharat Dynamics, Central Bank of India. There's also Cochin Shipyard, by the way. Remember all the volatility on the shipbuilders last week. So Cochin makes it to one of the FTSE indices. There's Escorts, Kubota, GE, T&D, Hitachi, and many others. We'll just put up the list. Yeah, there we go. The list is there. The 13 stocks getting added to the all-world index, and some 40 plus getting added to the all-cap index. This is the all-world list. Any thoughts on any of these names? I mean, a lot of this buzz was already in the market, but in case, I mean, there might be some residual interesting action on fundamentals and anything that you might have looked at from the list.
Absolutely. So I wouldn't really be able to comment on how the market reacts to these changes from a flow perspective. But fundamentally, if you look at one name that's so interesting, and that's Escorts Kubota, why it becomes so important for an Escorts to be part of this list? It's as simple. When ETF money, FI money comes into India, which has just started doing that, you will have, the Japanese parent, the co-parenting or whatever, one of the parents is Japanese. Escorts is in the space which a lot of FIs like. It has scale, and it hasn't done as well as, let's say, M&M on certain counts. So I would believe that's the name that will probably benefit, maybe not immediately, as I said, but on a fundamental basis, as change happens, sales pick up, margins improve, new launches happen. So that's a name that could be interesting. Some of them I really don't understand. Bank of Maharashtra, for instance, how will things alter? But the FTSE index is followed by a lot of European FIs, and for them, this could make the grade. So I would only look at one of those names. As I said, Escorts is probably the only one that stands out.
All right. Prakash, stay with us. We're going to come back to you with more as we sort of go along. But let's get into some technical sort of ideas as well. Shrikant Chauhan of Kotak Securities is with us to run us through what he's making of things. Shrikant, good morning. Good to have you here. Prashant this side. Your thoughts, Shrikant? The setup looks positive. Slowly and steadily, the Nifty has been inching up. Not sort of short bursts of 200-point rallies, but 30, 40 points every day, which is good. What's the sense? New highs?
Good morning, Prashant. Good morning, everyone. I think the way the market is consolidating and it is crossing all its important levels, and even if we go through with option statistics, then there also we are seeing good amount of shift from lower levels to, let's say, higher levels. So from 24,400, now the supports have shifted to 24,600, where the market is having support of 20-day simple moving average. But while looking at the setup, I think, yes, we are going to cross the level of 25,050, 25,100, which was the highest level for the market. But for the time being, I am of the view that it is going to be gradual. The reason is because all these heavyweight stocks, especially from the banks, they are not performing, or maybe the momentum is not there. So unless and until we are not seeing any specific momentum from HDFC Bank or State Bank, I think we are going to see gradual upward activity in the market. So the strategy should be to look for adding position if there is any correction during the day. But in case if we see the market is opening somewhere close to 25,000, then based on option statistics, we need to be a little bit careful in terms of adding long position. So there we should look for taking some profit. But broadly, I am of the view that market is going to cross this level, 25,100. And eventually, I think in next maybe few weeks, we are going to see the levels of 25,500.
Okay, Shrikant, we'll take a quick break here. Stay with us. I want to come back to you for more in terms of specific stock ideas that you have. We also will have the pre-open session in about 7 minutes. Jay Kale is also going to be with us of Elara Securities in a little bit from now. So stay tuned.
Sold by the private equity, and they've raised close to 1,032 crores. There were other small block deals as well. Some like Eris Life saw a large block of 7.5%, deal worth close to 1,200 crores. And even Alchem Lab saw a deal where the promoter sold and raised close to 500 crore rupees. As I said, PNB Housing saw another large block deal today, 5% sold by another private equity investor, General Atlantic, and they raised close to 1,200 crores. And even there was a big deal from Zomato beginning of the week where Ant Investments sold and raised close to 5,400 crores. So big week in terms of block deals, 20,000 crores. But my sense is this momentum is only likely to continue, and you may see much more larger deals in the days to come.
The jewelry sector in India, of course, is comprising of a lot of the others and the leader itself. The leader is Titan. We are talking about that, and we're talking about how the others have panned. So if you look at Titan's stock price move over the last 6 months, it's actually negative versus Kalyan Jewellers at 57%, Senco at 36% as well. Last 1 year, Titan's up 17%, Kalyan Jewellers up along with Senco up nearly 160 to 170% as well. And you expand the time horizon. 2 years, Titan's up 48%, Kalyan Jewellers is up 650%, and from its issue price, Senco Gold is up 250%. So it's over 2 years of underperformance from the leader. What exactly is happening? Well, if you look at the thesis of the industry, not much has changed because the organized sector is still growing at 2 to 2.5 times industry, but it's the disruptors, the newer players who are growing faster due to one, lower base and getting access to a lot more capital by listing or raising funds.
Welcome back. Well, let's continue looking at some trading strategies for the day. We have Shrikant Chauhan with us. Shrikant, good morning. So let's come to individual stocks. What do you have your eye on today?
Yeah, I think today we need to focus on few auto companies because most of these companies managed to reverse from their important levels, or few of them are crossing their important resistance levels. In that, we like Tata Motors, which is currently around some 1,080-85. And the formation is indicating us that it is heading for the levels of at least 1150, 1170 sort of levels. Even if you go through with Tata Motors DVR, then there also we are seeing good amount of volume accumulation. So I'm of the view that it's a buy at current levels with a stop loss close to 1,060. We can keep a target of 1150, 1170. And the other stock which we like is ONGC. Crude also is bounced back from the levels of 75 to almost 80. The overall pattern of ONGC is also indicating us that it is into lifetime breakout. And if we go through with its important levels, then it is very close to its important support levels of 318, 320. So from here, again, the stock can bounce back to the levels of 355 or 360. So ONGC is also a buy at current levels with a stop loss close to 309.
Got that. Shrikant, thank you very much. We'll come back to you for more a little later. The AU bank block deal has been done, is what our colleague Nimesh is saying. And we'll have details up on your flashes in just a bit from now. So Vivek, of course, earlier was highlighting some of these blocks, and the AU one has gotten done. All right. Chandan Thaparia is with us now, derivative and technical analyst at Motilal Oswal Financial Services. Chandan, good morning. Good to have you here. What kind of trades stay long on the indices? And specifically a word on the Nifty Bank as well, which has been the weaker of the two indices. Chandan.
Yeah, good morning, Prashant.
Yeah,
Thanks for having me. Happy Janmashtami. The Nifty has been witnessing sustained buying interest from lower levels. However, the pace of buying has got slow. But we believe that till it holds above 24,650 zone, every small decline could be bought for a lifetime high target to us 25,100 and beyond. So we believe that overall the volatility index is falling down. We have seen the stability in the global market. Base of the index is shifting higher with hold of put call ratio. So till Nifty holds about 24,650, look for the bullish stance, and market is all set for the fresh lifetime high. Now talking about the Bank Nifty index, the Bank Nifty has been holding well above its 50-day exponential moving average from last two trading sessions. However, the momentum is missing. But the good part is the index has negated its lower top, lower bottom on the weekly chart. And recently it completed a bullish pattern similar to double bottom on the daily chart. So a small follow-up is required. If it manages to hold 51,000, then short covering cannot be ruled out ahead of its monthly expiry. And in that scenario, it can head towards 51,500 to 51,750. So immediate support for the Bank Nifty is near 50,500, and a decisive hold above 51,000 could see the spike of 500, 750 points led by short covering. Now talking about the stock specific, positive on the Dixon. We have positive stance in selective IT name, and Dixon is one of the strongest counter. Overall, it has been making higher top, higher bottom, one of the strongest name in IT form. It has seen a fresh consolidation breakout on the daily and the weekly scale with built up of long position. So one can buy with support of 13,000, and the stock has potential to extend the rally towards 13,900 level. Second trading idea, there is buy on Motherson Samvardhan. We have positive on the Nifty Auto and selective auto ancillaries, including Bajaj Auto, Tata Motors, and Motherson Samvardhan looks promising as it has given a breakout from its falling supply trend line on the daily and the weekly chart. We have seen put writing at 190. Coal unwinding started to witness a 200 strike. So because of that, it can head towards the new lifetime high. One can buy with support of 192. And here we have a target towards 207 level. Last trading idea, there is buy on Bharti Airtel. One of the strongest counter. It has given a highest daily close in last 15 days. Sustained put writing with higher delivery volume indicate positive stance could be seen in the counter. One can buy the stock with support of 1475 for target till 1565 on the higher side.
Okay, all right, Chandan. Thanks a lot for joining and giving us your call on the markets. Happy Janmashtami to you, your family, and may Lord Krishna, bless all of us and our families as well. Thanks a lot for joining in, Chandan. Well, let's get in Sudarshan Sukhani then into this conversation. Hi, Sudarshan. Good morning. Help us out with your call on the Nifty, and then you could fill us in with your stock calls.
Yeah, good morning. And Nigel, it's so easy. The market is going up consistently. There is only one trade in the Nifty, and even now in the Bank Nifty, that is to look for intraday dips and go long in that position. You want to carry your position, that's good enough. If you don't want to, you'll get something out of the trade anyway. Again, I'm saying that the chances are that we are now looking towards 25,000, hopefully before the next settlement this Thursday. Stay long in the Nifty, add to your long positions, initiate long positions. That's the simple trade. Now, individual stocks are following the index. We have a lot of opportunities in mid-cap stocks, large-cap stocks. Coal India is by first buy, stop under 528. Divi's Lab, the pharma sector itself is doing very well. Divi's Lab is a buy with a stop under 4828. Hero MotoCorp is a buy with a stop under 5315. And finally, SBI Life is a buy, and this sector had a decent run last week with a stop under 1782.
Okay. So Darshan, got it. Thank you very much. We'll come back to you in just a bit. By the way, the pre-open rates have kicked in, and it's about a 120-point bump up on the Nifty that we're getting. One of the interesting movers is the entire IT space. So Tech Mahindra, Wipro, Infosys, early moves, TCS, all these stocks are excited on hopes of perhaps more rate cuts coming through in the US. And we saw that play out on the NASDAQ as well. So some of that rub-off is evident. And the other is Reliance, as Prashant highlighted, and that's the event of the week in some sense with the AGM coming up. So Reliance also looking like it wants to start on the optimistic side with a gain of over 1%. Okay, let's put the spotlight now on the auto space. The stocks were really revved up on Friday towards the end. There was a rally across the board, including four-wheelers and two-wheelers. So what is the expectation going forward, and what are the fundamentals looking like? We have Jay Kale, Executive Vice President at Elara, joining in. Jay, thanks for being with us. So it's interesting, you know, the trends, the way they are playing out. It seems that there's so much buzz in two-wheelers. The numbers have been good. There's so many new launches happening. There's talk about a rural pickup as well. But four-wheeler volumes, the big question there is that whether, you know, volumes have hit a bit of a plateau. What's your sense?
Yeah, hi, good morning. So definitely two-wheelers has held up quite well. We've seen the entire FY24 and even coming into a YTD FY25. The two-wheeler retail volumes, if I have to look at, are in double digits and are higher, tracking still higher than our full-year growth estimate. Of course, there is this hope of rural recovery also coming back. Festive is something that we need to keenly watch because that's a very heavy weightage in terms of two-wheeler volumes. So we are expecting close to a double-digit two-wheeler growth in FY25, which will be led by rural coming back while urban continues to do relatively better. That has not been the case specifically for passenger vehicles, like you rightly mentioned. Of course, passenger vehicles volumes have been struggling. There has been rising inventory levels at dealers, and but you also have to understand that July, August is relatively a weaker seasonal month for passenger vehicle industry volumes also. So it's not all lost for the fiscal. We still have hopes from the festive season volumes jumping back. It will be led by companies who have good model launches and refreshes in their pipeline. But definitely, two-wheelers are expected to outperform passenger vehicles from a growth perspective going forward.
All right, Jay, good morning and good to see you when you're sounding quite bullish on the two-wheelers. Let's get a little bit into some more detail out there. First, I wanted your view on Ola Electric. What have you made of this listing? Out of nowhere, the stock has moved up. So your view on that one. And since you're bullish on two-wheelers, your top pick from there.
Yeah, I think, Ola Electric, it's still in early days, both of listing as well as their operations, but definitely a very good listing debut that it has. One needs to see how, when liquidity eases, where the stock settles to. One also has to see the market share where it settles to, because, you will be having incumbents also ramping up their capacities. The start has been pretty good for Ola Electric in terms of market share as well. But one needs to see how that pans out in a medium to long-term perspective. And of course, their venture into the cells, how that stabilizes. I've mentioned that earlier as well, that it's not easy to stabilize cells. We've seen that globally, especially with prices coming down. So what kind of cost advantage that actually gives to the OEM, which, Ola has been speaking about, also needs to be closely watched. We currently don't have it under coverage, so can't give my official view. But in the two-wheeler space, our top picks remain Bajaj and TVS Motors.
Ola, Jay, hi, morning. Ola has a market cap of about 55,000 crores. Many are on the street are a little surprised with the rally. But have you heard queries on what this valuation could mean for Hero and its 35% share in Eicher, and how that should be valued? Any thoughts at all? I mean, have you thought about this?
Yeah, absolutely. It's a natural rub-off effect on the SOTP valuation that we give for Eicher within the Hero. Of course, it has 43% stake in Eicher. Now that obviously increases. Of course, with stock price of Ola almost doubling, the valuation that we were giving inherently into Eicher, that at least for the moment increases substantially. But really, like I mentioned earlier, one needs to see where this valuation settles for Ola, and in that context, what Eicher comes out in terms of actual valuation on the listing side. So it will be a little bit of volatility going forward, but definitely, from a SOTP perspective, it rubs off well on Hero for the short term.
Okay, that's on the two-wheeler space. Jay, before we wind up, on PVs, if someone wants to be a contrarian and wants to, be looking at the longer-term picture or the medium-term picture, then any specific stock that you will go with, I mean, should one stay with M&M given, the strengths that they have in terms of market share? And also throw in a word on Tata Motors because there's so much going on. I think over the last couple of days, they also released this new tax calculator because they'll be cancelling the ordinary shares and there's a restructuring, there's an eventual demerger. So just a word of advice there as well.
Yeah, I mean, I think M&M has been has had a stellar run despite the weak industry volumes. Their volume growth has been in double digits and market share increase we've seen. So that should be, till this volume growth and market share continues, I think that M&M should remain in good stead. And Tata Motors specifically, our view, on the India PV and India CV business, of course, it's largely stable. India CV, we don't have a particularly very favorable view on the CV cycle. But I think Tata Motors more so, our view is positive, mainly led by JLR. Over there, we see that the margins as well as profitability and the mix impact that JLR has seen is giving them healthy return ratios of 20% plus. And we see no reason why that should not lead to a re-rating within the JLR portfolio versus its peers like Porsche. So we see some bit of valuation re-rating upside potential for JLR given its mix and margin profile moving up as well as ROCs moving 20% plus. And that's why we would be bullish on Tata Motors.
All right, Jay, I appreciate you joining in. Thanks a lot for giving us your comments. Wishing you a good Monday ahead, and we look forward to hearing from you in the time to come. Well, it's 9:10, so let's get that call coming in. Sudarshan's back with us. Sudarshan, go ahead.
Well, Hero MotoCorp can be considered for buying with a stop under 5315.
Okay, got it, Sudarshan. Let's go across to Vamakshi now and recap some of the important stories and stocks to track. One of those stories is the anti-dumping duty that has come in on CPVC. Vamakshi, tell us the likely or potential impact on the stocks to watch.
Well, absolutely. The government has imposed a definitive anti-dumping duty on CPVC imports from China as well as South Korea. Now, keep in mind that the earlier anti-dumping duty was imposed back in March 2020 and was set to expire on 25th of August 2024. So, essentially, this is an extension of the anti-dumping duty that was imposed earlier, and this duty will now be valid for another 5 years. It bodes well for DCW as well as Epigral because it protects the businesses from cheap imports from these two countries. DCW derives nearly 17% of its revenue from CPVC, and in fact it had planned to double its capacity in this particular segment. Apart from that, Epigral has also very recently in the first quarter itself commissioned the CPVC resin as well as the compound facility, and they were expecting demand to grow at a CAGR of almost 13% in both the resin as well as the compound segment. So overall, given that this anti-dumping duty has now been extended, it bodes well for Epigral as well as DCW.
Okay, all right. Thanks a lot for that, Vamakshi. So good news for those companies. The input costs go up for some of them as well. But Vivek joins us to tell us about CESC. The entire group was buzzing in Friday's trading session. Vivek, tell us more.
Well, that's right. So the entire Sanjeev Goenka group actually held analyst days for various companies. The one that we are focusing on currently is CSC. In the investor day, largely the company actually focused on reiterating what is it their targets. We'll highlight the top targets that the company has set and what is it that they've guided the street to. First, the company said that they plan to increase ROE by 3% from 12% currently to 15% in the near future. Along with that, the company wants to go ahead and pivot from the regulatory government operated business model to a more self-control model. Along with that, the company said the demand as well as the the Noida as well as the Kolkata discoms remains very robust. They expect cash flow across all of the discoms to go ahead and improve quite significantly. Along with that, like we had highlighted earlier, the company said that they have now started going ahead and doing a recovery as far as fuel and power purchase adjustment surcharges are concerned. The company is still awaiting for any price hikes. Along with that, very strong commentary coming in terms of renewable energy capacity addition. The company, will be developing a 3.2 gigawatt solar wind hybrid renewable project in the next 3 years. Plan to go ahead and commission 1 gigawatt of renewable energy this year and 1 gigawatt every year thereafter. Lastly, the company said that they foresee close to 10 gigawatt of capacity to be added in the next 6 years. Also have plans of 10,500 million metric tons per annum of green hydrogen capacity addition. Overall, positive takeaways as far as CESC's investor day meet was concerned.
Right. No, absolutely. Vivek, on Philips Carbon, right? Did he kind of sort of double down on what he told us earlier? Did that come up? Oh, okay. I think that was just okay. All right. We'll get on it a little later, but that's essentially CSE largely in focus. Largely CSE in focus. 80 points higher on the pre-open on the Nifty is what you have. About 300 points on the Sensex what you have. So what 81,388 and 24,906. 25,078 is the earlier all-time high on the Nifty, which is not very far away. I mean, it's essentially another 1% or so, and you're there in terms of the earlier high. For the Nifty Bank, it's a little bit more work for the index to get there eventually.
Prashant, talking about the Sanjeev Goenka Group, the RPSG Ventures, that's the holding company that they have that holds more than 50% stake in FirstSource. It also has stake in the IPL franchise, 50% or thereabouts, and also Mohan Bagan, besides an FMCG business. That one, the volumes are very low today, but in the last 1 month or so, since Shireen's interview, since Mr. Goenka spoke to Shireen, this one actually has been the biggest outperformer. It's up more than 30%. So that holding company, they expect maybe some kind of value unlocking to come about or the likes. And FirstSource has done well as well. So, if you just pull up a 1-month chart, it'll get a perfect picture out there, up close to 30%. We had spoken about it on ERT as well, Editors Roundtable. So I think in a short while from now, we'll get the RPSG Ventures 1-month chart, which will give you a fair idea about why we're addressing this. The volumes are relatively lower. This holding company actually has done very well.
You could buy individual businesses or you could buy this one. And I think many have chosen to sort of look at and buy this one, which gives you essentially a piece in many of the businesses because the group, of course, is sounding aggressive on many fronts now, not just the base large power business, which is CSE. Some of the allied businesses also coming into sharp focus. I think we've got about a minute to go for the pre-open session. And we'll have for the market opening, and then we'll have rates coming up for you. And let's just sort of wait for those to come up on your screens. There is, a fair bit to tackle. The big story globally, of course, is the complete collapse in the dollar index. And that typically sort of sends a flood of money to emerging markets. It's not happened so far. But you want a lower dollar, not higher dollar. And dollar is now threatening to come down into 2 digits. 100, 100.5, 100.6 around is where the US dollar index is trading at. Of course, that also meant higher yen and euro, etc. But the dollar basket is lower. What do you have? 24,900 on the Nifty, so it's slightly higher, 70 points. That's about 0.25%. We've got the Bank Nifty, which is on your screen, about 180 points. 51,100 on the Nifty Bank. And you've got the IT index, which is starting about 0.8% in the green. So IT services, typically, the rub-off in terms of lower interest rates starts to come through. And the other one, of course, has been metals, which should also benefit. The commodity prices go higher, base metal prices go higher as the dollar goes lower. So the metal index is up about 0.6% or so. The heat map is up on your screen. You've got about 5 stocks basically lower. It's a sea of green. It's about 0.25% on the Nifty so far. Surabhi.
And inching closer and closer, right? Now we're less than 1% away from that all-time high. So let's see. So it's an early start into the day. We'll see how this builds. In terms of individual stock actions, ONGC is up and about. IT, as Prashant mentioned, is off to the races. Tech Mahindra, Wipro, TCS, all these names up and about. The banks are keeping the IT stocks good company, which is good news for the Nifty usually. So something like an Axis Bank, early up, HDFC Bank gains between 0.5% to about 1%. State Bank of India is up about 0.25%. So interesting moves coming in over here. Bajaj Finance and Finserv, 2 of the non-bank financials on the Nifty, are also doing well today. So that's bringing up the positive side. On the downside, there is a bit of a cool-off in Apollo Hospitals, down about 2%. Dr. Reddy's is starting off slightly weak, 0.5% lower. And then you have some of the life insurers, which had a very good week last time around. And now there's some profit taking on an SBI Life and HDFC Life. So that's the early start. But of course, lots of action in the mid caps. There's KC International, new orders, and then of course stocks like DCW, Epigral, Astral. A lot of these reactions to the CPVC anti-dumping duty that are playing out on the screen as well.
Well, that's right, Surabhi. KEC, they are backed in order worth around 1,070 9 crore rupees in the T&D and cables business, so that's flying away. Ashoka Buildcon, they have emerged as the lowest bidder for a project worth around 478 crores from MMRDA, so Ashoka Buildcon as well up and about. The other one that's moving around this morning is Jacob. They've informed exchanges that they will be having a board meeting on 29th of August to consider a buyback of shares. So that's another big mover from the broader markets. NIIT Limited, the big bull, Mr. Damani, has bought close to 8 lakh shares at the price of around 127 rupees odd. So that was the big mover actually in Friday's trading session. It's putting on another 10%. Put the two sessions together, the stock is up more than 25%. From the pharma names, Olympic Pharma, they've got the US FDA approval for betamethasone valerate form. So on the back of that, I think that one is moving in the northward direction. On the flip side, because there's more competition for Zydus for one of their drugs, so that one's one of the top losers out there. So Alembic and Zydus moving in opposite directions. Tata Tech, it had a bump up in Friday's trading session. The block deal out of the way when Alpha TC Holdings sold 2.5% stake. It's seeing some follow through. So in 2 sessions, that stock is up more than 5% or thereabouts. So it's a good start. Some of those metal-related counters are doing well, like Nalco. That one's up and about. You have Hindustan Copper as well that opened up well in the green. And Vedanta as well could do well. Now just keep an eye out on all these stocks because aluminium prices from the recent low, they're just around 45 days or so ago, it's up more than 10% from the recent low. So keep an eye out on a few of these names. And just one more stock that's coming on my radar, GSPL, stock is up 8%. Big move is what we are seeing. But as we pointed out earlier today, tech and metals, they are the sectors that are zooming ahead as we speak.
Well, Nigel, so a few other names, right? NIIT is up. NIIT is the biggest volume-led gainer. NIIT Limited, the education company, 12% higher. It's got huge, man, you don't see volumes like this on NIIT. Actually, the stock hardly figures on the top of the leaderboard, but it is today. And it's on your screen, 4 million shares, by the way. KEC, of course, 5% higher as expected. There is Ashoka, I think, Buildcon, which is up about 3.5%. Craftsman Auto is up 5%, has got decent sized volumes for this point in the day. That's a large one. GMR is up about 5%. GMR Power, that is, so 128 on the other one is up 128. Yeah, there you go. 3 million shares, a large one. And Nigel mentioned GSPL, yeah, 7% gains now there. Tanla is up about 3.5%. It's got decent sized volumes. Polymed is up about 6% or so. Honasa has been moving up 6.5% this morning and has got decent volumes as well. And we were talking about RPSG Ventures, right? So another 4.5% this morning. Stocks at about 1,080 right now. So that is the Sanjeev Goenka Group holding company, which is popping up. MedPlus is the largest. I think there's been a block in MedPlus because volumes are humongous. 2.5 lower, 618, 690. Look at that, 17 million shares on MedPlus coming through. And of course, Ola Electric is down another 4%. It's come off to about 120-ish kind of levels. We mentioned Zydus Life, which is down 4.5%. Zydus Life has also got very large volumes. Nykaa perked up earlier. Nykaa is down about 3%. Varun Beverages is down a little bit. Look at Reliance Power. I mean, there's been this sort of, that power project which supplies power to Bangladesh, overdues, and there was some news flow around that over the weekend as well. That is Reliance Power. But of course, I mean, there was the other issue as well with regards to Anil Ambani. So maybe that is kind of weighing. Raymond is down about 2% as well, but the stock had a sharp run-up. A subsidiary listing in the next couple of weeks is due. Stocks about 2.5% lower. Gautam Trivedi is with us. He's our market master of the day, co-founder and managing partner at Nepean Capital. Nepean Capital. Gautam, good morning. Great to have you with us here. Thank you very much for your time. Appreciate it. You're coming back after a while, and a lot has changed with regards to expectations out there. Markets, of course, have clawed back almost back to all-time highs. I remember, correct me if I'm wrong, you were a little cautious last time we spoke, Gautam. What's the view now? Globally now, in very sort of high expectations that rate cuts are imminent and that perhaps will spark a rate cut cycle across the globe as well. Your thoughts, Gautam? Gautam, can you hear me?
Hi, can you hear me?
I don't think... Yeah, I can hear you, but can you hear me, Gautam? I don't think Gautam can hear me. But okay, so you can hear me?
Now I can hear you, yes.
Okay, all right. No, I was just asking. So, you welcome to the program, Gautam. We could see you, but we can't hear you. Rather, you could not hear us. Right. Where are we at? It's in terms of the cycle now, Gautam? You were a bit cautious, if I remember correctly, last time. Markets have sort of clawed their way back almost to all-time highs. Rate cut expectations are quite high, not just here but globally. So, where does that leave markets at?
I think, the extent and the speed at which the money that's been coming in from domestic retail investors, I think has been unprecedented. For people like myself and a whole bunch of my peers who've been in this market for the last 25 to 30 years, haven't seen anything like it. And even at this point, when I meet people socially, they ask me, when will this stop, the absolute amount of money coming into the market? And I don't really have an answer. I think if you look at the absolute numbers that are coming through, we're looking at $38.7 billion of net year-to-date, calendar year-to-date, of domestic money coming into mutual funds. That's about net $5 billion a month. So that is obviously a staggering number. We've never seen this before. It's 41 consecutive months of net inflows coming into the market. If you look at the additions, last month alone, we added 2.3 million new registered investors. And that takes the absolute number to beyond 100 million. So I think the financialization of the Indian equity markets is growing at a pace that none of us have seen before. And frankly, I don't think any of us are educated enough now to comment on when this is going to slow down.
Gautam, hi. Good to have you on the show. So, yeah, the inflows are extremely strong, domestic inflows, even if FIIs continue to be, fence-sitters. The question really is now, I think, is, what to buy? Where should you be deploying additional money, right? Because the best things are definitely not coming cheap in this market. So how are you navigating this for all the additional money that you're getting?
Yeah, that's a fair question. And that's, a question we ask ourselves literally every day. So here's my answer to that, Surabhi. The fact is, if you look at the top 1,200 stocks, and we run these screens every so often, 400 stocks, believe it or not, and this is as of Friday's close, 400 of the 1,200 stocks of the top 1,200 stocks of India, 400 have fallen 20% or more from their respective 52-week highs. I.e., there is opportunity, out there. Doesn't mean they're all necessarily buys, but the fact is, if you dig hard enough, you'll find stocks to buy. But the reality is, if I were to generalize, the market is invariably still very expensive. And, whether you look at cement, whether you look at auto, whether you look at the metal space, everything's expensive. So it's very hard to actually generalize with respect to sectors. But if you dig deeper and find individual stocks that have been beaten up, now they could be beaten up for a variety of reasons. But like I said, if there's a turnaround happening in a specific sector or a stock, I think that's the time to focus on. The second thing I would focus on will be newer sectors. And again, very few ways to play them. For example, solar, data centers becoming a gigantic business in this country. We're currently just sub 1 gigawatt of data center capacity. It's going up to 4 gigawatts in the next 3 years. So a lot of opportunity there, not just for the data center companies, but companies and vendors that supply into the data center space. Again, very few listed ways to play it, but I think you will see more companies emerging, IPOing, and I would say save your money for opportunities like that.
Hi, Gautam. Good morning. Good to see you, Ben. We have discussed about the EV plays in the past, and you're quite excited about that theme. What do you make of the new listing? Did you all participate, Ola Electric?
No, we didn't. We kind of missed that, and obviously post-market move of the stock was remarkable. So we kind of missed that. But the fact is, again, that may be the only pure play at this point of time. And that's probably one of the reasons the market's giving it this valuation. So I think as more companies get listed, you will see, hopefully, some of that valuation cooling off.
Okay, all right. The other theme that you liked is, so what are the other alternate plays then to the EV space, if you have any names? And the other theme that you all have latched on to was, I think, EMS. Sigma, right. Something that you all had. Do you think things have ran a little ahead of themselves at current reckoning? I think you all were in early. So would you add at these levels or would you avoid it?
You've raised a fair point on the EMS space. You've seen one segment of the EMS space, which is Dixon, Amber, and Pijo Electroplast that done phenomenally well. They're trading at, well, Dixon's at about 80 times FY26 PE. The other two are about 45 to 50 times. But if you look at if you look at the other companies which are not in the more assembly line, but more in the value-added products, the only one that's really done well in terms of first quarter earnings has been Keynes. The others haven't done as well in terms of earnings growth. So you've seen a better top line growth for a lot of these companies, including Sirma, as you mentioned, but hasn't flown through as yet in the profits. So I think there could be opportunities there if you have a longer term view.
NIIT Limited is up 20% now. That's limit up on very large volumes. I just want to sort of make a quick mention. It's the biggest volume-led gainer right now. So 154 on NIIT Limited at this point in time. So interesting. Angel One is coming up with a 5. It was not there in the mix in the morning when we started. So it's 5% higher. Stocks back at about 2,700. Angel One. So about 380,000 shares on it. Yeah, 300 on the NSE. Kaplan Point is up about 6.5%. These are all sort of newer and newer names. Kaplan Point is up 1859. There was news last week for Kaplan. Markson's Pharma is up about 5% right now. So that's another one. Quick Heal, you may want to look at it. 4% higher, 640 on Quick Heal at this stage. So yeah, I mean there's a lot happening as far as individual names are concerned. Gautam, you want to talk about sort of single stock opportunities if you have any? We've got the broader overall view, but there are always opportunities, right? Anything you want to highlight?
You just brought up Angel One, and given the fact that the stocks had a 31% correction from its 52-week high, that was as of Friday, and now you mentioned the stocks are 4%. So I suspect that there are stocks out there where people are thinking, should I be owning something that's gone up 2x in the last 12 to 18 months? Maybe a book profit there and come into something that's fallen. So I'm sure there are others like me running screens and figuring out stocks which are attractive.
By the way, along with Angel One, even Motilal is having a great morning. For Motilal, the added sort of news flow is that the FTSE index inclusion names this as one of the stocks on their all-world index. So that's Motilal Oswal having a pretty good morning for itself for the time being. Godfrey Phillips is on the move as well, 5% up on Godfrey Phillips. Honasa's gain is now increasing to about 7.5%. So plenty of movers in the market this morning. Honasa sort of brings me to some of the so-called new age companies or platform companies, Gautam. And we've seen what's happened, right? We've seen what happened with Zomato. But the problem is when people start extrapolating the same thesis for every single company and they forget that each company is different. Now, I don't know if that was one of the reasons why Ola also did what it did, though it was a loss-making company. It is a loss-making company as we look at it right now. But in the whole so-called new age basket, what are you convinced on?
We still like Zomato a lot, and I think the fact is Blinkit is starting to outshine the core Zomato food delivery business. So quick commerce has taken off in a major way, and I think with the 45% market share, we're banking on Zomato as a way to play the quick commerce space. So we like that a lot. But I think so we bring up an interesting point because when Zomato or PB Fintech or Paytm, when they first initially listed, even Nykaa for that matter, the stocks had a major correction. I think the feeling at the time was that what's the point of buying a stock that's just about EBITDA positive or will be EBITDA positive at some point in the future when and these are trading at multiples on revenue or not even revenue, sometimes ARR. So the private equity world and the public market world, I think valuation metrics were very different. And that's the reason they had those initial corrections. But interestingly, now the Indian equity markets are being more patient with the new age technology companies, just the way the US markets were patient with companies like Amazon, which for the longest time made losses, but see the wealth creation that's happened. So I think same thing applies to the new age tech companies, and I think they've come a full circle in terms of now being appreciated as companies that will create huge wealth over the next 5 to 10 years.
Well, does it bother you, Gautam? It just got me thinking as I was hearing you, reply. There's been a lot of chatter around government policy with respect to quick commerce, right? I don't know if you caught the minister's comments last week, Mr. Piyush Goyal, and then, there's been this whole e-commerce policy that's been in the cold storage for the longest time. Maybe it sees the light of the day. Could that be any sort of a dampener? And beyond Zomato, what are the other businesses, if not stocks, but the kind of other businesses that you will watch out for since you're positive on the space overall?
No, you're right. The minister did make a comment on quick commerce and the fact that it's potentially going to impact the Kirana stores. But, here's the thing. The model of a quick commerce is twofold. One is you could actually have your own dark stores and a mother warehouse sitting outside the major city and replenishing the dark stores. And that's your delivery model. Or you could actually even do the delivery much the same way as Zomato does food delivery. You could do grocery delivery from the Kirana store, which helps the Kirana store instead. So maybe the total number of dark stores being added at this point of time may slow down, and some of these quick commerce platforms will actually deliver directly from the Kirana store to your home. I suspect that may end up happening if the government takes some actions. Secondly, as I said earlier, I think renewables, data centers, and the two are oddly enough linked, will be businesses of the future. And that's really, I think, where you'll see more listings coming over the next few years.
All right, Gautam, always a pleasure having you on the show. Thanks a lot for joining in, giving us your view. Looking forward to having a chat with you in the time to come. But as you said, there are pockets where you see there is some attractiveness, but otherwise there are other sectors where, in fact, we are seeing some bit of elevated valuations as well. Let's focus on the next company. We have Finolex Industries. That's the one on our radar. In Q1, the company witnessed weak volumes, but the PVC resin witnessed strong revenue growth. Also, the Finance Ministry over the weekend has imposed definitive anti-dumping duty on CPVC imports from China as well as South Korea. What's the outlook from here on? Well, we're joined by Mr. Venkatraman, the MD of Finolex Industries. Hi, Mr. Venkatraman. Good morning, and thanks a lot for joining us here on CNBC TV18. Let's get this recent ADD news first out of the way on CPVC resin. As a percentage of your total mix, how much is CPVC pipes as a percentage? I believe it's low single digits. Could you clarify?
Yeah, it's about 8 to 10%.
8 to 10% of your mix. Now, on this part of your business, the input cost could potentially go up. How do you see this panning out? Will it be totally passed through? Because I don't think you're backward integrated on CPVC, or you could clarify on that front. And will it impact your business?
So most of our CPVC purchases are from India itself, so unlikely to be impacted.
Okay, so no impact on the CPVC part of the business. Got that. Mr. Venkatraman, let's focus on the other part of your business. You have given us a guidance in terms of volumes, I think, of around 12 to 15%. You could clarify on that point, which side is it drifting towards, the higher or the lower end? But that's more or less in line with what the industry is expected to grow. How do you see your market share panning out? Because there are competitors who are guiding for higher numbers. Clarify on the same.
So our guidance still goes from about 10 to 15%. The last quarter or the current quarter, Q2, which is typically on the lukewarm side because of the rains which we have received, but it's expected to pick up in Q3 and Q4.
But what about your market share, sir? If the entire industry is going to grow in this range itself, will you lose some market share?
So it should be a steady market share gain, because we are also having gains in terms of our non-agri segment has been growing quite significantly above the market numbers. So we expect that segment to be growing faster than our agri segment.
You have a rough number about what is your market share currently in the agri and the non-agri space?
It's very difficult to say that, because there is no central agency which collects that information. Therefore, it is very difficult to say quote the market share numbers at the moment.
But you have a rough number, sir?
No, it's difficult to say. As I mentioned, it's difficult to say because there's nobody collecting the information centrally.
Okay. Mr. Venkatraman, I just want to go back to the differential between CPVC and PVC, because One of the notes that we were going through, analyst notes, points out that now because of this anti-dumping duty, perhaps the input for the raw material CPVC, the minor increase in maybe pricing. But on the other hand, PVC prices have been coming down apparently. So perhaps there's going to be a larger differential between PVC pipes and CPVC pipes. Now that's an analyst theory. Tell us if that's what you're seeing on ground. And just give us the mix for you and the pipes business. How much is still PVC? How much is CPVC? And what are the different trends? Just tell us the volume expectation and what the mix is going to be between these two segments.
So CPVC pipes are essentially used for hot and cold water. And SPVC pipes have got a much wider application. And therefore, in our product mix, as I mentioned, CPVC is about 8 to 10%. And yes, people importing from China and Korea are likely to see an increase in price. We procure most of our CPVC locally, and therefore will not be much impacted by this ADD which has come in. In terms of growth, both segments, CPVC is mainly falls under the non-agri segment, and CPVC segment typically grows at the plumbing and sanitation, the rate at which the plumbing and sanitation segments grow. And overall, if you see, agri typically grows anywhere between 5 and 9%, and the non-agri segment has been growing about 15% in line with the building and construction segment.
But sir, what about the pricing on the PVC side? Is it true that pricing there has been coming down substantially? And therefore, what's the projection on that part of the business?
So we have seen volatility in the PVC pricing. The prices did go up all the way up to $900, $920 per metric ton. It has come down to about $820 per metric ton. If you look at the overall last 10-year average, the pricing is anywhere between $750 and $800 per metric ton. So it is inching more closer to the steady state in the last 10 years. And this is something which, as an industry, everybody likes a more stable price so that it is not, the overall demand is not hampered by the price movement.
And is the fall in pricing for PVC, is that a pass-through? Or do you retain any amount of benefit?
So
in terms of margin
in this market, piping and plumbing and sanitation segment, or in the pipes and fitting segment, is fairly efficient. The moment the price increases or price decreases, it is passed on to the market within a couple of days.
Okay, all right. Mr. Venkatraman, let's focus a little bit on business in both your two segments, that's in pipes as well as in resins. What is the EBIT per kg and how do you see in both these two segments it panning out?
So if you look at Q1, our price per EBIT per kg was approximately 14.85 rupees per kg. This has seen an upward movement for us, especially due to the product mix change. We have been focusing much more on the plumbing and sanitation segment, which has got higher margin. When you look at the resin segment, if you look at the last 10-year average, it is approximately about 13 to 15 rupees per kg. And that is something which is a steady state, but it does see a lot of volatility based on the PVC prices.
And you said the EBIT per kg in the pipes business was 14.8, but that has moved up. Moved up to how much, and where do you see this?
If you look at it, say about 5 years back, it was in the 7 to 8 rupees per kg. And right now it has moved all the way up to about 14 to 15 rupees per kg.
And as the mix changes, do you think it can further move up from here?
No, it is about 15 to 16 is what we expect. And that is the range we are looking at in the next 1 to 2 years.
All right, you've given us a fair idea about the operational performance, but before, should we ask you some more questions on that front? I wanted to ask you about this buzz in the market. You would be speaking to the promoter entity quite a few times, and I think you know what I'm going to ask you. Is there any kind of resolution at the promoter level with Finolex Industries, Finolex Cables, some resolution on the cross-holding, something that the street should expect?
See, the management team is fairly insulated from what is going on with the family, and therefore it doesn't have any impact on the day-to-day operations, and we don't get involved in the family matters.
That's right. It doesn't have any impact on the operation, sir, but some kind of resolution will be something that will be music to the ears of your investors. So they would like to know if it's heading in that direction. A resolution at the promoter level will be good news. Even sorting out this cross-holding will be very, very good news.
So as I mentioned, as management team, we don't get involved with the family business.
All right. Mr. Venkatraman, just one last question. What is capacity utilization at? Is it still around in the 60 zone, or has it moved up?
60 is in the 60 to 70%, depending upon the time of the year.
Okay.
Yeah.
All right.
Okay, so finally, as we wind up the conversation, now I'm talking about the big numbers at the blended full year company level. Can you give us a sense of the top line growth that you see ahead for FY25 and this stupendous margin expansion that we saw in the first quarter, whether that's sustainable, and what are you targeting in terms of full year margins?
See, in terms of top line, it is going to be very difficult to predict. It is completely going to be dependent upon about the PVC prices, and therefore it will be a difficult one to predict. In terms of margins, we expect anywhere between 12 and 15, which is we had a good first quarter. Second quarter has been lukewarm, and we expect that the third and fourth quarter it should be picking up. And at this point of time, we are looking at a volume growth of approximately 10% to 15%.
Okay. All right. You've maintained that for a while. Mr. Venkatraman, thank you very much. Good speaking with you. Appreciate you joining in with some of that perspective. That's Finolex with sort of, an outlook as far as the industry is concerned. Stocks absolutely flat. Well, there was a news flash. We should put that back on. That's a chunky, large order. I mean, I think, 10, 15 years ago, it used to be, these large power orders, tens of thousands of crores, which BHEL used to get to set up, to supply equipment for setting up, large supercritical power projects on the thermal side. And of course, there was a big slump. And now I think I saw an order from Adani Power, which essentially is to the tune of 11,000 crores. This is according to agencies, which is coming through. The stock in focus should be, of course, BHEL. If we'll see if that is actually moving up at all. The company receiving the order, of course, is BHEL. There's a sharp spike higher as we speak. That's a chunky material order. I think maybe I'm mistaken, or maybe I don't remember, but I think one of the largest orders that BHEL has received in the recent past. So absolutely the sector which continues to add a lot of capacity both on the thermal side and the renewables side as well, and of course the entire supply chain, equipment supplies, transformers, everything. I mean, that space has done very, very well. But we'll come back to this with more details. Vivek is now joining us with the Nifty and FTSE changes which are expected, and of course the implications for flows. Vivek, morning again.
Well, good morning. That's right. First up, like we had flagged off during trading session on Friday, a couple of important updates over there. NSE indices, you saw the index reconstitution, multiple ins and outs. We'll focus on the ones that are material. And along with that, post-market hours on Friday, you also saw FTSE semi-annual index review, where there are almost 13 additions to the FTSE All-World Index. Now, first let's talk about the NSE indices. Adjustments, remember, will take place on September 27, 2024. The estimated flows are from IIFL Alternative Research. So which are the stocks that have entered the Nifty? Bharat Electronics as well as Trent. Bharat Electronics will see inflows of close to $461 million on the back of that. Trend close to $645 million. On the other hand, the exclusions, Divi Slabs and LTI Mindtree will see outflows of close to $260 and $221 million respectively. The Nifty Bank Index, Canara Bank comes in, almost $80 million of flows. Bandhan Bank exits and it will see outflows of close to $40 million. Now coming to FTSE, remember overall this particular rebalance will lead to inflows in India of close to $1 billion. Adjustments will take place on September 20th, 2024. effective thereby from September 23rd. 13 additions to the FTSE All World Index, key amongst them being Bank of Maharashtra, Central Bank of India, Cochin Shipyard, Endurance Technologies, Escorts Kubota, GE T&D, as well as Hitachi India. These are migrations from, the earlier one to the All World Index. Hudco, IRB, KEI, Lloyds Metal, as well as Motilal Oswal. Some of these stocks, in fact, today are reacting quite sharply, including Motilal Oswal. Along with that, FTSE also has gone ahead and announced 48 additions to the FTSE All Cap Index, and there have been no deletions from FTSE this time around. So it's a net inflow event of close to $1 billion. So again, some inflows coming in from the passive index front as well.
All right, that's very exhaustive, Vivek. Thank you very much. Vivek, you want to weigh in on that BHEL order?
Well, orders have been coming in for BHEL. Even last week, there was a news flow that the company had received an order worth almost 16,000 crore, or has emerged as L1, yet to receive the order. The order book currently very strong, over 1 lakh crore. So BHEL, order inflow is very strong.
Absolutely, the big daddy when it comes to capital goods with respect to the power space. Vivek, thank you very much for that. Well, let's just go back to the big story that we have been trying to analyze and address this morning, which is this anti-dumping duty that's come through on CPVC. And this is, of course, with respect to imports coming in from Korea as well as China. To talk about the impact, we have with us Praveen Sahai, Vice President Institutional Research at Prabhudas Lilladher. Praveen, good to have you on. We were just discussing this with one of the companies which is in the chain, Phenolics Industries. Now, they were saying that for them, CPVC is not too much in terms of volumes. It's about 8-9%, so it doesn't have much of an impact. But I read your note as well. What you're saying is that, number one, I think China and Korea are no longer the major sources of imports now. It's more Thailand. So maybe the impact is limited. But just give us a sense on, in terms of stock impact, whatever little price increase we see, if at all we see any price increase, how should we read it at a stock level, at a company level in India?
Yeah, thank you for having me in your channel. So firstly, this recommendation of continuation in the anti-dumping duty has come on 25th May 24, and now it's implemented 26th August. So this is a better version, I can say, this extension from the last 5 year, what the anti-dumping duty on the Chinese and the Korean, CPVC resin. The one thing, this is based on the manufacturing origin. So now they can't route through the different, countries. So it's a blanket from a $593 to $792 anti-dumping duty, which will ultimately increase the prices for the domestic CPVC pipe manufacturers. So in the range of around 35 to 40 rupees. And in that, it looks like beneficial for the organized players like of Astral or Asirvad, who has a large contribution of CPVC resin or CPVC pipe in their portfolio. Then next is your Prince or a Supreme. They have also a good contribution from the CPVC pipes. So they are going to get the benefit in terms of gaining a market share, because these anti-dumping duty will going to impact the smaller or the regional players more as compared to these players. So
no, Praveen, just explain that point, because you're saying that there's likely to be a small impact. I mean, some increase in local CPVC pricing, but perhaps that gets passed on. So how is it that you expect the larger pipe players to actually benefit? Because I'm guessing, at least on the CPVC pipe side, we should see some increase in pricing. How much would that increase be? And then therefore, if you could explain the point.
Yes, so as I said, there is a slight increase of around 35 to 40 rupees per kg. And with these also, large players have ability to pass on the prices. So, and in the scenario where the PVC resin prices were going down, so whenever there is a widening of a differential between the PVC and the CPVC pipes, it's become a difficult for a smaller player to go through with the CPVC piping. So ultimately, this is a gain for the market share gain for the large players.
Got it. Okay.
Okay,
got it. So just in terms of stocks, which are the major beneficiaries? Astral, you said, Prince, any of the other, the resin manufacturers, if there's any impact there?
Yeah, so I was coming to that. So some of the resin manufacturers, the large resin manufacturers were DCW, Epicral, Lubrizol. So they are the large manufacturers domestically, and they are also increasing their capacities. So they are also going to get a benefit because right now of our total consumption, around 73% imported. So with these, anti-dumping duty, definitely the domestic manufacturers of CPVC resin going to get benefit. And also we all know that Grasim is coming with a huge capacity in this segment. So ultimately the way forward, the domestic manufacturers will get the benefit of this. But also I need to highlight that the import from the Thailand and the Japan and even from the US right now is on the higher side. So ultimate benefit from this anti-dumping duty on the Korea and China is quite limited.
Okay. All right, Praveen, got that. Thank you very much for joining in. That's helpful perspective. Appreciate you being with us on the show today. By the way, you're seeing some commentary from the RBI governor at the bottom of your screen. He is speaking at the Global Conference on Digital Public Infrastructure and Emerging Technologies. Therefore, is of course talking about the rapid tech transformation that is sweeping through the Indian banking landscape. We'll get you more on that in a bit. But right now, we do need to head into a quick break. Come back on the other side. And of course, our corporate conversations will continue. We'll connect with the N. Kamakodi, MD and CEO at City Union Bank, to talk about the bank's business outlook.
Store expansion through franchises, and obviously margins improving due to operating leverage as well. The product differentiation in jewelry between two brands has reduced because of BIS, competitive intensity, price parity. Everyone's margins have compressed, and there was a huge valuation gap between Titan and the others. That has become narrow as well. So if you look at Titan's jewelry margins itself, over the last many quarters, it's come down from 14.4% to about 10%, talking about the intensity in competition in the market. And this when the revenue growth has been similar to all the other players on the huge base as well. If you look at all the other players as well, where do they stand? Titan, for the last year, trailing 12 months, revenues were close to around 44,000 crores, Kalyan closer 20,000 crores, Senco and Thangamayil between 4 and 5,000 crores. But in margins, Titan is the clear leader at 11%, and which is why it gets the maximum market cap as well at 3,20,000 crores. And with the up move that we've seen, everyone else is at 61,000 crores and below. Titan has 490 stores, Kalyan 277, Senco and Thangamayil between 59 and 165. Kalyan has actually increased its stores by a fair amount as well. So what next will happen for the jewelry sector? There is improved consumer sentiment ahead of the festive season, the cut in the budget, store expansion in India and abroad would be the key trigger for every player. Design and brand position.
Okay, welcome back. 150 points higher. So this is a good-looking market. And we are 160 points actually. So 24,974. Essentially 120, 130 points more, and you're at all-time highs, which should basically be at 25,078. That's the last high. So very, very close to it now, matter of a few percentage points. Let's focus on City Union Bank now. Their first quarter business momentum was weak. Deposits declined. Advances saw muted growth. Sequentially, margins also fell. Mr. N. Kamakodi is MD and CEO at City Union Bank. Mr. Kamodi, good morning. Great to have you with us here. Thank you very much. Prashant this side. Now, we are, of course, we should talk about what Q2 is looking like, right? Q1 is now, in a way, a bit of a distant memory. Has business momentum
Prashant,
picked up materially in Q2? Could you start? Yeah, go on.
Prashant, actually, we see it as a 10% growth point to point. And normally, we used to have a negative first quarter, but this is the first quarter which is positive after almost 7-8 years. So the things have got well, and our ROAs have crossed 1.5, and our overall the PAT growth was about 16%, and overall the first quarter growth was indeed like the momentum has actually second. We in fact we typically used to have about 15% growth till the December 2022 and the calendar year 23 was not a good year for us, and there was like say some sort of like say layback, and things started improving from there onwards, and it has already crossed 10% for that. And we are able to see the overall business proceeding in this direction without compromising much on the profitability metrics is what we have been seeing.
Mr. Kamakodi, good to have you on. So the hottest talking point when you're talking to a banker these days is the whole issue on deposits, the fight for deposits. What is the experience that you're having, and what projections do you have? Because I think when we spoke to you after you declared numbers, first quarter numbers, you were expecting growth to touch double digits. So what is the gap between deposit growth for you this year projected and the loan growth that you're forecasting?
Basically, we have already crossed like a double digit in the Q1 itself, and things are progressing in a stable and steady fashion. You have like say this sort of like over a period of multiple cycles which you have seen, there always used to be some amount of a movement, like say the gap between the deposit growth and advances growth. Like say sometimes deposit growth overtakes advances, and sometimes advances growth overtakes deposits, and some amount of incremental focus into the like say the mutual fund industry perhaps like say created this amount of debate, and we are all working for that. At the same time, you also hear the reports sent by like say SBI, which is perhaps talking that like this amount of discussion is perhaps a little bit overstretched on the realities of that. Yes, we are conscious about it, and so far we are not seeing a stage where our advance growth rate will be limited by the deposit growth rate, and we have enough buffer with us, and we are also like every other bank trying to work out our like say strategies, expecting things that are expected to be.
Sir, can you share some numbers on the CASA ratio that you're hoping to maintain? And what is the deposit mobilization target for this year? I mean, there must be some rough range you have in mind.
Basically, the overall CASA growth, like say, we had like say always had like say in the lower quartile in terms of the CASA percentage right from the beginning, and the last 7-8 years, the CASA percentage has in fact increased from lower 20s to about 30%, which is a substantial improvement which has happened in the last 5-6 years in a steady and a firm manner. We are expecting to like say go ahead with the same amount of numbers in terms of percentage CASA. We expect the like say overall credit growth of the system to be around mid-teens, and we also hope to achieve and aligned with the growth rate of the system. And we also have our like say main mode of liability side had been the retail term deposits, which had been our main source of numbers, and we are seeing things as per our expectations, and we don't expect the deposit growth to inhibit the credit growth for the next 4 to 6 quarters going on.
So just to clarify, when you said mid-teens, that's the expectation on deposit growth or credit growth?
Credit growth and sufficient deposit growth to take care of that.
Okay, mid-teens credit growth. Got it. Just give us a second, sir. We're looking at a new listing, and it's a big one, 45% higher on Interarch. That's the new listing, and we're getting visuals from the NSE on this. So the momentum on Primary Street continues.
Well, that's right. Happy faces. Welcome to the stock market to the entire team. And keep in mind that we'll have the management for us in the next 30 minutes here on CNBC TV18. So stay tuned for that listing. For the time being, rocket up, more than 40% returns. Well, Mr. Kamakodi, good morning. Nigel on this side, and good to have you on the show, sir. Let's focus on your new business. New business as a percentage of the mix, what is it currently? And how do you see this business scaling up? Point number one. Point number two is, margins I think were in that vicinity. NIMs were at around 3.5% for the past quarter. What's the range we should work with?
Basically, if you had a chance to look into our net interest margin over like a decade or so, our range had been between 3.4 to 3.7. We are very much on the upper range. For about 7 to 8 quarters, we are 4% plus which got subdued for one of the main reasons is that like some of the like say penal interest and all overdue need to be started with getting at your charges, which impacted about over 10 to 15 basis point reduction and all. In that we are currently our long-term average range of 3.4 to 3.7, which we expect that range will continue for the future. The mainly like our monthly like say disbursement is to the range of about let's say 1,000 crore to 1,100 crore, which is getting set, and normally the like say we are in the second half used to typically take care of about 60% of our incremental business. And the one good thing is that we have not seen positive momentum in the first quarter, which we have seen positive growth in our loan book after maybe close to 780.
Okay. So just very quickly, quick last point on asset quality. You've actually shown a small improvement sequentially. We were talking to one of the other gold financiers, one of the NBFCs, and they have seen some delay in payment. So just trying to check in them, and there's also that showing up in the MFI vertical. So just wanted to know if you are seeing any concerns with respect to repayments in any of your lending groups.
Basically, as you know, we are like say bankers mainly for MSME, commercial trading, agriculture, and the gold loan, which together constitute about over 80% of our loan book. We are currently going through probably best of our asset quality cycles at like say if you even look into the pre-COVID days, the even the SMA2 numbers roughly used to be about 7.5% and about 2 to 2.5% slippage. Currently, those numbers are very much around even less than 3%, around 4.5%, and all. We are perhaps seeing the best of the overdue numbers, whatever I have seen in my maybe 15-20 years of managing the account.
Okay. All right. So thanks very much for joining in. Good to have you on, and appreciate you sharing all the perspective with us. Well, with that, let's quickly look at the market again, which continues to actually move on fairly steady ground. We've got about a 150-point rally going on the Nifty now. Shilpa Raut of Prabhudas Lilladher is with us. Shilpa, thanks for joining in. So the bulls are having a good Monday. What's your advice on the index and individual stock trades?
Good morning, everyone. Definitely, bulls are very happy today, and this momentum that Nifty will touch 25,000 quite soon is actually happening today. And if we sustain this 25,000 mark, then a very strong short curving towards 25,300 levels cannot be ruled out. So I would say a little bit cautious here, but positively cautious, because it shows that likely will breach 25,000 and move ahead and upside towards 25,300. Talking about Bank Nifty also gave a good breakout, now sustaining above 51,150. It is a very positive level for the index. I believe from here 51,500 to 51,800 should be looked upon.
Okay, got it, Shilpa. Thank you very much for joining in and giving us some perspective on the market. By the way, I mean, beyond the index, are you trading any stocks, any individual calls as well?
Yes, definitely. IT definitely is a space today to be, there. So Naukri is one stock I believe has a very strong potential from here to test 7,800 from current zones. The stock trading at around 7,500 in futures, I believe, with a stop loss of 7,470. The same levels I have recommended in Prabhudas Lilladher today as well. So I believe for intraday, you can definitely look towards 7,600 to 7,650. Positional traders can definitely stay intact till 7,800.
Okay, got it, Shilpa. Thanks very much. You have a good trading day and look forward to our next call. We'll take a break on that note. On the other side, all the commodity market action. We'll have Manisha joining in.
Key differentiators for Titan and the others, we need to watch out for the impact of lab-grown diamonds and how that plays out on margins. And then there are newer formats like Carrot Lane for Titan, Candier for Kalyan, etc. Kalyan is looking to divest its non-core assets. Titan is looking to grow through new categories, balance sheet improvement for players like PC Jewelers who have doubled in this year itself, and leadership transition for Titan sometime in the next year as well. Everything has a price. So let's look at it. 2 years ago, Titan was trading at 64 times, Kalyan 19 times, and Senco 13 times. 2 years later, after the underperformance, Titan is at 60 times, Kalyan is at 50 times, Senco at 29 times. So I guess what I'm saying is that the valuation differential has narrowed quite a bit. With this underperformance, is it time now for the street to remember the Titan?
Dr. Deshpande, the crux of our problem is probably our diet. Statistics show that 51% of students eat junk food, 38% of adult Indians eat poorly. So what is wrong with our diet to that extent? Is it the lack of protein? Is it too much carbohydrates? Or is it the incremental amount of junk food that our diet has, turned towards in the past couple of years?
Right. So yes, you're very right. The problem is calorie excess because of abundance of food. The other problem is carbohydrate excess. And the third is protein deficiency. So all these three put together are a recipe for disaster, because you are increasing your calories, which is going to make you fat and obese, and you are...
Welcome back. It's time to talk commodities. We have Manisha with us, and Manisha, earlier in the morning we were talking about the fall in the dollar, right? So you tell us now, how's it looking, and what do you have your eye on at 10 a.m.?
Oh, well, yes, the dollar index declining all the way to 100 clearly has been supportive for many of these dollar-denominated commodities. And I'm looking at the crude oil prices right now, because a very smart rebound from the lows of previous week is what we are working with right now. Last Monday we were trading at an 8-month lows and almost nudging around that 74, 75 mark for Brent. And we are back around very close to $80 a barrel at this point in time. So while it was a gain of 2% on Friday, we're looking almost a percentage point of gain in the Asian markets right now as well. Various factors in play here, and I'll start with the geopolitics there, and that clearly was something over the weekend that the markets have taken cues from. So Israel and Hezbollah exchanging missile strikes over the weekend clearly has been supportive. There are concerns that this overall conflict within the Middle East perhaps could escalate going forward, and that is weighing onto the markets there. There also are supply risks going forward, and as I said, the West Asia is looking at a broader conflict at this point in time. Not just Israel and Hezbollah, but the kind of ceasefire conversation that we did see happen in Cairo, Egypt, also seems to be falling apart right now. There is no progress as of now towards Israel-Hamas ceasefire, and that's also adding some premium to the prices there. The markets also are looking at the U.S. Energy Department, which is buying a big chunk. We are looking at almost 47 million barrels of crude that the U.S. SPDR has bought, and this has been at an average price of around $76 there. The U.S. did sell almost 180 million barrels, and this was in the year 2022. That was just about when the Russia-Ukraine war had broken out. We did see crude oil prices, gasoline prices, heating oil, all of that go up. So with the U.S. SPDR also buying crude is something that the markets are taking in as the positive. The U.S. crude inventories is yet another factor, and a very sharp decline onto that one. 34 million barrels have seen a decline in last 8 weeks. So when you look at this number, this is the lowest in 2 years in sense of U.S. inventories there. Also, in the last 8 weeks, the kind of decline that we have seen has brought the crude inventories to the second largest lowest in a matter of last 10 average years there. Global markets also are looking at crude inventories constantly declining. If you look at the global markets here as well, in the advanced economies, that is, the crude inventories are now at the lowest by nearly 4% of a 10-year average. So various factors, as you can see, are supportive in case of crude oil prices there. An interesting report which is coming from Morgan Stanley, though, and the good news really ends there, because while there are supply risks and geopolitical tensions and the weakness in US dollar, which is supportive, but it really has to do with demand, which from China has been on the weaker side. The markets also are looking at a bit of a discount in some of those European countries as well. So Morgan Stanley, for one, says that the demand growth has been revised down to 1.1 million barrels per day for this year now. Also, the markets will watch out for the OPEC and allies meeting for the month of September. Remember, those voluntary output cuts that OPEC and allies have been giving in will start to ease off from the month of October, so the September meeting in that sense becomes very, very important. Another very important Morgan Stanley statement comes in suggesting that the crude crude prices from here on perhaps can see further decline. For the fourth quarter, they're looking at an average of $80, but for the next year, they anticipate 75 as an average for 2025. So next year perhaps could be a bearish crude oil prices, but at this point in time, we are looking at some support.
Okay, all right. Thank you very much for that wrap up. And of course, crude oil in focus. Manisha, thank you for that. We'll take a look at some of the stocks on the move now. Ekta is tracking Zydus Life, where it seems that one of the drugs that they manufacture, that could be coming in for stiffer competition. Ekta, fill us in.
Well, yes, definitely disappointing news which is coming for Zydus, but it was factored in, to be fair, because the street was anticipating competition to come in for Asacol HD. Now, Teva has received US FDA approval for this particular drug, which is used for ulcerative colitis. Remember that Zydus was the only generic in the market for a long time selling this drug, and it is estimated to account for around 3 to 5% of Zydus's revenue and 8 to 10% of the EBITDA in FY24. Now, Jeffrey says they assume the product contribution will drop to less than 1% of revenue and less than 3% of EBITDA in FY26. Sharp decline in earnings from new entrants in Asacol HD will reduce, according to them, because they have recent launches. Zydus has recent launches such as Mirabegron generic, which is basically a drug which is used for overactive bladders, increasing contribution from Revlimid generic, which is a cancer drug, and strong pipeline for launches in the US as well. So overall, they do believe that the competition is probably going to be negated, and the earnings estimate is going to be negated for them because of these other factors. Zydus is also looking to buy 50% in Sterling Biotech for 550 crores. Remember, it's one of the leading producers of pharma gelatin. FY24 revenue was around 455 odd crores. This particular company was acquired under NCLT by private equity investors. Now, post the acquisition, it's going to become a 50-50 JV for Zydus going forward. So I think the street is reacting to two pieces of news. Primarily, it would be Asacol HD, as well as the fact that 550 odd crores is what they're letting go of for Sterling Biotech.
All right. Okay, got it. Thank you very much, Ekta. On that note, we'll take a quick break. On the other side, our special segment, it's the economy. Lata, today we'll get chatting with Robert Suckin, global economist at Citi, to discuss all the details about Fed Chair Jerome Powell's comments at the Jackson Hole meeting, confirming that a rate cut indeed is coming in September.
Carbohydrate intake with all the junk food that is there, and you're also increasing your fat content, and all of this is ultimately going to lead to a lot of insulin resistance, fatty liver, and this is inviting all the metabolic diseases that are associated with obesity. So junk food is very high on processing, and processing is really bad because it can cause a lot of what we call oxidative damage.
What is a good source of vegetarian protein according to you, Dr. Deshpande, and how much protein should one consume?
Yeah, so typically if you're really very active, the formula is that you should get 1 gram per kg of your body weight. But if you're not very physically active, if you're much older, you can go to 0.8 grams per kg body weight. If you talk about vegetarian sources, there is no complete protein. So you will have to eat multiple sources of protein because all the amino acids are not contained in any single food. So vegetarian protein is basically not a complete protein. So you'll have to make a mix and match of different things like cereals, sprouts, maybe paneer, dairy, basically. So mushrooms. So these are all the ways that you can get proteins, but not one of them is a complete protein. So one has to be very vigilant. It's not a way. You have to be really careful where your protein is coming from, and maybe meet up with a dietitian to actually find out where the protein is coming from in your food. So it's not very easy to get all the protein that you need from vegetarian sources. But mushrooms, dairy, all these are very few sources are there of protein. Sprouts do have protein, but they also have a lot of carbs, which people don't understand. Everyone thinks that sprouts is full of proteins. It has protein, but it also has a lot of carbs.
Investing.
Welcome to It's the Economy. Today our topic obviously is Jerome Powell's dovish tilt
in the much-awaited speech at Jackson Hole in Wyoming. Let me quote, "The time has come for policy to adjust," Powell said, confirming the expected rate cut in September. And though he said that the timing and pace will depend on incoming data, the fact that he said two things are important. Let me quote him. First quote, "We do not seek further cooling of labour markets." And second quote, "We will do everything we can to protect the labour market." This has led to some expectations of a 50 basis point cut in September. To parse Powell's speech in detail, we have with us an expert, Robert Sockin, the global economist at Citi. Robert, I can't tell you how grateful I am that you have sat up for us. Well, first, your key takeaways from Powell's speech. How many cuts do you see on September 18th? Of course, I think Powell has made it clear there is going to be a cut.
Yeah, absolutely. And the first thing to note, as you mentioned, is that Powell made it very clear that now is the time for rate cuts. I think there should be no doubt that some form of cut will come at the September meeting. And now the debate really comes around the timing and of cuts after that meeting and the pace of rate cuts once that easing cycle starts. Powell did not commit on that front and really said it's going to depend on how the data evolve. Right now, the way the data have been evolving, it feels like the Fed is going to start with a 25 basis point rate cut and then move at a 25 basis point cadence for at least several meetings after that. Our U.S. team thinks, though, that the data are going to deteriorate more from here. And if that is the case, then you would start to get the Fed to move at 50 basis points in September, and maybe even another 50 after that, which is their base case. So it really does come down to the data here. I'm watching the next employment report in particular very closely, but the data over the last few weeks suggests to me that the most likely move at this stage is a 25 basis point cut in September.
Okay, let me take you up on this 25 basis expectation. Let me read one quote from Powell's speech that I thought sounded emphatic. I quote, "We will do everything we can to support a strong labour market as we make further progress towards price stability." End of quote. Yes, there is a caveat of price stability, but everything we can, wouldn't this point to a 50 bips cut?
Yeah, that's a great point, and to highlight that passage. And I think one thing that's clear is the Fed is not really as concerned about inflation as it was a few months or a few quarters ago. They really see that the upside risks to inflation have diminished significantly, and now they're more focused on downside risks to activity. So far, the unemployment rate has moved up to 4.3%. From a low of around 3.4%. And as many have noted, the SOM rule, which has been an excellent indicator of recessions, has been hit as of the last employment report when the unemployment rate moved up to 4.3%. That being said, there are a lot of caveats in this cycle. A lot of the rise in the employment rate has been due to an increase in labor supply that has been fueled by a large immigration boom. So Powell is watching these same data and saying that right now the labor market is looking manageable and is cooling in a manageable fashion, but they cannot ignore that rise in the unemployment rate, and any more at this stage would be very unwelcome. So, for example, in the next employment report, if the unemployment rate were to jump to, let's say, 4.5%, even if that was due to increasing labor supply, I think they would be concerned enough by such a large move that they would start moving at a 50 basis point tenor. So I think what that statement means is we're watching the labor market closely. If it gets worse from here, we're going to react. But as things are right now, we think we're getting that soft landing still.
Okay. Well, Robert, let me just explain. You said SOM rule to our viewers. SOM rule basically means that if the 3-month average of unemployment is higher than the 12-month low, which was the case last time. 4.3 was the average and the 12-month low was 3.6. So if it is 50 basis points over the 12-month low, then the US is already in a recession. That's the SOM rule that Robert is referring to. Robert, I'll come to that in just a minute. But first, what is Citibank's August employment numbers? Will it be just around 100,000 non-farm payrolls? And what is your unemployment rate, more importantly? Will it be 4.3?
Yeah, and this is where the difference comes from where the data have been looking now to what our U.S. team is forecasting in their base case. They think that the rise of the unemployment rate to that 4.3% is just the beginning, and you're going to get a continued rise of the unemployment rate through year end and to getting somewhere into the 5% range. So they're very much looking for things to deteriorate further, and that's why their base case is for a 50 basis point cut in September and another 50 basis point cut in the meeting after that. To me, as I said, right now, the data aren't so clear. We've had some weak data in early August. More recently, we've had some stronger consumer data with very strong retail sales, and jobless claims have been very low. So I think the jury is still out on which way that data will go. If the data continue to, as they have in the last few weeks, I think you're going to get that slower pace of rate cuts. But right now, yes, our U.S. team thinks things are going to get much worse from here, and that's going to lead to a rapid pace of rate cuts from the Fed. So that employment report that's coming out right before the Fed meeting or relatively before, that's going to be very pivotal for what the Fed does in September.
Okay. In that case, what are your forecasts of rate cuts for 2024? You are in the 5 cuts camp?
Right now, yeah, our U.S. team has 50 basis points in September, another 50 basis point after that, and then 25 basis points. So you get 125 basis points in cuts in total, and then continued cutting into next year. But as I mentioned, if the data continue to feel resilient and something that's more like a soft landing, the Fed probably does 3 cuts this year of 25 basis points and moves at a very gradual pace. One other thing I'd like to note is I think what we've seen around the world is central banks in general have opted for gradualism when they can. All other central banks have really started their rate cutting cycles with 25 basis point moves. If you look at the ECB, they started with 25 and then they paused to see how things were going. So I think central banks are being very cautious in this environment. And unless you get a real weakening in U.S. activity from here, I think the Fed's going to be cautious with those rate cuts as well. Now, again, if we're going to a recession, all bets are off. But if we're not, I think you're going to see a cautious pace from the Fed.
Okay. Now, if you are right about cuts, that is 5 cuts, and you're expecting unemployment at 5%, then you are already in the Salm rule camp. That is, US is already in a recession or very close, perilously close to one. In which case, aren't the markets too exuberant?
Yeah, absolutely. If our U.S. team is right and you are going into that recessionary environment and the rise in unemployment rate that we've seen is just the beginning and you really do get a sharper deterioration on the labor demand side, then that would be, I think, relatively bad news for the market. Now, our U.S. equity strategist still thinks that in a recession, the market can be fairly resilient because you have a lot of other stories going on in the background, still some AI, still part of the AI story. You'd start to get a rapid rate cutting cycle from the Fed. So there are a couple of things going on that can keep equities a little more resilient. But certainly the euphoria that you've seen in the markets, that's much more of a soft landing flavor than a recessionary flavor. So I do think if that is the case and you get that recessionary environment, you're likely to get some pullback relative to where we are in markets, just because right now it does feel like things are generally pricing in a fairly soft landing scenario.
Well, AI is good for some, but not good for all. Anyway, let's stick with the fixed income markets. What are you expecting in terms of levels for the US 10-year yield? What's the range? And what's the range for the dollar index? The DXY is already below 101, and the 10-year yield is below 3.8.
Yeah, absolutely. On the 10-year, again, this debate that we're having right now about how fast is the Fed going to move, that is very important for where the 10-year is going to be in the short term and the medium term and the long. It's if the Fed does stay a bit higher for longer, you could get a 10-year somewhere in the low fours. For a meaningful period. If the Fed starts to cut very rapidly, I think you start to move below 4 a pretty durable basis. So I think low 4s in a higher for longer Fed, and you go below 4 in a rapid cutting cycle, and probably somewhere I think into the high 3s would be more fair value, somewhere in that 3.75 to 4 range. That's on the 10-year. On the dollar, again, it's going to depend, I think, on this rate cutting cycle again. I think if you start to get a fast rate cutting cycle, you could get more of a pullback in the dollar, especially if it's just the U.S. that's slowing down while other economies are picking up. But it's going to depend on that global picture, because a U.S. recession isn't always negative for the dollar. If the rest of the world is slowing down, you get this risk-off sentiment. People tend to move into safe havens, and the dollar could even do relatively well. But I think in an environment, if our U.S. team's right, where it's just mostly the U.S. slowing down, I think you can get dollar depreciation from there. So it's really a scenario analysis in both cases.
I agree with you, but actually the U.S. exceptionalism still seems to continue. But let me come to, there are other questions. I don't have time to discuss the impact of the Robert Kennedy factor, him teaming up with Trump. We'll push that discussion for another day. Let me just end by asking you, where do you see India? Do you think we get bogged down by a US slowdown, a China slowdown, or do you think India remains resilient?
I think India is going to continue to be resilient. I've talked a lot about on this program that India has been one of the best performers in our forecast, has been consistently surprising us to the upside with its resilience. And if you look at emerging markets in our forecast, they grow in aggregate about 4% this year. They grew in aggregate about 4% last year. So we're looking for no slowdown overall in emerging markets, some mixed shifts in terms of different economies, a few slow down, a few pick up. But India is one of the ones that had very rapid growth last year and holds up very well this year. And I think going forward, as the global manufacturing cycle picks up more, we're going to see that benefit India. And we're also going to see India benefit from longer term from a lot of other issues we talked about in the show, like very favorable demographics, favorable improvements in mix and policy. So I think India is a very positive story for the global economy, a very positive EM story, has been, I think will continue to be going forward.
Okay, actually, you're a good omen, Robert. The index, the Nifty, has crossed 25,000, even as you were saying, that India remains a resilient story. Thank you very much for joining us and staying up late for us. We wrap up on Bazaar on the note that the index has crossed 25,000, racing to its all-time highs yet again. A strong note to end. Bazaar Chartbusters coming up.
Ultimately, if you had to get all your protein from the natural vegetarian sources, your calorie count is going to increase exponentially. So, so that is what you have to be careful about.
Dr. Mufiam, I'm going to start with you. The Lancet study says that 50% of Indian adults are unfit and not physically active. Why do you think that is the case?
Hi, Ekta. Thank you for welcoming me on the show. I think there are 2 or 3 reasons mainly. One, I would say, is urbanization and lifestyle. So urbanization, there was a 2023 study which actually showed that that's led to around 40% increase in lack of time for physical activities, only because people have adopted to motorization as transports, use lifts instead of climbing, and various other things. The next thing is in terms of cultural acceptances. So we as Indians don't believe, and there's a lack of mental awareness that exercise is regularly needed. And a 2022 study actually showed that 40% of Indians don't believe that exercise is required for sustained a healthy lifestyle. And finally, there was a 2023 study that showed high stress and long working hours. So what individuals actually said is that 45% of Indians quoted that as a reason for lack of time to exercise for having a healthier body. There are 2 other factors. One is technology. A 2022 study said that there's a 150% increase in screen time. Tablets, computers, phones, people are addicted to their Insta profiles or their Facebook, Twitter, whichever handle. All right, and people don't have time to physically exercise. And then diet, like you correctly said, Ekta. there has been a 40% increase in processed food diets that Indians have consumed over the last 10 years or so. And that, including the added predisposition to having sugar. We have so many festivals and we are so addicted to sugar that that's a deadly cocktail that the Indians can ill afford. And that's why you're seeing not only one pandemic, which I believe we have already reached. We are the number 3rd country in the world to probably have obesity, but we are number 2 in terms.
Zydus Life shares correct over 4% but are off the lows of the day after Teva Pharma receives an approval from the US FDA for an ulcerative colitis drug, threatening Zydus' monopoly in the generic market. Zydus will also pick up a 50% stake in Sterling Biotech for 550 crore rupees.
And shares of BHEL rally after the company wins 11,000 crore worth of orders from Adani Ports.
Block deals continue on the last street. AU Small Finance Bank trades higher after 1.7% equity worth 804 crore rupees changes hands in a block deal. On the other hand, Med Plus corrects after a big trade where 12.8% equity changed hands at 616 rupees a share.
Trent and BEL are all set to be included in the Nifty 50 from the 30th of September. Trent gains over 1%, while BEL also trades with mildly gains.
And Interarc Building Products makes a strong debut on the last street. The stock lists at a 44% premium to its issue price. The management joins in to speak to us on the outlook going ahead in just a bit from now.
Hello and welcome to Chartbusters. I'm Nigel D'Souza and joining me today is Hormuz Fatakia. Well, Hormuz, it's a good-looking screen. But before we get to the markets, I wanted to congratulate you on your work anniversary here at CNBC TV18. It's been great working with you, an absolute asset to the team and a team man as well. So wishing you the best, Hormuz. As I always tell you, it's just the start. Big, big runaway for you from here.
Thank you so much, Nigel, and it's a pleasure always because you are the first co-anchor as well. So it's an apt day to start the show as well. It's a good-looking screen, as you said. We crossed 25,000 on an intraday basis. We're just off those levels slightly. 25,078 is the record high on the Nifty that we need to keep an eye out for. Most of the sectoral indices are doing well as well, but the IT index is the one that is contributing to the gains in majority this morning after the speech from Jerome Powell on Friday, the overnight rally that we saw on Friday on the Nasdaq as well. The IT index trading with gains of 1.5%. The broader markets are slightly subdued if you speak in comparison to the moves that we have seen over the last few sessions. The mid-cap index is up 0.5%. The small-cap index is up only 0.3%. But of course, there are plenty of stock-specific moves there.
Well, that's right, Hormuz. Let's get straight then to the new kid on the block, engineering and manufacturing company. All right, I think we'll just hold on to that thought for just a bit. In a short while from now, we'll get to address the new listing as well. But Hormuz, you know, a lot of stocks actually are moving around from the broader markets in particular. GSPL, that's a stock. I think the street is sensing there could be some kind of corporate development on that front. And that's why that stock is flying away. So we'll have to keep an eye out on that. And mid-cap IT as well is doing rather well. Just a word on the Nifty Bank. For me, that's going to be the swing factor from here on. It needs to get past that 51,300 to around 51,400. That's the resistance zone. But let's get straight to the new kid on the block.
Indeed, and that is the stock that we were speaking about in just a bit. Interarc Building Products is the latest listing on the exchanges, a 1,299 rupee a share listing, which was a 44% premium to its issue price of 900 rupees a share. We are now joined by Gautam Suri, who is the director, and Manish Kumar Garg, who is the CEO of the company, to discuss the outlook going ahead. And now, gentlemen, good morning. Thank you so much for joining in. Firstly, congratulations on being a listed company now. It's a big day for you guys and the team as well. We start off with numbers straight away. Since now you are a public company, you can definitely share some numbers. What is the growth that you are penciling in for FY25 when it comes to the top line? And we'll start off with that and then move to the margin front as well.
Let Manish answer that. So good morning and thank you very much. In last 3 years, you have seen the numbers. We grew at a CAGR of over 20%. Our order book is strong. So the outlook definitely is very positive, and we are doing good.
All right. Good morning, Mr. Suri, as Mr. Garg. I saw you all ringing the opening bell, and you could see the kind of passion that you all have built this company. And now you welcome to the bosses as well. And we look forward to chatting up with you from here on. Now, as you said, Manish, you all have been growing at a rate of close to around 20%, and you believe you can grow from here on as well. So give us a few details. This year, if I go by that 20% run rate, you should at least end in that vicinity of around 1,600 crores of revenues. Could you confirm that? What would margins look like? And also, if you could split the top line mix as of now. As of now, I'm looking at it, pre-engineering building contracts is close to around 75-76% of the mix. How do you see the mix turning going ahead?
Yeah, so the mix is going to be pretty much the same. Pre-engineered building remains our main product line, and that is what is going to remain the main product line. Now, as far as the growth numbers are concerned, our order book is very strong. There is momentum in the market given the macroeconomic factors and the private capex, which really we represent as a proxy. So I'm sure things externally looks very bright. Our order book is pretty strong. You saw that in RHP, it was 1150 crores at that time. It keeps growing all the time. And if past is, any reflection of how good we have built the company for a sustained performance, I'm sure the performance would be much better than what it has been, at least sustainable. So
Manish,
that's the kind of growth we are looking at. We will keep working very hard.
Manish, I'm going to push you for a couple of numbers. Since you're listed now, there's no problem. The regulator, with regard to your bankers, promoter, everyone's going to be okay if you share some guidance. So for this year, 1,600 crores, is it doable? And in the following year, you'll be closer in that vicinity of around 1,900 to 2,000 crores. Going purely arithmetically, what it means for margins as well?
Yeah, I would say we have the right ingredients and the recipe to deliver those kind of numbers. I think that is what I can say. And we will sincerely work very hard to push and give those kind of numbers. Of course, a lot depends on how we get there as we go forward. But yes, all the ingredients are there. The recipe is there for those numbers to be delivered. And as far as the margins are concerned, we are very conscious of the margins, sustainability. And we work on internal as well as external factors to sustain the kind of margins we have delivered over the last 2 years in particular.
We'll take that as a yes then, as the answer to our question, Manish. But in terms of utilizations as well, right, you currently have 4 manufacturing units as we speak. What are the utilization levels in each of them? And if you can also tell us that by the end of FY25, where do you plan on having your capacity at, which is currently at around 1.4 lakh MT, if I'm correct?
That is correct. So that answer, of course, I have. So our capacity utilization for what we call the utilizable capacity is about 80 to 82%. We already declared that our Andhra Pradesh phase 1 is the new capacity coming in, which has been funded all through internal accruals. And we are very shortly going to be starting our other plants also, so which are part of the objects to the offer. So yes, there will be capacity addition in FY25 as far as our new plant is concerned, which is the AP1, which is already declared. So the capacities are going to go up in FY25 and go further up as specified in FY26 as well.
By how much would that be, Manish, if you can share a number on that as well?
So I think AP1 is about 20,000 tons, and AP2, which is part of the objects to the offer, as I said, for which we have raised about 57 crores, is going to be another 40,000 tons. That's the kind of capacity build up that is going to be there.
So 1.4 plus 20 plus another 20. Is that correct?
No, 40.
40
plus 40.
20 plus
so
40 and utilizable, as I call it. This is the machine capacity. Utilizable is always about 80-85% of the installed machine capacity, like that.
Got it. Got it. Let's get Mr. Suri as well in. Mr. Suri, congratulations. Rocking listing. with, these big returns, responsibility is on even more on you now. So what is your vision for the company, say in the next 5 years from here on? Because on a quarterly basis, we'll be interacting more often and we are going to be trying to see what is your vision. But on the listing date, 5 years from here on, where do you see the company headed? As of the last year, we have numbers. You're doing high single-digit margins, revenues of around 1,300 crores. And the last time you all joined us, you said that probably the peak capacity in the next 2 years will be 2,200 crores. But give us a 5-year roadmap that you've planned.
Well, not discussing the financial roadmap, but my vision, already we are currently in pre-engineered buildings, but we are more and more moving towards placing ourselves as a engineering company. We excel in engineering. We have a great engineering setup, and we want to, I see the company moving into more complex engineering projects, infrastructure projects, tall buildings. So my vision is to make Interact a global player as an excellent engineering company doing heavy structures and complex structures for any kind of application. That is my vision over the next 5 years. And I see it happening because Interact is well placed for that. I have built an excellent team. We have a great team. And I think Interact will go places as a excellent, unique engineering company.
One final question from my end, gentlemen, and either of you guys are open to answering that. One of your RHP points mentions that there is some vulnerability that you have when it comes to raw material prices as well. How are you managing that to adjust to fluctuations in raw material prices? If I'm correct, steel is your major raw material that you consume. So if at all there is a fluctuation in raw material prices, how do you manage your margins in case there is an impact on that as well?
Yeah, so good question. Thank you for asking that. So we have a model, what we call for our, longer duration contract, which in our case is about 9 months to 1 year, is what we call the variable price contract, where steel price increase or decrease is a pass-through, because we believe that we are an engineering company. We are a pre-engineered, steel building company, not really speculating on the raw materials. So therefore, for all our variable contracts, which form something like 40-50% of our order book generally are steel pass-through. So the fluctuations don't really hit us. They are passed on to the customer either northwards or southwards. And rest of the orders, which are fixed price contracts, are protected by holding inventories, which we hold about 2 months. And then the steel cycle, which we use special steel, is about 2 months. So that way we are reasonably protected against any up or down in the steel prices, because we don't wish to speculate on steel. That's not what our business is.
Okay. And there is no major variation in steel prices except 1 or 2 hiccups happened in the past.
Got it. So most of it you all are protected. Just to squeeze out one more number, revenue aspiration is what we got. Margins in the vicinity of around 8.5 to 9.5% is what you have done, and you believe that you can maintain it at that. So we'll hold it at high single digits out there. And you also mentioned at the start of the interview, you're sitting on a big order book. We have the number for what's given in your, in your DRHP, but we would like to know what is the updated number as well. What's it right now?
So updated number is about 15% more than what it was at the time of printing the prospectus or RHP.
All right. So that would be in the vicinity of close to around 1,300 crores odd, at least.
That is correct. Yeah.
It's a pleasure speaking to you all, gentlemen. We wish you all well. Appreciate you joining in, giving us a sense about how do you all see business shaping up. Celebrate the day and look forward to chatting up with you all in the time to come.
Thank you. Thank you, sir.
All right.
Thank you.
All right. Well, time to shift focus then to our special segment where we get you a few ideas for profit from Money Control Pro. Neha Dave of moneycontrol.com joins us to talk about a stock that she's tracking rather closely. Neha?
Today's stock idea is MediAssist Healthcare, which is the only listed third-party administrator for the insurance companies. The company's revenue is linked to premium under management of the health insurance companies, its services, and hence the stock offers an unique opportunity to participate in the growth of the health insurance industry. Medi-Assist leads the industry with a market share of 21% in terms of the total health insurance premium managed by the third-party administrators as of June end. While the bulk of its premium is from the group policies, it is also focusing on the retail health segment, which is growing at a faster pace on a smaller base. The company has historically delivered EBITDA margin in the range of 23 to 25%, except for FY24, which saw margin declining to 21%. The decline was mainly because of the acquisitions done by the company in the past 12 to 15 months. As per the management, it will take 3 to 4 quarters to realize the synergies from the acquisition and for the margins of the acquired companies to improve. The ramp up of the acquired entities could be the margin kicker for the company going forward. The company has a net cash balance of 270 crores as of June end and has delivered a return on equity of 19% in FY24. In terms of valuation, the stock is trading at around 29 times estimated earnings for FY26, which is reasonable considering annuity-like revenue, high operating leverage and dominant market position in a growing industry. Given the sectoral tailwinds and vintage positioning of Medi-Assist, the stock could be a long-term compounder.
The other way there from moneycontrol.com. Time for a short break here on Chartbusters, and as Nifty nears a record high, we'll get Shivangi Sarda of Motilal Oswal on the other side to get you a technical check on the markets and specific stocks. Stay tuned, back on the other side.
And diabetes is a bigger problem than obesity alone, because that's taking lives, affecting our loss in man hours and affecting overall growth in India.
The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them and how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC TV18 and CNBCTV18.com.
Markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Back with us here on Chartbusters. Before we get to the markets, just pull up NIIT. The stock is locked in a 20% upper circuit, and that is after the block deal that took place on Friday. And Ramesh Damani, the veteran Dalal Street investor, has emerged as one of the buyers in that block deal. 20% upper circuit there for NIIT at 153. But good time to get in Shivangi Sarda of Motilal Oswal Financial Services for a chart check. Shivangi, good morning. Thank you so much for joining in. The Nifty crossed 25,000 intraday, but do you think that this expiry week related volatility will keep things choppy as we go into the rest of the week?
Morning, Thomas and Nigel. Thank you for having me. So we've seen that, there has been a good support-based buying. Bulls have been in action from the last week itself. And the put-call ratio is also sustaining above 1, which clearly indicates that put writers are making a good base over here. We've touched, 25,000 and holding near about it. And we are expecting this move to continue because the kind of, stabilizing we've seen at these levels is quite, good. Last time we touched these levels, we've seen that, there was a lot of profit taking at that zone. So overall stock specific action, sector pockets are going to drive this market. And, we are expecting next 25,200 for this index with a support of 24,850 immediately. Now, talking about Bank Nifty, we've seen that, of course, lackluster move continues over here, but again, it has managed to hold above its 50 daily exponential moving average, and round about 51,000 becomes a good make or break zone over here. Now, on weekly basis, we've negated the lower highs, lower bottom formation for Bank Nifty, and slight bit of follow-up action is also seen over here. But clearly, momentum is missing in this entire space as heavyweights are not performing and moving quite range-bound. So we are expecting buy on decline on both the indices, but of course, the conviction would be more on the Nifty side. Talking about levels for Bank Nifty, next we are looking at 52,000 immediately and 50,750 as the support for Bank Nifty.
Got it. All right. Hi, Shvangi. Good morning. Good to see you, Ben. Individual stocks, what should we be looking at?
So for individual stock, first up on my radar is Persistent. In fact, this entire space can be seen in a lot of action and buzz. This particular stock, we've seen that, in this series so far, there has been a good amount of longs that have been built up in this stock, especially, from the second week of August till now. And there has been gradual support, which are shifting on the higher bases. On the weekly basis, it's given a Poland flag pattern formation breakout. So overall looking quite positive. Took support at its 50 daily exponential moving average and can be seen, scaling upwards since then. So recommending a buy here for a target of 5250 levels and a stop of 4900 zones. Now, the second pick on my radar is Bharti Airtel. Now, this stock has also seen a good comeback. And, although it was, moving in a very narrow range from the last 2 months, we've seen that there has been swings within. And this time it is getting ready to surpass its higher zones. The stock has, taken a good support and halted near about, 1450 odd level. So this makes a good base for this stock and onwards and upwards for, this stock here. So recommending a buy here with a target of 1580 and a stop of 1485 levels.
Shivangi, there have been plenty of high flyers in the broader markets. First Source being one of them, it was on a tear, but that stock is slightly off its peak so far, around 8% off its peak currently, and it's down today as well. What do the charts indicate? Is there a floor anytime soon on the stock here?
Talking about this stock, we've seen that there has been some sort of range-bound profit booking move in this on an immediate basis. But overall, the longer-term structure has been intact. But clearly, there is momentum which is lower on this stock. So I would recommend wait and watch for this one.
Thanks a lot, Shvangi, for joining in and filling us in with your take on the market as well as individual stocks. For the time being, though, we'll slip in a short break, come back, continue our focus on markets and stock-specific action.
Three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year. with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines. 25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter-century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube.
Investing. Welcome back. Keep an eye out on a couple of stocks in the broader markets. Indian Hotels, that stock has spiked up. Majority of the move comes in the last 45 minutes or so. Birlasoft is building onto those gains. So big up move is what we're seeing on that one as well. On the flip side, a few stocks have come off. So you have Torrent Power that's come in for some kind of profit taking now. From the Nifty, since we have come off a little bit, well, a few stocks. You have Apollo Hospitals that slipped a little bit. Adani Enterprises as well has slipped a wee bit. And BPCL, I think, as well. That as well has trended a little bit lower. But we're just nitpicking. Otherwise, the markets are looking good. We're on the verge of moving to fresh all-time highs. So what we'll do is we'll wrap up on this edition of Chartbusters. That's it from Hormuz, myself, and the entire team. You stay with us. Trading Hour comes up next.
The first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18, weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
Good morning. Welcome to Trading Hour. It's a great Monday morning. The Nifty reclaimed 25,000 as we speak. It's just shy of that. So the Nifty is now hovering with a gain of about 0.6%, 160 points higher. And Sonia, we're exactly 100 points away from that all-time high level of 25,078.
Absolutely. And, you know, so many stocks are moving around, whether you look at different themes, right? I mean, there's IT, there's banks, there's consumption names that are doing pretty well. So I think this is a really, really good-looking market. We've had large buying from domestic institutions as well in the last many days. Global cues have been very, very supportive. So all in all, the market has sort of climbed every wall of worry and now is back with big gains under our belt, about 165 points and getting better as we speak. But Alok Agarwal from Alchemy Capital Management joins us now to discuss the market fundamentals and his top sector picks. Alok, good morning and thanks a lot for joining in. You know, this is a market that has had a remarkable move in the last many weeks and months. But your thoughts on which way things are headed now, considering that we have put a big rally behind us, do you think we can build on to these gains?
Hi, good morning. We definitely think we can build on to these gains. Definitely the last 1 year was a remarkable rally on the back of sectors, especially which had not done well for a decade or so. It's good to see participation coming back from other sectors as well. India is in a uniquely positive situation, both on the growth front as well as on the balance sheet strength front. So we do believe that there is more legs to this rally. And we are hopeful and positive on the markets too.
What about IT? If you could just get a bit sector specific now. Now, IT's had a phenomenal run. Since the month of June, we've seen the IT index give a return of nearly 30%. And this is despite earnings not picking up. In fact, if anything, in the June quarter, there were a few earnings downgrade. So this outperformance of Indian IT, which has now been close to about 18 months and particularly accelerated in the last 3 months, is largely because of PE re-rating. So the question is the IT rally justified? Does it make sense to buy in at current levels or valuations are too rich?
You're absolutely right, Vima. The valuations are a little richer, especially on the sector as a whole. The index, the IT index could be trading somewhere around 28 times on a 1 year forward basis. And the estimates for the next 2 years, earnings growth stand close to 10% odd. If we divide the sector into multiple parts, the larger companies are more to do with the IT services. And these are the ones that are having a slower run rate on the growth side. But some of the software companies, some of the companies with products, those on the ER&D space, and as well as on the fintech platform space, some of those are experiencing quite a high bit of growth. So on the lower growth fronts, the higher valuations in our view is not justified. But the other ones which are actually having a higher growth rate, as well as the growth visibility, we are positive on those.
Okay. What about some of the new age platform companies, some of the consumption plays, some of the travel related stocks, whether it's the hotel names? Indian Hotels is up almost 4%. Indigo is at a fresh high. All of these new themes have done pretty well if you look at it in the last couple of weeks and months. Is there still more to go here?
Yeah, we would tend to believe so. So India as a country, the most structural theme in the country is the consumer discretionary plays. India stands at about $2,500 per capita income and are likely to double this number every 9-10 years. So it's a long runway of growth for the discretionary plays. Sometimes it is the manufacturers of those products. Sometimes it is the way those products or services are delivered. Those which can take the lead and have a very high market share and an increasing market share at a profitable balance sheet and a PL account as well, those are likely to do well. So some of the names that you mentioned, subsectors that you mentioned, they are looking pretty good, especially the ones that can come up the competition and get a thumbs up from the consumers.
So what's the way you have constructed your portfolio now? What is the weightage that you've ascribed to various sectors?
So I would say that we are more positive on the domestic cyclicals. And we have seen that this domestic cyclicals were not participating in the post-GFC era. More or less a full lost decade for them. And they're led by sectors like power, the whole value chain around there, even the real estate sector, the parts of all the capex and the manufacturing beneficiaries as well. And consumer discretion, as I mentioned, is the key overweight for a structural basis on India. But some of the sectors that were leading the rally in the past and are experiencing the slowdown in the earnings growth, those are the ones that we are underweight on.
Do you want to name them, your underweight sectors?
So the underweight on private sector banks and as well as the private sector NBFCs, also underweight on the staples and the large IT services names.
Okay, underweight on staples and large IT services names. Okay, got that. Any other themes that you'd be looking at? Because, there are so many themes which are picking up now, which is the focus area of the government as well, whether it's renewable energy, whether it's electric vehicles, whether it is a couple of other new age themes. Defense has been picking up a lot. But of course, some of these are overvalued as well. So anything else that you'd be looking at before we let you go?
In fact, you look at the power sector itself, that's one of the most surprisingly rising ones. And, it's one of the areas that government is focusing on, and rightly so. In India, we are in a unique situation. We experience our peak power demand twice a day. One is during the solar hours, and more importantly, the deficits come in the evening times. And going by the current rates, we are experiencing around 220 gigawatts kind of peak demand in the evenings. If that were to grow at about 7% over the next 5-7 years, we need to add 100 gigawatts plus kind of capacities on a PLF adjusted basis. And that's going to be quite a bit of an uphill task. The government plans to do so, and hence the capex visibility in that segment and the whole value chain beneficiaries are quite a long list. Plus, the sector that is turning around the most is the real estate sector. We are quite positive on that. That's actually showing shades of more of consumer discretionary rather than what was made out of it in the past as a construction sector. So especially the luxury and the premium segments are doing extremely well. Inventory levels at probably all-time lows, and the demand both in volume and pricing doing well actually bodes well for the sector. So power and real estate are more positive. Defense is a long haul, maybe taking a breather after a big rally in the last year or so, but the visibility on the growth side for the next decade looks pretty promising.
How long do you think the real estate upcycle will last?
I would say we are possibly at the beginning of it. It's just a year or so that we have done well. Yes, the sector has done pretty well in the last 12-18 months. But even the Nifty real estate index sector itself is below the peaks that we saw in 2007. So we do see a large amount there. The listed and the larger names are actually gaining market share. The pre-sales numbers are pretty good. And more importantly, an inventory level that used to be hovering at around 44, 45 months has come to all-time low of 12 months. So with the introduction of RERA, the introduction of GST net, and then at the same time, consolidation happening and market share being gained by the organized players, all have worked out pretty well over the last few years for the sector. Now, higher disposable income and the demand for larger space area, especially as a catalyst, which COVID did, all these things are boding well for the sector, and the numbers are pretty strong.
Okay, the numbers are pretty strong. All right, got that. Thanks a lot for joining us. And have a great week, Alok. Thanks for speaking to CNBC TV18. Let's step into a quick break. Up next, we'll discuss what's buzzing in the commodity markets with Manisha Gupta. Stay with us. Welcome back. The markets are looking pretty good at the moment. There's no denying that. It's come off a little bit from the highs, but nothing alarming. You'd have to say that things are looking quite good, and we're just 100 points away from that all-time highs. But, I just want to point out a couple of movers in terms of individual stocks at all-time highs. A lot of these names, so whether it's a Trent, Interglobe Aviation, TVS Motor, Coal India, Sun Pharma, Apollo Hospitals, all of these stocks, right, sitting at fresh highs this morning, fresh all-time highs rather, and building onto their gains. I mean, the gains today may not look like much, but these are stocks that are at fresh highs. So whether it's Coal India, whether it's Marico, look at Dixon Technology as well, hit a fresh high today. Dixon Technology now, the market cap of the company has now exceeded 81,000 crores. Dixon Technology, so big mover over there, and hit a fresh all-time high today. In the last 1 month, the gains on the stock has been about 20%, so looking pretty good. Couple of others hitting fresh highs: Voltas, Glenmark Pharma, Persistent Systems, Fortis Healthcare, all sitting at fresh highs. But Reema, you're watching NIIT today?
It's locked in an upper circuit of about 20% because last week Ramesh Damani bought 8 lakh shares. This is according to NSE's block deal data. He purchased 8 lakh shares. That's nearly 0.6% equity at 127.5. So the stock rallied on Friday, which is the day of the purchase, and it's continued with a rally today. In 2 days, Friday and today, the stock is up nearly 30%. But Ramesh Damani is not the only notable shareholder. You also have Nippon Small Cap Fund, which is more than 8% stake in the company. You've got Marathon Edge with a 3% holding. Now, if you look at the financials, NIIT Limited used to be one company where they used to do enterprise training and individual people-related training. Then they split the two businesses into NIIT Limited and NIIT Learning Solutions. So this is a company, NIIT Financials, and those numbers are up for you on your screen, where the company's revenue growth has been strong. For the last 2 quarters, year-on-year revenue growth has been about 25 to 30%, but margins for the company are very low. In fact, in the quarter gone by, the margins turned negative. Now, when they came out with the numbers and in the conference call, the company said that in Q2, revenue growth will be similar to Q1. That's a 10% quarter-on-quarter revenue growth. But margins may be slightly negative. So they're saying that we could expect low single-digit negative margins, maybe similar to what we saw in Q1 too, though margins will turn positive in Q3 and Q4. And for the full year, they're expecting a top-line growth of 380 to 400 crore rupees with low single-digit margins for the whole year. That's the guidance shared by the company. But today's excitement stems from Ramesh Damani's purchase in the stock, 20% up today and 30% in the last 2 days. But let's now go across to Manisha. She's joining in with a quick update on what's happening in the world of commodities. Manisha.
Well, thank you for that, Reema. I'm looking at currencies now, and with the US Fed Powell cementing hopes of a rate cut in the month of September, we have seen a reaction come in across asset classes, and currencies have seen a bigger chunk of that as well. So when you look at the dollar index itself, we are down at around 100.5, which is the lowest level that you've seen since the month of July in 2023. So it's a 13-month lows in that case. It also has hit a 13-month low versus the euro. If you look at the dollar index as of now, it is down by 3.6% in matter of last 1 month itself. The dollar index also has seen sharp decline when it comes to versus the pound sterling. It's trading at a 2.5-year lows versus the UK currency, and versus the Asian currencies as well, the dollar index has seen a decline. It's trading at almost a 6-year lows versus the Singapore dollar. It's trading at a 5-month lows versus the South Korean won. It also has seen a very sharp decline versus the commodity currencies. So the Canadian dollar at this point in time is trading at a 5-month highs versus the dollar index. Currencies like Australian dollar, New Zealand dollar also have surged versus the dollar index, with the dollar index now trading at around 8-month lows versus a couple of these currencies as well. The markets do believe that the dollar index as of now is oversold. 100 as a very strong psychological level should be giving some support, and the markets could see some opportunity buying from these current levels.
Okay, Manisha, thanks a lot for that. Let's do one thing. Let's take a quick commercial break. When we return, we'll discuss market technicals with Soni Patnaik of JM Financial and also discuss their top trading bets. Stay with us.
Welcome back. On Friday, the entire RP Sanjeev Goenka group held their analysts meet. So the various entities, so whether it's FirstSource, Saregama, CESC, all of them, the top management spoke to analysts, investors, and laid out the growth plans. So let's talk about each of them and what the companies had to tell the investors. So starting with FirstSource, which is the IT company. Well, FirstSource, this is an MK note from which I've picked up. The company outlined the growth strategy that focused on 7 strategic initiatives, which includes simplification of the organizational structure, cross-selling, upselling, particularly in the top 50 growth customers. They said if they execute right, it's possible to have a mid-teen revenue growth and 14% EBITDA margin. That's the aspiration over the next 3 years. For this year, FY25, the company is confident about meeting their guidance of 11.5% to 13.5% with margins of 11 to 12%. And they also reiterated their long-term guidance of $1 billion of revenue by Q4 of FY26 and expanding margins by 50 to 75 basis points annually from here on. So MK has an ad rating on the stock. Target price is now raised to 330 and they're valuing the stock at 25 times forward multiple. The stock is down today, but remember, it's up 70% year to date. And I think bulk of the gains came in the last 1 month after Shireen had that conversation with Sanjeev Goenka. So the stock has been on a tear. Today, some profit booking, but the management hit all the right notes in the analyst meet.
Okay, big moves coming in on FirstSource, but CESC is also in focus this morning after the commentary that came in from the Sanjeev Goenka Group Investor Day. Vivek is here with the details. Vivek, over to you.
Well, that's right. So all of the Sanjeev Goenka Group, Rima just spoke about FirstSource, also had Saregama, and along with them, one of the top, you could actually call it the mainstay of the entire group, was CSC. So CSC largely reiterated what they've been telling investors all along. The key takeaways as far as, this particular investor meet or analyst meet was the fact that the company said that they're looking to increase ROE by 3% from 12% at present to 15% in the future. They're also focusing on pivoting from regulatory government-operated business structure to a self-control model. They also mentioned that demand as far as the distribution arms of the company, which is both Noida as well as Kolkata distribution circles, continues to remain quite robust. They expect cash flow to improve across all of the discoms, and very importantly, something that we had highlighted earlier, the company has started what is essentially known as a fuel and power purchase adjustment surcharges to account for higher input prices. So that's something that's also aiding the recovery as far as the distribution circle is concerned. Very strong commentary coming in from the group, from the company as far as renewable energy foray is concerned. The company plans to go ahead and develop 3.2 gigawatt solar wind hybrid renewable project in the next 3 years, looking to commission 1 gigawatt by the end of this year and 1 gigawatt annually thereafter. Along with that, the company said that they have 4 gigawatt of renewable energy projects in the pipeline, foresee greater than 10 gigawatt of capacity addition in the next 6 years. So very strong renewable energy capacity addition and focusing more on self-regulated business is the key takeaway as far as CSC is concerned.
Okay, thanks a lot for that. Well, Saregama is in focus on the back of its analyst meet. The management has given a revenue growth guidance of 25 to 26% over the next 3 years. Vamakshi is joining in with all the details. Vamakshi, over to you.
Well, absolutely. Like you rightly pointed out, revenue growth guidance X of Caravan of 25 to 26% is expected over the next 3 years. Music licensing is expected to log a 23% CAGR, and this would largely be driven by improvement in margins as well as on account of leadership and scale benefits. The growth in turn would be supported by an investment of nearly 1,000 crores that they would make over the next 3 years in the new music, and this investment will in turn ensure that the company stays relevant going forward. Even the old catalogue continues to see steady growth of 10 to 12% with margins of around 75 to 80%. As far as the video segment is concerned, they said that that this segment is at a relatively nascent stage and is expected to clock a growth rate of almost 25 to 30% over the next 3 years. Margin improvement is also expected given a bigger library as well as scale, and in fact the company went ahead and said that over the next 12 to 18 months they're expecting margins at 8 to 10% from this particular segment. As far as Caravan is concerned, they say that the focus is now on generating higher margins as compared to revenue growth with the the elder generation now becoming accustomed to streaming, the life cycle of the product has now become limited. Overall, they believe that the PBT growth should be slower in the next 6 months as the company ramps up its content acquisition and integrates Pocket Aces. But after this, they're expecting the PBT growth to outpace the revenue growth. So given those factors, MK has maintained their estimates, retained a buy and given a target price of 580 per share.
Thank you very much for that. That's from the top RP, RP Sanjeev Goenka group companies. But let's talk about the market technicals and where we are headed from here on. Will we make a dash towards our all-time high levels of 25,078? Right now, we're just about 100 points away. Soni Patnaik from JM Financial Services is with us on the show. Soni, is today the day when we go to our all-time high levels? Are you sensing momentum?
Hi, good morning, Reema, Sonia. Thank you so much for having me on the show. Definitely, I think we can see a lot of aggressive put writing happening at 25,000 put option today, and it is just loitering about that level. So as long as it is holding above the 24,950 mark on intraday basis, there is a possibility that we can test 25,050. Either way, a positional play also looks strong for Nifty. It can test 25,250 to 25,400 levels in the coming days. So one can continue to accumulate these Nifty index, hold for a long with trailing stop loss of 24,800 from current levels, and a positional target of 25,400 can certainly be seen. Mostly it may happen in the next series, the first few trading days of the next series, as this is, the monthly expiry. So there could be a bit of a volatility, but certainly no panic as of now, and one can continue to hold the longs for Nifty and for Fin Nifty as well.
Okay, well, thanks a lot for that. Any individual stocks that you're looking at?
Certainly. So the first stock would be from the IT space, which is in clear good momentum today. Naukri is the stock. It has seen very aggressive fresh longs today to the tune of 14%. It has seen a very fresh option chain breakout above 7,500, and it's also a fresh breakout on charts as well. So one can accumulate Naukri at current levels of 75.10 in futures as well. Keep a stop loss of 74.20. A target of 7600, 7640 can be seen from current levels. The second pick would be from the financial space, ICICI GI, which is looking for a very strong breakout, which has come above 2100. It's a good fresh option chain breakout. So one can buy ICICI GI at current levels, keeping a strong small stop loss of 2090 and a target of 2130, 2140.
Thank you very much for that. We will slip into a very short break. But on the other side, we've got a very interesting discussion. Now, everyone's talking about India's ascent in the manufacturing ladder. And increasingly, all the manufacturing-related stocks have also done very well. But can India become as strong as China and become a manufacturing powerhouse of the world? Tanvi Gupta, the economist at UBS Securities, has done this analysis, and she joins in with her thoughts and insights.
US Vice President Kamala Harris created history when she accepted the nomination to contest the US presidential election. She's the first woman of color and the first South Asian American to become the presidential candidate. She has Indian roots. 59-year-old Kamala Harris is half Indian and half Jamaican. Her full name is Kamala Devi.
Welcome back to Trading Hour on CNBC TV18. Well, brokerage house UBS has written a report discussing India's potential to grow as a manufacturing hub and potentially replacing China as a factory to the world. Tanvi Gupta Jain, the chief economist at UBS Securities, joins us now to discuss the report further. Tanvi, hi, great to see you on CNBC TV18. Thank you so much for joining us. You know, these drawing parallels with China has been something we've been doing for almost a decade now. But where do we stand at the moment? And, you know, what has your analysis been? What's the key takeaway from your report?
Sure. So what we have done is, specifically since the pandemic, or I would say in the past couple of years, economic fortunes and outlook for China and India has been quite divergent. So you would have seen that the China's economic recovery has been weak, especially since the pandemic. Whereas if I look at my India's economic growth, that has been pretty strong so far. And if I look at China, it is facing a lot of structural challenges, including a rapidly aging population. And when we look at India, it's a relatively young and a rising labor force and a far friendlier external environment domestically, as I would say. So we have been getting a lot of questions, you know, can India be the next China? So in this report, what we did was we didn't simply say that whether India can grow rapidly over a long period of time and become as large or as rich as China today. I mean, at some point, this is not difficult to answer. With population as large as China, we are of the view that Indian economy at some point will become as big as China. But we try to give a framework on how India and China economic fortunes will pan out, especially in terms of manufacturing. Second is domestic market. And the third is as a implications for the global commodities and energy markets.
Okay. Now, I have one follow-up. You said that, you know, when you talk about a rapidly aging population in China, that's a big issue. And on the flip side, perhaps you're also looking at how a demographic dividend in India, right, is something that we could hit the peak at 2040. But there are a lot of naysayers who believe that from a demographic dividend, we could actually be staring at perhaps a demographic disaster because of the lack of jobs. At the rate at which the young population is growing and the rate of jobs is not matching up, we could be in for some trouble. Would that be something to consider in your thesis?
Okay, so let me connect with what we are trying to say and from a manufacturing point of view. So if you look at manufacturing, because that is one sector where we can create a lot of jobs, at this point, as of today, I don't see India is likely to pose any serious challenge to China's overall position. I mean, India's share in global manufacturing is 3%, China is about 30%. However, from here to next 5 years, 10 years point of view, we think India has a very potentially favorable conditions for rapid growth in manufacturing. So your abundant cheap labor, because the labor cost in India is for manufacturing is one of the lowest across EM, improving infrastructure, policies to attract foreign investment, and most importantly, is a very favorable international image right now, which India has in terms of the global audience. At the same time, I think one big quality which India has, which I don't see any other Asian economy can replicate at this point, where your demographics could actually be a boom, is a potentially a large domestic market. And when I compare India with China, we realize that India today is equivalent to China in 2006, 2007, while our per capita income is equivalent to China in 2000. And I think that will be one key for a rapid manufacturing growth in the years ahead. So I think that is something which I will see from a very potentially positive, favorable condition that could work for India in terms of a demographic dividend.
Okay. So India's domestic consumption is one factor which differentiates it from the rest of the emerging markets. You've also, in one of, as a part of your framework, you've also raised the question that will India's energy and commodity demand grow like China's did over the past 2 decades, and will it have the same impact on the global markets? Where do you stand on this, and what are the thoughts one should keep in mind?
So if you look at China's data over the last 2 decades and the way China has evolved as a part of the global manufacturing space, it has an enormous impact on global energy and commodities market. specifically over the past 2 decades. When I compare it with India, we are already a large oil importer. We are already seeing that the coal imports are also on the rise. But when I compare China and where India is, I don't see that India will see a very similar demand pattern what you saw in China in the last 2 decades. We need to realize that even our GDP compositions are very different. India is largely a services-driven economy with more than 50% share in services as a part of our GDP. Manufacturing share as of now is only 13%. So even if we expect that 13 goes to 25%, we don't see that the growth is unlikely will be as capital and energy intensive what you saw in the case of China. And at the same time, India's own resource availability and a different urbanization pattern also means that the country is unlikely to follow China's past path of imports of base metals, especially iron ore.
Economists also make forecasts, right? You all look far into the future, even though it's extremely hard to do that. So give us the numbers that you have in your mathematical model. You said India's share of manufacturing in the world is just about 3%, while China is at more than 30%. Now, how does that change, say, in the next 10 years? Do you have any number to that? And also, what can go wrong to this thesis? Because you spoke about many factors which are aiding it, favorable regulations, India is constantly upgrading its infrastructure, but there is also a possibility that China may, on the regulatory front, maybe change the game.
Absolutely. So if I look at from a base case, so 3% right now is India's global manufacturing share. We think it can clearly double over the next 1 decade. But there are a lot of risks which could hold back India from becoming the next China. And I think the first and the most important is the infrastructure bottleneck, especially the last mile connectivity and a very unstable power supply. At the same time, while we have a very young population, labor productivity is another big concern. And the third will be the regulatory laggards. I think these are the 3 big, bottlenecks that India will definitely need to work upon to boost manufacturing. I mean, we are seeing some progress in land acquisition, even though it is slow, but it still continues to be a hindrance for large-scale infrastructure developments. India is working on reaching free trade agreements with several countries that could actually help in boosting export potential over the next 1 decade. So I would say there are a lot of leads, plus there are a lot of laggards, and we need a good balance on both that counts and a lot of policy intervention in helping India go to that path what China saw in the last 2 decades.
Okay, a lot of work needs to be done. Thanks a lot for joining in. I appreciate your time here on CNBC TV18. Let's step into a quick break. On the other side, we'll get you more on the markets. Markets are doing very well at the moment. Hopefully, the trend will continue. More on that coming up.
Of Shyamala Gopalan Harris, a biologist from India, and Donald J. Harris, an economist from Jamaica. Kamala Harris's mother is from Thulasendrapuram, a small village in Thiruvallur district of Tamil Nadu. Shyamala Gopalan, a cancer researcher, had migrated to the US in 1958 and graduated from the University of California, Berkeley. She met her husband, Donald J. Harris, at the university, and the two got married in 1963. Kamala Harris has a sister, Maya, who was seen at the Democrat National Convention as well. Now, throughout her campaign ahead of the 2020 presidential election, and even now in the run-up to the 2024 presidential election, Kamala Harris has spoken about the profound impact her mother had on her life.
My mother, our mother, Shyamala Harris, had one of her own, and I miss her every day, and especially right now. And I know she's looking down smiling.
Kamala further said that after finishing her graduation in the United States, her mother was going to return home to India. But she met her father, Donald J. Harris, fell in love and got married. The Democrat nominee described her mother as a tough, courageous trailblazer in a fight for women's health. Harris said that her mother taught her to never complain about injustice, but do something about it. Dr. Shyamala Gopalan Harris died in 2009, a year before Kamala Harris was elected as California's Attorney General. In the past, Kamala Harris has often said that India was a very important part of her life, and her mother would take her to India pretty much every year. Those trips to Chennai helped her to understand where she came from. She got to spend time with her grandparents, with her uncle and her chitties or aunts, and got to understand the love of a good idli. Kamala Harris's grandfather was a civil servant who participated in India's freedom struggle against the British. Her mother, Shamla, herself participated in the civil rights movement in the United States. In the small village of Thulasendrapuram in Tamil Nadu, where Kamala Harris's mother grew up, a set of people have been praying for Kamala Harris to win the presidential election. They hope Kamala Harris will one day visit the village and do something for their community.
Overall, the economy continues to grow at a solid pace, but the inflation and labor market data show an evolving situation. The upside risks to inflation have diminished, and the downside risks to employment have increased. As we highlighted in our last FOMC statement, we are attentive to the risks to both sides of our dual mandate. The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. We will do everything we can to support a strong labor market as we make further progress toward price stability. With an appropriate dialing back of policy restraint, there is good reason to think that the economy will get back to 2% inflation while investing.
Welcome back. The Nifty is back above 25,000. It was at 25,043 at about 10 o'clock. But after that, there was a little bit of a dip below that level, that key level that market participants are watching. And now we've managed to climb back above that. Some of the stocks which have moved in the last 10 minutes, Tata Consumer, Bajaj Finserv, Hindalco, HCL Tech, ONGC too is now up close to about 2.5%. So these are stocks which catch your attention. IT, of course, has done bulk of the heavy lifting today. The Nifty IT index itself is up 1.5%. And, names like Wipro, HCL Tech are also inching up. In fact, there's a very interesting note which has come out, which is written by Jefferies on the IT sector, where they talk about Indian IT's outperformance. Now, Indian IT has been outperforming for the last 1.5 years now. The outperformance began in 2023, where the Nifty IT outperformed the Nifty by about 4 percentage points. The Nifty IT went up 24%, while the Nifty was up 20%. And that has continued in 2024 so far, with the Nifty IT index up 17%, while the Nifty is up 15%. So it's been about 18 months of outperformance, and this outperformance is despite earnings cut. So Jefferies has done analysis. If you look at the calendar year 2026 EPS estimates, except for TCS, for all the others, it's come down. And for some of them, it's as high, particularly on the mid-cap end, it's as high as 12 or 13% for Tech Mahindra, Coforge, LTI Mindtree. We're talking about EPS cuts of about 10 to 15%. So this up move that started, in 2023 for the IT names and accelerated and gathered steam in the last 3 months is largely led by PE re-rating. It's not led by earnings upgrades on hopes of a sharp growth recovery. So they say that the Nifty IT 16% year-to-date rally is driven by an 11% increase in the forward PE multiple. Also, there are now divergent trends between Indian IT companies and Accenture. So Indian IT is trading at a premium to its historical average, last 5-year average, which takes into account the COVID years and the bumper COVID years. But Accenture is now trading at a discount to Indian IT companies. So according to Jefferies, valuations today are rich. The Nifty IT is trading at 29 times multiple. It's a 40% premium to Nifty versus an average premium of 23%, making the valuations rich. And therefore, Jefferies would choose to be selective on the sector, and they would prefer Infosys and TCS because there are limited risks to earnings growth and there is relative valuation comfort. So this outperformance is driven purely on PE re-rating, and this is despite there having been earnings cuts.
Okay, well, moving on, Zydus Life is buzzing after Teva has got the US FDA approval for a generic drug used for ulcerative colitis. Ekta has more details on all of that. Ekta, over to you.
Well, yes, Zydus is in focus because Teva has received US FDA approval for Asacol HD, which is basically a drug which is used for ulcerative colitis. So they've received the approval for the generic version of it. Now, the likes of Jefferies has written on it. They said that the product accounted for 3 to 4% of Zydus's revenue and 8 to 10% of their EBITDA in FY24. They assume that the product contribution will drop to less than 1% of revenue for Zydus and less than 3% of EBITDA in FY26. The sharp decline in earnings from new entrants in Asacol HD has, however, reduced, according to them, because there are recent launches such as Mirabegron generic, which is useful for Zydus. It will be very beneficial for Zydus according to a lot of analysts, and increasing contribution from the cancer drug Revlimid generic. Additionally, Zydus is in focus because they're going to be buying 50% in Sterling Biotech for 550 crores. It's one of the leading producers of pharma gelatin. FY24 revenue 455 crores. Sterling Biotech, remember, was acquired under NCLT, but at that time the valuations were almost half of what it's valued at a 100% level now. At around 1100 crores is what it's valued at. It was valued at over 600 crores when it was bought in NCLT. So the street is waiting to see whether it will be earnings accretive for Zydus and by when. Post-acquisition, Sterling Biotech will become a joint venture between the buyer, which is Zydus, as well as the seller, which is the private equity firms that had bought it under NCLT in 2022.
Thank you very much for that sharp cut in Zydus Life, down 5%. Let's also get you some index-related updates. Now, BEL and Trend will be entering the Nifty 50 from the 30th of September. The FTSE semi-annual index review will also come into effect from the 23rd of September. Vivek joins in with the details. Vivek.
Well, that's right. All through Friday, we had intimated to you about how exactly, the index constituents or the index subcommittee was meeting to go ahead and make changes as far as the various NSE indices were concerned, and we also hinted about which were the likely inclusions as well as exclusions. So largely in line with what the street was anticipating and what analysts had penciled in. Bharat Electronics and Trend have come into the Nifty at the expense of Divi's Labs and LTI Mindtree. These adjustments will take place on September 27th, and the changes will be effective from the next working day. So what could be the impact from passive funds on the back of this particular development? Number one, Bharat Electronics could see inflows of a little over $450 million, Trend inflows of over $640 million. Divi's Labs could see outflows of over $260 million, and LTI Mindtree could see outflows of over $220 million. Now coming to the Nifty Bank Index, again over here, Canara Bank has displaced Bandhan Bank. Canara Bank will see inflows of almost $79 million. Bandhan Bank will see outflows of almost $40 million. Now coming to FTSE, again, FTSE post-market hours on Friday went ahead and announced the semi-annual index review. A lot of additions made from India, no deletions this time around. 13 additions to the FTSE all-world index. A lot of additions as far as the all-cap index is concerned. Talking about the all-world index, the rebalance will lead to net flows, inflows of almost $1 billion. Adjustments will be made on September 20th, 2024, effective September 23rd, 2024. Key names, almost 30 names coming in. Some of the key names and names that are buzzing today, look at names like Central Bank, Cochin Shipyard, Endurance Technologies, Escorts Cobalt are one name that's really buzzing today. Motilal Oswal Financial Services, expect to see inflows of almost $20 million over there. Additionally, like we mentioned, FTSE has announced almost 48 additions as far as the all-cap index is concerned. So a lot of inflows coming in, and India getting its weight higher in each of the passive indices, especially MSCI as well as FTSE.
Okay, thanks a lot for that, Vivek. Well, moving on to the latest on the newly approved Unified Pension Scheme. The government has clarified on the additional costs of the new scheme and has also reiterated the fiscal impact of the scheme. Sapna is here to tell us more on that. Sapna, over to you.
Yeah, hi. So, we have actually just spoken to the chairman of the pension panel that was there earlier, Mr. D.V. Somnathan, and he has very clearly reiterated that whatever is the additionality that the government is talking about in terms of the 6,250 odd crores plus 800 crores in terms of the earners, that's all inclusive in this 18.5% prospective contribution that the GOI will be doing for the next financial year onwards. Which means that, currently, whenever the NPS universe or the NPS employees under NPS shift to the UPS, that additional cost has already been factored into this 18.5% calculation. In a nutshell, that's what the government is trying to indicate, and they have reiterated this number. It was duly and amply explained on Saturday in the press briefing after the Union Cabinet had cleared the proposal. And the same is coming through Mr. Somnathan now. Going forward also, they are very clear that this is a one-time impact in the sense that this is the kind of cost that will be borne in the first year of the rollout of the UPS. And after that, there could be some changes depending on how many new employees come in and how the scheme actually pans out. So I'll just kind of give me a minute. So I'll just reiterate what he's actually told us. The 18.5% prospective contribution already includes the cost for existing staff who are within the NPS. The amount required for the earlier years for the staff already in the scheme is already factored into this 18.5% calculation. The fiscal impact in 1 year will be around 6250 crores plus 800 crore arrears for those who have already retired in the past and who are not included in the 18.5% calculation. There will be no other cost or one-time impact apart from this.
Thank you very much for that. There are lots of pockets and themes doing well in the broader markets. So one of them is the entire brokerage theme. So Edelweiss Financial Services has a big gain going for itself. You also have JM Financial. Motilal Oswal on large volumes is up nearly 9%. So that's looking up. Honasa is a big mover on very large volumes. So Honasa is up nearly 12% today. Midcap IT, the names which catch your attention, it's Quick Heal, 14% up. Birla Soft, a 5.5% gain. Tata Elxsi has moved up 3%. Persistent, which has been such a rank outperformer, also continues to rally. Persistent Systems is up 95% in the last 1 year. And if you pull up a 3-year chart, a 2-year chart, you would see the kind of re-rating Persistent Systems has seen. And that stock continues to see buying. So IT is very strong. The advanced decline ratio is firmly skewed in favor of the stocks which are gaining today. We'll get into a break. We'll come back with more on the markets.
Strong labor market. The current level of our policy rate gives us ample room to respond to any risks we may face, including the risk of unwelcome further weakening in labor market conditions. Pandemic-related distortions to supply and demand, as well as severe shocks to energy and commodity markets, were important drivers of high inflation, and their reversal has been a key part of the story of its decline. The unwinding of these factors took much longer than expected, but ultimately played a large role in the subsequent disinflation. Our restrictive monetary policy contributed to a moderation in aggregate demand, which combined with improvements in aggregate supply to reduce inflationary pressures, while allowing growth to continue at a healthy pace. As labor demand also moderated, the historically high level of vacancies relative to unemployment has normalized primarily through a decline in vacancies, without sizable and disruptive layoffs, bringing the labor market to a state where it is no longer a source of inflationary pressures. An important takeaway from recent experience is that anchored inflation expectations, reinforced by vigorous central bank actions, can facilitate disinflation without the need for slack. This narrative attributes much of the increase in inflation to an extraordinary collision between overheated and temporarily distorted demand and constrained supply. While researchers differ in their approaches and to some extent in their conclusions, a consensus seems to be emerging, which I see as attributing most of the rise in inflation to this collision. All told, the healing from pandemic distortions, our efforts to moderate aggregate demand, and the anchoring of expectations have worked together to put inflation on what increasingly appears to be a sustainable path to our 2% objective. Disinflation while preserving labor market strength is only possible with anchored inflation expectations, which reflect the public's confidence that the central bank will bring about 2% inflation over time.
Welcome back to Trading Hour on CNBC TV18. Well, in his much-awaited keynote address at the Fed's annual retreat in Jackson Hole, Fed Reserve Chair Jerome Powell said that it is time to adjust the policy rates. He added that the timing and pace of the rate cuts will depend on the incoming data, evolving outlook and balance of risks. CNBC's Steve Leisman joins us with the key highlights.
After 2.5 years of fighting inflation, Fed Chair Jay Powell took to the podium here at the Jackson Hole Annual Conference on Monetary Policy, and he laid down a new marker on policy, declaring now is the time to adjust policy downward.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
Powell suggested the Fed, with timely adjustments to policy, could stick that so-called soft landing, saying the Fed could get back to the 2% inflation target with a still strong job market. Those comments on the direction of policy and the outlook for a soft landing helped stocks and bonds. You can see the 2-year there fell. The dollar was weaker. All of that suggesting, like I just was saying to Dom, that maybe the market wasn't fully prepared for a really declarative statement about the direction of policy here that was maybe less hedged than people were thinking. Powell did not, however, specify the pace or the extent of rate cuts, though we did say multiple cuts were coming. So what do you watch now? Well, look for further job market weakness to determine, is that going to be a 25 or 50? Inflation does need to be continuing downward. I don't hear the Fed coming off of that 2% target, so it's still some work to do there. It's got to continue that. And you look for an economy around potential. Any weakness in the economy could make the Fed be more aggressive. Now,
Okay, as Fed Chair Powell said, we need to be careful of the employment side of the mandate, said the Chicago Fed President Austin Goolsbee. He adds that the inflation is on the path to 2%. Listen in.
I think the general notion that we want to be careful, as Chair Powell said, about the employment side of the mandate, too. We're not just fighting inflation now. Inflation's on a path to 2%. I totally agree with it. I still think, not just for this meeting, over the next calendar year, let's say, I think it's worth looking at the statement of economic projections that the committee has been putting out every 3 months. In those statements, there's widespread agreement that there will be multiple rate cuts over calendar years 24 and 25. Inflation would be coming down, and the unemployment rate would be creeping up a bit and settling in.
Okay, let's also listen into what market experts have to say about the Fed Chair Jerome Powell's speech and its impact on the overall U.S. market.
I liked the speech overall, and I think it reinforced messages that had been delivered that September is very much the time to look for the next move. I think at this stage the odds are much more towards 25. I know the market might be leaning a bit more towards 50, but this situation is not, getting out of hand. He observed that while unemployment has gone up, it is still at normal levels. So while he doesn't want to see it worsen, I don't think he feels the necessity to move dramatically. So I would suggest and expect a series of 25s is the most likely outcome at this stage.
Essentially, this was a valedictory of essentially Chair Powell turning the page, saying the mission, which has been focused on inflation for the last 2 years, has been successful, and that we are there, and that going forward, the mission is going to be maximizing full employment. He doesn't want to see any further weakness. My base case scenario is that we are on a journey of 25 basis point cuts, probably for the next 8 meetings, a couple hundred basis points cumulative. So that's my base case. But if we see weaker growth, and particularly weaker jobs, then I think we could have a bit of front loading and start the process with 50 basis point cuts.
He likes to give straightforward discussions, and his Jackson Hole speeches have tended to be much shorter rather than much longer. And in the past, he made it clear they made inflation #1 priority. Now he has clear that worrying about the downside risk of the economy is his #1 priority. He didn't quite say the all clear on inflation, but came pretty close to saying that, and said that's why he's comfortable and starting to focus on the employment situation. I don't think they're going to start with 50. If they started with 50, that's kind of an admission that something went wrong, something's problematic. I mean, if the the employment report at the beginning of September is wildly disastrous, sure, but I don't think so. I think that they'll start gradually and then pick up pace if the labor market weakens.
Well, with that, it's a wrap on Trading Hour. We enjoyed the show. Thank you very much for watching. Stay tuned. Halftime Report is up next.
Almost 20,000 crores of block deals done, and it looks like it's only the promoters and the private equity which are laughing their way to the bank. Look at today's 4 large block deals itself. The largest was Ambuja Cement. The parent Adani promoters sold nearly 3% equity, and they've raised close to 4,250 crores. Tata Technologies was another large block, 2.5% equity got changed hands in a deal worth 1,000 crores. Nykaa saw a large block in the morning trade of 1.4% equity, and the entities raised close to 800 crores. And GMR Airport saw a large block of 1 crore shares, and they raised close to 500 crores. So this was today's large block. But look at even yesterday, there were some large block deals. The biggest of them was Kalyan Jewellers. The Warburg Pincus, the private equity has completely cleaned out. They sold 6.5% in a block deal, and they've raised close to 3,500 crores. The other large block was PNB Housing. 3% equity sold by the private equity, and they've raised close to 1,032 crores. There were other small block deals as well. Some like Eris Life saw a large block of 7.5%. Deal worth close to 1,200 crores, and even Alchem Lab saw a deal where the promoters sold and raised close to 500 crore rupees. As I said, PNB Housing saw another large block deal today, 5% sold by another private equity investor, General Atlantic, and they raised close to 1,200 crores. And even there was a big deal from Zomato beginning of the week where Ant Investments sold and raised close to 5,400 crores. So big week in terms of block deals, 20,000 crores. But my sense is this momentum is only likely to continue, and you may see much more larger deals in the days to come.
The jewelry sector in India, of course, is comprising of a lot of the others and the leader itself. The leader is Titan. We are talking about that, and we're talking about how the others have panned. So if you look at Titan's stock price move over the last 6 months, it's actually negative versus Kalyan Jewellers at 57%, Senco at 36% as well. Last 1 year, Titan's up 17%, Kalyan Jewellers up along with Senco up nearly 160 to 170% as well. And you expand the time horizon. 2 years, Titan's up 48%, Kalyan Jewellers.
US Federal Reserve Chairman Jerome Powell sparks an equity rally with his comments on the Jackson Hole Symposium suggesting rate cuts ahead. IT and consumer durables are the big gainers, even as capital goods and realty lag in trade.
Crude oil gains after Israel and Hezbollah exchange missile fire, and a proposed peace deal between Israel and Gaza falls apart. Commodities also get a fillip from the Fed's indication on easing monetary policy going ahead.
And Zydus Life Sciences dips after its global peer Teva gets a nod from the US FDA to launch a generic that it was the sole supplier of. The promising acquisition of the 50% stake in Sterling Biotech fails to offset this concern.
The centre unveils the new unified pension scheme for government employees that offers high assured payouts and allows subscribers to shift from the national pension scheme. UPS can spell an additional 6,250 crores spent in the first year, with an additional 800 crores towards arrears for those already retired. Hello and welcome to Halftime Report. I'm Ekta Batra, and with me is Nigel D'Souza today. Well, it's turning out to be a session where we really can't complain. Maybe we were expecting more in terms of a rally, but we can't complain considering that the Nifty scaled 25,000. We have the advanced decline ratio, which is positive at this point in time, and around 355 stocks, which are at fresh 52-week highs. So it seems as though the internals, the statistics look good at this point in time for the markets, not to mention that we do have the mid-cap index, which is up around 0.4%.
Well, that's right. We'll talk more about markets in just a bit. But for the time being, let's get you a CNBC TV18 exclusive. My colleague, Parikshit Luthra, is sitting by with Rajiv Bajaj, CEO of Bajaj Auto. Parikshit, take it away.
Bajaj Auto, India's largest exporter of two-wheelers, has had a strong Q1 performance. The maker of the iconic Pulsar brand of motorcycles, KTM, Triumph, Husqvarna, and a market leader in the three-wheeler segment with a 78% market share, is ramping up its clean energy portfolio. With the aim to drive growth over the next 10 years and making the company future-ready, the company is preparing a diverse portfolio of electric, CNG, flex fuel, and other alternate fuel vehicles. Bajaj Auto is among the top 3 in the electric two-wheeler market and a has a plan to increase production and sale of the Chetak scooter. The company hopes the Freedom 125 CNG bike could help increase market share in the 100 to 125cc segment. Also on the cards is an e-rickshaw, ethanol and hydrogen bikes and a twin-cylinder motorcycle in future as well. Joining us now to talk about the company's growth strategy is the company's Managing Director, Rajiv Bajaj. Mr. Bajaj, thank you very much for joining us. The company has been an outperformer in calendar year 2024, surging 50% compared to the 12% rise in the BSE Sensex. If we speak about the stock, what do you think is working in favor of the company right now? Do you feel with all the disruptions behind, you've managed to put together a strong clean energy vehicle pipeline for the future, and this is something that you'll focus on for sustained growth?
The reasons that I just heard you mention, but in one word, I would like to think it is because of this company's ability to adapt. You know, Charles Darwin said it's not the strongest or the most intelligent of the species that survives, but the ones that are most adaptive to change. And if you look at what's happened to Bajaj Auto in the last 25 years, it has demonstrated an outstanding ability to adapt. First, to adapt from being a domestic player to a global player. As you're aware, we now export about half of what we make to exactly 100 countries. Then came the transition. We adapted from being a scooter-centric company to becoming a motorcycle-centric company. And I would like to believe that it is that strategy which led us last year to become the world's most valuable 2- and 3-wheeler company in terms of market cap. And that has been only growing, as you just mentioned. And finally, to adapt from being a ICE company to also being a clean energy company. And in that context, I must share with you that we stand on the cusp of a very great milestone for us, which is that as we head into the festive season in the months of September, October, November, we are very likely to cross a monthly sales production and sales rate of over 100,000 clean energy 2-wheelers and 3-wheelers. So it's a great time for us.
All right, so 100,000. Are you expecting to reach this by September end or October?
We're going to try for September because, as you know, the season starts in October. So we're going to try for September. But we may fall a little short. We don't know. We are going to try our best in September. But surely, sometime over the course of the festive season, we will definitely get there.
All right. Give us also a sense, how do you expect your clean energy portfolio to contribute to total revenues in FY25 and by FY30?
Okay. So FY30, it's a little too distant in the murky future. But I'll tell you where we stand right now. So in September, for example, we see a sales requirement of a shade under 500,000 vehicles, of which, as I said, almost 100,000, if not a little more, would be clean energy vehicles. So, in volume terms, that's a little more than 20%. And because CNG vehicles and EVs are significantly more expensive than their corresponding ICE vehicles, so I don't know the number, but I would hazard that definitely over 25% of our current revenue is already coming from or about to come from clean energy vehicles, which is quite remarkable. I can put a little more color on that for you. We are looking at, for example, 20,000 of the newly launched Freedom, the world's first CNG motorcycle. We are going to do our best to get closer to 30,000 Chetaks. Easier said than done, because it was only last month that we crossed 20,000 for the first time. We are a very, very strong player in the CNG 3-wheeler market with over 80% share of that. So over 40,000 CNG 3-wheelers should head out next month. And we are very pleased with our success of the electric 3-wheeler, of which we will try to make closer to 6,000 or a little more next month. So if you add that all up, it tells you that the split between 2-wheelers and 3-wheelers is about 50-50. The split between EV and CNG is also close to 50-50. And altogether, it's a cumulative 100,000 vehicles a month, about 25% of our revenue.
All right, 25% of our revenue. And clearly, FY25, you would end at more than that.
I think so. I think we see very solid traction across all of these segments. As soon as we can increase capacity, which is something we are discussing internally, we should do even better towards the end of the year.
Okay. Now, you had over 13,000 bookings for the Freedom 125 CNG motorcycle when we last checked about 2 weeks ago. What is the current production ramp-up plan for the Freedom motorcycle?
Last month we did about 2,000 vehicles. It was the first month of introduction. This month our goal was to do 10,000 vehicles, but due to some part shortages, I think we will be somewhere between 8,000 and 9,000 vehicles, the last I heard last week, which I still think is very good for what is practically the first full month of production after launch. As I just finished saying, we are going to hope to push that to 20,000 vehicles next month. And Rakesh just gave us clearance to expand to 40,000 vehicles. So I think by January, if not before, we should be headed to about 40,000 per month of this wonderful motorcycle.
All right, great to hear. So 40,000 by January next year is what you're looking at. Now, considering that the numbers are encouraging and you are receiving strong response to the Freedom 125 CNG motorcycle, could we expect you to launch more CNG models in the near future, maybe prepone the launch plans?
Well, yes and no. Yes, because we do have another CNG motorcycle due shortly. I can say within this financial year, sometime in the second half of this financial year. But at the same time, I would hasten to add, Parikshit, if you look at the stellar successes of brands in the last 30 years, the brands that really stand out are those like Hero Splendor, Honda's Activa and Shine, our own Pulsar and our three-wheeler, Royal Enfield's Classic. So you would see that, they really demonstrate the wisdom of less being more. So it's not about really spraying and praying after putting a lot of SKUs out there. It is about choosing your battles very carefully, being very focused in your understanding of what the customer wants, which the competition cannot easily provide at the moment, and then making that introduction as effectively as possible. So while we will have another bike coming in shortly, but I think the Freedom 125 that is currently in the marketplace, from all that I've heard in the last 6 weeks since launch, that really has the legs to go all the way to 40,000 a month, if not beyond.
All right. Now, you have previously said that the 100 to 125cc segment is a 5 lakh per month addressable market. You are targeting this with the Freedom 125. Maybe you'll have another CNG. How do you expect your market share in this segment to specifically go up?
It's very difficult to say because market share depends on what competition also does. But I would add that, it's not just the 5 lakh commuter motorcycles which are in the 100cc space. Everything that's also in the 125 space, some of the 150cc space, and also some people who are buying scooters, I'm sure are looking at this. So, I think the Freedom addresses a space of about maybe 700,000 two-wheelers every month. And if we were to hit 40,000, and if most of that were to be incremental sales, which I think would be the case because, we are a very weak number 2 player in the commuter motorcycle space. So if we assume that most of our gains will be incremental, then 40,000 vehicles on a motorcycle industry size that is typically 900,000 in a normal month, is about 5% share. So logically, from a mathematical point of view, at least, our share should grow by 5%.
Right. Now, you had also hinted to us earlier that CNG is not the only portfolio that you're working on. There is an ethanol or a flex fuel motorcycle, a hydrogen motorcycle that you're also working on for future. Any timeline that you could give us as to what we can expect next, considering that clean energy is a focus area for Bajaj Auto?
Well, clearly, between the two, ethanol will come first. We have always been very encouraged by Mr. Gadkari's emphasis on this fuel. And next month, along with other players from the industry, we will be showcasing our ethanol motorcycle and three-wheeler in Delhi. And I think within this financial year, we will be ready to launch these products. Hydrogen is obviously, as you can imagine, still in the works as far as R&D is concerned. So Joe's working on that, but one day soon, why not?
All right, so hydrogen is being worked on. So what will be the launch timeline for the ethanol motorcycle and the ethanol three-wheeler, sir?
As I said, within this financial year. I don't know it any more precisely than that, but I would think within this financial year.
Okay. Now, speaking about Chetak Electric Mobility, you had a 12% market share in Q1 in the electric two-wheeler segment. You are a strong number 3 right now. How much of this is coming from the sub 1 lakh Chetak EV?
So, Parikshit, actually, if you look at the, you're right about what you said about the first quarter, but if you look at the Vahan data for July and for August, you will see that Chetak is now close to about 18% market share, or just above 18% market share. We are neck to neck with our able competitor TVS and their iQube. I think just a few hundred vehicles separate us in terms of Vahan sales. And I think we are both growing very nicely at the expense of Ola. It's no secret. There was a report out recently. Ola's share is down from close to 50 to close to 30%. So Chetak's doing really well, both because we've expanded the product portfolio nicely and also the distribution network. As far as the price is concerned, actually from a consumer point of view, there is no sub 1 lakh Chetak because we have a SKU that we sell at an ex-showroom price of about 95,000-96,000 in some states of the country. But when you add up all the extras, including the GST, etc., that goes on top of that, it's over 1 lakh rupees. But yes, there is something that is close to that price point. I'm not going to tell you what our mix constitutes because I would say that's a little competitively sensitive. But let me say that we sell a lot also of the more expensive Chetaks. I think that's a reflection of the very strong brand value of the brand Chetak, as also some of the USPs of the product. First and foremost, it's the only all steel and therefore the most durable electric scooter, I would like to believe, in the marketplace. So it's a very well-balanced portfolio right now.
Right. Now, as the space is growing fast and this is the festive season, how soon can we expect more electric scooter launches, either in the affordable or in the premium segment from Bajaj Auto?
We will have launches at both ends of the market that you mentioned, because there are consumers at both ends of the market. And at the same time, we also, we need to keep the higher end going from a brand point of view. But also for the scale, we need the products at the more competitive price point also. So having just launched a third product, there are more due later this year, within this financial year. We talked about it the last time we met a couple of months back. And I think post the festive season and before March, certainly there will be more Chetaks in the marketplace. And I could reiterate what I shared with you the last time, that not only will there be more Chetaks in the market of the current platform, hopefully very sharply positioned, but there will also be a new Chetak platform that I had mentioned to you when we met the last time, and that should be out early in the next financial year.
All right, so good to hear that. There will be one completely ground-up new Chetak electric scooter in the early part of next year. Now, speaking about electric motorcycles, Royal Enfield has already declared, it's in public domain, that they will be launching an electric motorcycle. Ultraviolet, Revolt have electric motorcycles in the market. Ola plans to launch them as well. Now, considering that the market is going to come up with these electric motorcycles, what is your thought on bringing one to market?
Well, I'm going to take 2 steps back and tell you the big picture as we see it, Parikshit. 30 years ago, 70% of the Indian two-wheeler market was scooters. And that is when this company started to place its bets on motorcycles. It was a very counterintuitive choice. A lot of people scoffed at it. A lot of people laughed it off. A lot of people were critical of it and are still critical of it. But, it has stood us well. It has paid off. And what is it that moved the needle from the market being 70% scooters to becoming 65% motorcycles? One simple metric, which was that the 100cc motorcycle was 50% more fuel efficient than the 100cc scooter on account of its transmission, which is much more efficient than that of the automatic transmission of the scooter. But now when you come to the EV world, and if you have the same drivetrain, which means primarily the same battery and the same motor, in a scooter form factor and a motorcycle form factor, you will actually get the same performance. You will get the same speed, you will get the same range, you will have the same charging time requirement, etc. So that very big advantage that the motorcycle had over the scooter in an ICE format is now gone. And the other strengths of the scooter, in terms of all the comfort and convenience that it offers as a form factor, over the motorcycle will come to the fore. So, if I sit here and tell you today that I am imagining that India will go back to becoming a 70% scooter market, you would be inclined to laugh me off, as perhaps your predecessor did 30 years ago. And hopefully, I would be right a second time around. So the short story is that as a company, we strongly believe that, while scooters and motorcycles will both be popular, scooters in the electric format hold far greater potential than do motorcycles. That's why, there's nothing ultra about the sale of ultraviolet. It's 5 or 10 motorcycles a month, I believe. And there is no revolution that revolt has caused. As for Ola, as always, we will see what happens when they are in the marketplace. So we are staying very focused on EV scooters now. That's the short answer.
All right. So you're saying that they have more potential and greater technology advantage over motorcycles as well. Now, when do you expect to become profitable with your electric vehicle segment, Mr. Bajaj? Because you're one of those who have been very candid at EVs losing money. So when it comes to the path for profitability, how far are you?
What would be your guess, Parikshit?
I leave it to you.
Let me tell you, yesterday. And that's really a great place to be. So not only is our revenue growing to a very significant level, but if I take our, not just our clean energy portfolio, which includes both CNG and electric, that's of course very profitable, as you can imagine. But if I were to take only our electric portfolio, and in that I include the little vehicles we make for Yulu, our associate company out of Bangalore, the leader in micro mobility in this country. I include all the Chetaks that we make and the electric three-wheeler that I mentioned. I was actually surprised to understand from our CFO Dinesh last month that portfolio is already profitable. Of course, with help from EMPS and FAME and PLI and whatever. I'm not even sure we have PLI factored in as yet, because we just received certification last week for all of our applications. But that portfolio is already positive. Now, obviously, every SKU there is not positive, but that's okay. That happens in an ICE portfolio also. We have SKUs out there in the domestic market, in some of our African markets, which are still not profitable. So that's fine. But as a total portfolio, not just our clean energy portfolio, but our EV portfolio is already positive.
All right. That's good to hear, sir, that your EV portfolio is already profitable. Now, speaking about the three-wheeler segment specifically, you've got a strong 78% market share as per the Q1 earnings call. From a 26% market share in the E3-wheeler segment, how do you expect to grow the market share in the E3-wheeler segment? Are there more launches expected?
Well, we expect to grow it the way we've been growing it in the last 15 months since launch. As you're aware, a couple of our major competitors have been in the market for about 3 or 4 years. we ourselves entered the E3-wheeler market with the auto and the cargo variants. Only last May, we made a small beginning starting from Agra. And I was very pleasantly surprised again to learn around 20th of August when we met for a review that the Vahan data for August shows that Bajaj has actually become the market leader in the E3-wheeler segment, by which, again, I must clarify, I mean e-auto and e-cargo. I'm not including the e-rickshaw because we don't participate in that market, at least at the moment. So our market share, if I remember right, was about 36%, is what our president of the business, Samar, informed us. And, I was, as I said, delighted and surprised at the same time because I didn't know that we had done that well. And then I understood also that in markets that we have launched for over 3 months, our share is very often 50% or above. So our goal is very clear, Parikshit, that as you said, with the ICE three-wheeler business, our market share is about 80%. And we love that. And that is where we would like to be headed with the electric three-wheeler. Whether we'll make it there, we don't know. But our goal is 80% market share.
All right. And in terms of more partnerships, more acquisitions, you have collaborated with global companies such as Triumph, KTM, Kawasaki in the past. Now, would you be looking at certain partnerships, more such partnerships, either in the three-wheeler segment or in motorcycles or scooters?
You always manage to get me to say things that I should not be saying. But I will say this, that again, it's a case of less is more. So one has to think through these things very carefully and be very selective. But definitely, we are discussing amongst ourselves the possibility of something in what can be broadly called urban mobility. Because as we go forward and the world needs certainly in its major cities, if not elsewhere, more sustainable mobility. So I think we may have an opportunity for a very meaningful global partnership in that area. But it's early days. I shouldn't even be talking about it. But since it's you, I'm going to mention this, but don't make me say any more.
All right, sir. So we'll move on from that. Now, considering the demand for GST reduction on CNG two-wheelers, this is something that you have been speaking about. There is a big debate on taxation on hybrid cars and reduction on GST on CNG two-wheelers. What is your hope right now?
Well, I would like to say I am hopeful because SIAM as a industry association has submitted a request to the government, to the MHI, etc., for a reconsideration of GST on CNG two-wheelers. And let me elaborate for a minute on this, Parikshit. CNG three-wheelers already exist, and I don't think we need any reconsideration there because with a three-wheeler, it's driven for between 100 and 200 kilometers a day. So the OPEX is so favorable that the payback period is really attractive. With cars, CNG cars are also very popular, I'm sure you know. I'm told in Pune, for example, 30% of cars registered every month are CNG. And with cars, what happens is the capex that is imposed, additional capex imposed on the customer is about 5-7%. Whereas with the two-wheeler, it's the worst of both worlds. The capex increment is about 25%. The CNG cylinder and the entire system as a percentage of the price of a typical 100-125cc motorcycle. And the OPEX also, he's at a disadvantage relative to the three-wheeler because he's not riding typically 100-200 kilometers a day. So I think the bigger picture that we have tried to present to government, and I have personally had the occasion to meet many people, senior people in various ministries, including last month, even in the PMO, etc. And what I have said to them is that, look, this is the most rewarding two-wheeler market in the world, and we have the opportunity to transition this market to clean energy. Now, look what's happened with electric two-wheelers. The penetration is still 5% after everything that the government has done, after all the investments that OEMs have made. It's only 5%, So when is it going to be 25%, let alone 50%? I don't think in the near future. But I feel very confident when I say that if we were to, have this kind of a twin engine approach of EV and CNG, for example, then could three-wheelers for sure, and the vast majority of two-wheelers make the transition from petrol and diesel to CNG and EV before 2030? I think the answer is yes. So, and I was very happy with the response I got from everyone in government so far, which was basically that we are agnostic to technology. We are not single-mindedly focused on just EV. CNG is a great idea as well. And so they said they will consider it favorably. On your last point of hybrids, I want to say to you what I heard. Honda is a company, is my favorite two-wheeler company. I learned a lot from Honda people, and I once heard a Honda CEO say, if I were to paraphrase him, it would be this: hybrids will exist because society will want hybrids to exist. So yes, government regulations and policy framework is important. What manufacturers and OEMs want is important, but what is most important is what society wants and consumers want. And I do not understand at all why in this country we are only promoting e-cars or electric cars and not strong hybrids suitably defined, because that is where the world is headed. That is what makes sense. We are never going to have a pan-India charging infrastructure. And already I believe, although that's not my business, I believe already strong hybrids in India have overtaken EVs. So I think, we should get real about this and do what's right for society in general.
Okay, all right. So that is the management of Bajaj Auto in a very candid conversation with Parikshit there. They have, in fact, become profitable with electric vehicles, and they are at 36% market share in E3-wheelers, and they would like to take it up to 80%. So those are a couple of details which are coming in, but we need to take a short break. On the other side, we have a lot more on markets, and we'll be connecting with the management of Eicher Drugs. They just came out with their Q1 numbers post-listing. We'll be talking to the management. Stay tuned.
50%, and from its issue price, Senco Gold is up 250%. So it's over 2 years of underperformance from the leader. What exactly is happening? Well, if you look at the thesis of the industry, not much has changed, because the organized sector is still growing at 2 to 2.5 times industry. But it's the disruptors, the newer players, who are growing faster due to one, lower base and getting access to a lot more capital by listing or raising funds, etc. There's store expansion through franchises, and obviously margins improving due to operating leverage as well. The product differentiation in jewelry between two brands has reduced because of BIS, competitive intensity, price parity. Everyone's margins have compressed, and there was a huge valuation gap between Titan and the others. That has become narrow as well. So if you look at Titan's jewelry margins itself, over the last many quarters, it's come down from 14.4% to about 10%, talking about the intensity in competition in the market. And this, when the revenue growth has been similar to all the other players on the huge base as well. If you look at all the other players as well, where do they stand? Titan, for the last year, trailing 12 months, revenues were close to around 44,000 crores, Kalyan closer 20,000 crores, Senco and Thangamayil between 4 and 5,000 crores. But in margins, Titan is the clear leader at 11%, and which is why it gets the maximum market cap as well at 3,20,000 crores. And with the up move that we've seen, everyone else is at 61,000 crores and below. Titan has 490 stores, Kalyan 277, Senco and Thangamayil between 59 and 165. Kalyan has actually increased its stores by a fair amount as well. So what next will happen for the jewelry sector? There is improved consumer sentiment ahead of the festive season, the cut in the budget, store expansion in India and abroad would be the key trigger for every player. Design and brand positioning will be the key differentiators for Titan and the others. We need to watch out for the impact of lab-grown diamonds and how that plays out on margins. And then there are newer formats like Carrot Lane for Titan, Candier for Kalyan, etc. Kalyan is looking to divest its non-core assets. Titan is looking to grow through new categories, balance sheet improvement for players like PC Jewelers, who have doubled in this year itself, and leadership transition for Titan sometime in the next year as well. Everything has a price. So let's look at it. 2 years ago, Titan was trading at 64 times, Kalyan 19 times, and Senco 13 times. 2 years later, after the underperformance, Titan is at 60 times, Kalyan is at 50 times, Senco at 29 times. So I guess what I'm saying is that the valuation differential has narrowed quite a bit. with this underperformance, is it time now for the street to remember the Titan?
Dr. Deshpande, the crux of our problem is probably our diet. Statistics show that 51% of students eat junk food, 38% of adult Indians eat poorly. So what is wrong with our diet to that extent? Is it the lack of protein? Is it too much carbohydrates? Or is it the incremental amount of junk food that our diet has, turned towards in the past couple of years?
Right. So yes, you're very right. The problem is calorie excess because of abundance of food. The other problem is carbohydrate excess. And the third is protein deficiency. So all these three put together are a recipe for disaster, because you are increasing your calories, which is going to make you fat and obese. And you are increasing your carbohydrate intake with all the junk food that is there. And you're also increasing your fat content. And all of this is ultimately going to lead to a lot of insulin resistance, fatty liver, and this is inviting all the metabolic diseases that are associated with obesity. So junk food is very high on processing, and processing is really bad because it can cause a lot of what we call oxidative damage.
What is a good source of vegetarian protein according to you, Dr. Deshpande, and how much protein should one consume?
Yeah, so typically, if you're really very active, the formula is that you should get
investing.
Welcome back. Well, we do have the first management, or rather the second management on the show. We have Eicher Drugs and Pharma, Sandeep Jain and the CFO Sumit Sood, who are with us to discuss the numbers gone by. Remember that they've delivered their Q1 FY25 numbers for the first time since listing, and revenue growth was up around 5% this quarter. But what stood out was the operational improvement that they reported this time round. So, Mr. Jain, let's start with you. It's an operational improvement this time round in terms of the margins. It's come in at around 12.6%. It's an EBITDA gain versus a loss on a year-on-year basis. Tell us what led to this particular improvement, and what are we expecting in the next 3 quarters in terms of margins? Mr. Jain.
Yeah, it is only because of the, we are always taking care of the efforts which has to be made. Like 400 scientists are working day and night for developing so many products, and we always make sure that a few of the new products should be marketed and offered to the market quarter-on-quarter basis. That is the first. And one was one that Mr. Sumit will be in a position to let you know about this put option. But the most important part is always new products, new technology, and service to the clients. That is the most important part, which we make sure that it should be always there with the clients.
Okay, all right. Well, Mr. Sood, if you could just elaborate a little bit, and Mr. Jain mentioned the put option. Just wanted to understand if you could give us more details about that. And it is eventually expected to improve your margins going forward as well. So just give us a sense in terms of where things stand with regards to that, and what your guidance on operations would be on the operational margins.
The way the put liability works is that we had an investment agreement with our investor Quadria, which there was a condition of a buyback of their shares. So this, as per the accounting standard, is a notional entry which gets into the books of accounts, which is done based on the cash flows. So this, till the date that we have reported, which is June of 24, cumulatively had an impact of 1,361 crores on the net worth. So what happened was, like you're showing a huge improvement there, while the company had constantly been in profit and the cash flows were positive. But because of that notional entry, the financial results that came out in our balance sheet did not show the correct, profitability of the company. So that on 29th of May, with the shareholder agreement, was removed. So this period, you see an EBITDA of 130 crores. That's the adjusted EBITDA, compared to an adjusted EBITDA of 108 crores over last year. So that's really how it is. And, our PAT margins are at 58 crores. They were close to 37 crores in the previous period. That was the adjusted PAT. So I think that's really how the company has been performing. And as the MD said, that we would continue to focus on new products and our developments to see that we meet our expectations going forward.
Okay, all right. Hi, Mr. Jain and Mr. Sood. Thanks a lot for joining in. This is Nigel on this side. Let's get a couple of numbers out of the way. The CDMO business, out there you had margin improvement, which was quite substantial. It's moving towards the mid-teens, the EBIT margins. What's the outlook on this part of the business? And on the smaller part of the business, which is the API business, when does that turn back into the black?
Sandeep, so let me first take you through the financial numbers. Like the CDMO business has been doing a 14-15% margin year on year, and we see that trajectory to continue for us, right? The API business, which we acquired in 21 through an acquisition of parabolic drugs, we've been drastically, the whole year of operations, we sort of made 103 odd crore EBITDA loss, which came down to 43 crores last year. We see that our EBITDA margin for this quarter, which is a negative 17%, which was negative 23% over the last period. Now we've put in all efforts to ensure that this business slowly comes to the black, but to really give a time frame to see where it will turn in green or black is slightly difficult to say right now. But our endeavor is to see that we bring it back to the way our other businesses are.
Okay. Mr. Jain, just give us a sense in terms of the FY25 growth then. What are you expecting as a whole in the CDMO business? In terms of demand that you're seeing, incremental clients that you would probably be servicing in the next 3 quarters?
See, we are growing 15% on a CAGR basis year on year, and we are making sure that the production, the quality, the systems should remain same, and we hopefully we will be able to maintain the same pace in the 25 as well.
Okay. The other question that I had is on your branded formulation segment. Your margins improved quite drastically there, Mr. Sood, this time round. Tell us what led to this improvement and what are the margins that we're working for in the branded formulation segment? Is this 10% now sustainable?
So, this business was broken down into 3 parts, right? We had the export business, we had the brand marketing, and we had the trade generic. Now, what we've consciously done is we looked at restructuring the business in a manner that we have these sustainable margins. So we've sort of focused on our exports and the brand marketing, and we've sort of scaled down our trade generic business so that we think these margins going forward between 8 to 10% would be sustainable.
Okay. All right, Mr. Sood as well as Mr. Jain, we're going to leave it on that note. Thanks very much for joining in and speaking with us and giving us all of that perspective. That's Ekim Drugs. The stock is down around 3.5%. Revenue growth was subdued, but the margins did see an improvement, an operational improvement this time round. Well, we need to take a short break, but we'll get you more on the markets once we're back. Stay tuned.
Of your body weight. But if you're not very physically active, if you're much older, you can go to 0.8 grams per kg body weight. If you talk about vegetarian sources, there is no complete protein. So you will have to eat multiple sources of protein because all the amino acids are not contained in any single food. So vegetarian protein is basically not a complete protein. So you'll have to make a mix and match of different things like cereals, sprouts, maybe paneer, dairy, basically. So mushrooms. So these are all the ways that you can get proteins, but not one of them is a complete protein. So one has to be very vigilant. It's not a way. You have to be really careful where your protein is coming from, and maybe meet up with a dietitian to actually find out where the protein is coming from in your food. So it's not very easy to get all the protein that you need from vegetarian sources. But mushrooms, dairy, all these are very few sources are there of protein. Sprouts do have protein, but they also have a lot of carbs, which people don't understand. Everyone thinks that sprouts is full of proteins. It has protein, but it also has a lot of carbs. And ultimately, if you had to get all your protein from the natural vegetarian sources, your calorie count is going to increase exponentially. So, so that is what you have to be careful about.
Dr. Mufiam, I'm going to start with you. The Lancet study says that 50% of Indian adults are unfit and not physically active. Why do you think that is the case?
Hi, Ekta. Thank you for welcoming me on the show. I think there are 2 or 3 reasons mainly. One, I would say, is urbanization and lifestyle. So urbanization, there was a 2023 study which actually showed that that's led to around 40% increase in lack of time for physical activities, only because people have adopted to motorization as transports, use lifts instead of climbing, and various other things. The next thing is in terms of cultural acceptances. So we as Indians don't believe, and there's a lack of mental awareness that exercise is regularly needed. And a 2022 study actually showed that 40% of Indians don't believe that exercise is required for sustained a healthy lifestyle. And finally, there was a 2023 study that showed high stress and long working hours. So what individuals actually said is that 45% of Indians quoted that as a reason for lack of time to exercise for having a healthier body. There are 2 other factors. One is technology. A 2022 study said that there's a 150% increase in screen time. Tablets, computers, phones, people are addicted to their Insta profiles or their Facebook, Twitter, whichever handle. All right, and people don't have time to physically exercise. And then diet, like you correctly said, Ekta. There has been a 40% increase in processed food diets that Indians have consumed over the last 10 years or so. And that, including the added predisposition to having sugar. We have so many festivals and we are so addicted to sugar that that's a deadly cocktail that the Indians can ill afford. And that's why you are...
Welcome back. Well, there's some disturbing news at the bottom of your screen. We understand that at least 7 explosions rang out this morning over Ukraine's capital, Kyiv, which is worrying news as per what the wires are reporting. And Russia has attacked energy facilities in West Ukraine, which has caused some outages. So that'll have an impact. But for the good of humanity, I think, we just should get some kind of resolution on that front. No one wants war. No one wants these attacks. But that's precisely what's happened in the last few hours. So hopefully the situation does settle down. For the markets on the whole, well, they've been ignoring any kind of bad news. And for the time being, the markets are continuing holding with a gain of close to around 200 points. So actually, we have built on to the gains in the last few minutes. And a few stocks actually from the broader markets, they're doing a thing of their own. Let's highlight some of those winners. MedPlus, there was a large trade that took place earlier today. The stock has recovered considerably from the low point of the day. So big up move is what you're seeing on that one. BLS International, that's another one that's up close to around 10%. So big move is what we're seeing. That's one of the top volume movers as well. Stovecraft, post-listing, it was a 1,000 rupee stock. Then the stock halved from the top. But in the last couple of quarters, they've returned back to their growing ways. From the lows of the day, that stock as well has bounced up. And JG Chemicals, that's another one. Post its numbers, I think it's moved from around 300 to around 400 rupees odd. Big volumes on that one as well. Sharp uptick on a few of these numbers from the broader markets. Well, for the time being, though, we'll slip into a short break. You come back, Manisha Gupta will be joining in. She'll tell us what's going on in the commodity space. We'll have Vandana Hari as well, who'll be joining in.
One pandemic, which I believe we have already reached. We are the number 3rd country in the world to probably have obesity. But we're even number 2 in terms of diabetes. And diabesity is a bigger problem than obesity alone, because that's taking lives, affecting our loss in man hours and affecting overall growth in India.
The last hour. Anything can happen between the bells.
But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them and how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC TV18 and CNBCTV18.com.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter-century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades.
Welcome back, and joining us on the show now is Vandana Hari. She's founder and CEO at Vanda Insights. Vandana, thank you so much for joining us. Must be difficult times tracking this market, especially with the latest attacks on Kyiv and the way the crude prices have reacted. This whole fear about escalation of conflict within the Middle East or West Asia, how are you reading into it?
Good afternoon, Manisha. So certainly the Ukraine and the Gaza wars are 2 key areas the market is keeping an eye on, more for the potential of supply disruptions rather than what I would call a fear. And certainly there's no expectation as such that there will be a major supply disruption. So if you look at the activity in Brent and WTI futures over the past half an hour or so since this news broke out of Russian attacks across Ukraine, Brent crept up to about 1% higher compared with Friday's close, and was followed right after with quite a bit of sell-off. So it couldn't really hold on to all those gains. So what is happening here, Manisha? And we can talk separately about Gaza because there's hardly any risk premium on account of that either, despite a worsening situation. What's happening here is, as unfortunate as it is, Ukraine is not a supplier. Over the past 2 years, it's not even no longer a conduit for Russian oil and gas supplies to Europe either, because all of that has been phased out gradually. So I think what the market will be watching out for is how does Ukraine retaliate, and especially does Ukraine retaliate against energy infrastructure in Russia? That would be something that would, I would say, have market participants on the edge of their seats.
Oh, absolutely, yes. While there are supply concerns, Vandana, and we've seen plenty in the last few months, if not last couple of years, though, it clearly does boil down to the fact that we haven't seen oil actual supply getting disrupted, even as it's taken longer time because of the way the Red Sea has been going on as well. How would you look at the overall supplies right now? And if you had to add a premium or a percentage on what we are looking at in sense of a supply concern going forward, what would that be?
So there isn't really, you hit the nail on the head, Manisha. There hasn't been a supply disruption. So whether you look back 2.5 years of the Ukraine war, the worst was when all the sanctions and the embargoes against Russian oil were imposed by the Western countries. And there was a bit of turmoil in the markets until Russia found alternative markets, right? And once that was done, which was pretty much in the first year itself, but 2022 end, Russia had found other outlets for its oil and gas. Once that was done, the market was quite relieved, and there hasn't been any fear of, because ultimately it's just rerouting, but the amount of oil and gas coming into the global market remains the same. So that remains the base case. That is also the case with the Gaza war. Again, escalation of tensions, escalation of rhetoric. But, the base case is that the powers that be in the region are, they flex their muscles. It's a show of force when they attack, whether it's the Hezbollah and Israel or whether it's Iran and Israel. But they make sure that that they don't do anything that, pushes things into a very sharp downward spiral. So the base case for the market is that there is not going to be a major supply disruption. Of course, that can turn out to be wrong. That can be a rude surprise. But I think the market will wait for such a rude surprise to happen to actually start pricing. And as of now, to answer your question on risk premium, I would say there's negligible supply risk premium in crude.
Okay. Vandana, also, when you look at the demand itself, that has been on the weaker side. So while the supplies have been declining, I mean, we've seen US inventories data decline. If you look at the global inventories, they are 4% below 10-year average. But then it is the demand which is not so strong, impacting the prices.
Yeah, absolutely, Manisha. So I wouldn't say inventories are very low either. Concern for the market right now. Three major consuming regions. So whether you look at the U.S. and, let's put aside cyclical rise in demand, which happens over the summer months. But that aside, U.S. is more or less flatlining demand growth. So is Europe is actually negative year on year, way past its peak consumption, historical peak consumption. As is China. China, especially for the oil market, is a major drag. They are struggling to inject momentum into the economy. Their crude imports were lower year on year in the first 7 months of the year. So that's, environment of sluggishness when it comes to global oil demand.
Okay, all right, Vandana. Thanks very much for that. So definitely keeping an eye in terms of additional developments which are going to take place in Ukraine and post this attack which has taken place by Russia, and what kind of impact it could really have on Brent crude prices as well as other commodities. Well, on that note, we need to wrap up on the show. It's a wrap on Halftime Report, but stay tuned. This is Lunch Up next.
the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube.
US Federal Reserve Chairman Jerome Powell sparks an equity rally with his comments at the Jackson Hole Symposium, suggesting rate cuts ahead. And IT as well as consumer durables are the big gainers today, even as capital goods and realty lag behind.
Crude oil gains after Israel and Hezbollah exchange missile fire and a proposed peace deal between Israel and Gaza falls apart. Commodities also get a fillip from the Fed's indication on easing monetary policy going forward.
Bajaj Auto will unveil its ethanol bike and three-wheeler next month. CEO Rajiv Bajaj tells CNBC TV18. He adds that output of clean energy vehicles will likely cross the 100,000 mark by September, and Bajaj Auto is looking to further grow its already profitable EV business with a new Chetak platform next year.
Zydus Life Sciences dips after global peer Teva gets a nod from the US FDA to launch a generic that it was the sole supplier of. The company is also in the news for acquisition of a 50% stake in Sterling Biotech.
And the centre unveils the new unified pension scheme for government employees that offers high assured payouts and allows subscribers to shift from the national pension scheme. UPS can spell an additional 6,250 crore rupees spent in the first year, with an additional 800 crore rupees towards arrears for those already retired. Hello and welcome. You've tuned into Business Lunch. I'm Nisha. With me, as always, is Hormaz. Hormaz, market started this week on a good note, and it has been building that momentum. You know, mounting back that 25,000 level for Nifty 50 is a big deal, and that's what we are looking for. And of course, the color that I chose is definitely wrong for a day like this, when the entire screen is looking green at the particular moment. So let's take stock of markets at lunch. Are extremely energetic and buoyant. 0.8% up on Nifty 50 with a gain of over 200 points. When we talk about Sensex, it's at 81,700 odd levels with a gain of over 600 points. Bank Nifty not too far behind, but a slight underperformance to the key indices, 0.6% up in trade at the particular moment. And mid caps are the ones which are showing slight underperformance, but nothing to bother about because it's still showing gains of 0.4%. So all in all, a good day of trade today, and it's started off on a good note. Advance decline ratio is in favor of the advances, and on my screen at the particular moment from the metal pack, Hindalco is the top percentage gainer on Nifty 50, and some of the PSUs are doing very well like ONGC, NTPC. Hormaz.
50 points away from the record highs is the Nifty. So it's indeed a good start to the week, and it is the expiry week, of course, for the Nifty and the Nifty Bank, with what has been a fairly choppy series for the entire market. The Nifty now on this count is up for the series, but as of closing on Friday was almost flat for the entire series of August. And the Nifty Bank too is an underperformer all through the series, now down 600 points so far. It has clawed back most of that, at least half of that in today's session, so it must be down around 300 points now for the series. But this is the very key level for the Nifty Bank at which it currently is. 51,250 and 51,550 is that range that you need to watch out for on the Nifty Bank, that 300 point range which will determine which way the Nifty Bank goes. But the broader markets also are quiet, but they are doing fairly okay for themselves. The mid cap index is trading with gains of around 0.5%, as is the small cap index, and some stock specific moves as well, and that continues in today's session as well, as has been the case over the last few weeks in the broader market space as well. So stocks, some of the high flyers seeing a bit of profit booking in today's session, be it the likes of First Source or Kalyan Jewellers continues to have a good day in today's session, around another 5.5% after the block deal that we saw last week. So it is good going in specific stocks as well in the broader markets. But the sector to watch out for in today's session is IT, and that is the one that is leading the charge in today's session, and that comes on the back of a very strong rally that we saw in Wall Street overnight, in the Nasdaq in particular as well. And that is what we are going to focus on at the start of the show, and that is where Fed Chair Jerome Powell, in his much awaited keynote address at the Fed's annual retreat in Jackson Hole, said that the time has come for the policy to adjust to economic cues. And he added that the time and pace of rate cuts will depend on incoming data, evolving outlook and balance of risks. Now CNBC's Steve Leisman joins us with the key highlights from the Fed Chair's keynote address.
After 2.5 years of fighting inflation, Fed Chair Jay Powell took to the podium here at the Jackson Hole Annual Conference on Monetary Policy, and he laid down a new marker on policy, declaring now is the time to adjust policy downward.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
Powell suggested the Fed, with timely adjustments to policy, could stick that so-called soft landing, saying the Fed could get back to the 2% inflation target with a still strong job market. Those comments on the direction of policy and the outlook for a soft landing helped stocks and bonds. You can see the 2-year there fell. The dollar was weaker. All of that suggesting, like I just was saying to Dom, that maybe the market wasn't fully prepared for a really declarative statement about the direction of policy here that was maybe less hedged than people were thinking. Powell did not, however, specify the pace or the extent of rate cuts, though we did say multiple cuts were coming. So what do you watch now? Well, look for further job market weakness to determine, is that going to be a 25 or 50? Inflation does need to be continuing downward. I don't hear the Fed coming off of that 2% target, so it's still some work to do there. It's got to continue that. And you look for an economy around potential. Any weakness in the economy could make the Fed be more aggressive. Now,
All right, all the macro data on the table for the Fed chair and multiple cuts expected. That's what the market is building up. Now, as Fed Chair Powell said that we need to be careful of the employment side of the mandate, says Chicago's Fed President Austin Goolsbee. And he adds that the inflation is on the path to 2%. Listen in.
I think the general notion that we want to be careful, as Chair Powell said, about the employment side of the mandate, too. We're not just fighting inflation now. Inflation's on a path to 2%. I totally agree with. I still think, not just for this meeting, over the next calendar year, let's say, I think it's worth looking at the statement of economic projections that the committee has been putting out every 3 months. In those statements, there's widespread agreement that there will be multiple rate cuts over calendar years 24 and 25. Inflation would be coming down, and the unemployment rate would be creeping up a bit and settling in.
Let's also now listen in to what market experts have to say about Jerome Powell's speech and its impact on the overall U.S. market.
I liked the speech overall, and I think it reinforced messages that had been delivered that September is very much the time to look for the next move. I think at this stage the odds are much more towards 25. I know the market may be leaning a bit more towards 50, but this situation is not, getting out of hand. He observed that while unemployment has gone up, it is still at normal levels. So while he doesn't want to see it worsen, I don't think he feels the necessity to move dramatically. So I would suggest and expect a series of 25s is the most likely outcome at this stage.
Essentially, this was a valedictory of essentially Chair Powell turning the page, saying the mission, which has been focused on inflation for the last 2 years, has been successful, and that we are there, and that going forward, the mission is going to be maximizing full employment. He doesn't want to see any further weakness. My base case scenario is that we are on a journey of 25 basis point cuts, probably for the next 8 meetings, a couple hundred basis points cumulative. So that's my base case. But if we see weaker growth, and particularly weaker jobs, then I think we could have a bit of front loading and start the process with 50 basis point cuts.
He likes to give straightforward discussions, and his Jackson Hole speeches have tended to be much shorter rather than much longer. And in the past, he made it clear they made inflation #1 priority. Now he has clear that worrying about the downside risk of the economy is his #1 priority. He didn't quite say the all clear on inflation, but came pretty close to saying that, and said that's why he's comfortable and starting to focus on the employment situation. I don't think they're going to start with 50. If they started with 50, that's kind of an admission that something went wrong, something's problematic. I mean, if the the employment report at the beginning of September is wildly disastrous, sure, but I don't think so. I think that they'll start gradually and then pick up pace if the labor market weakens.
All right, staying with the big story today of the expectation of Fed rate cut. Well, a key beneficiary of the U.S. Fed's rate cut could be the Indian IT sector. In fact, brokerage house Jefferies has written a note on the sector and its outperformance over the years. Rima Tendulkar is right here with all the details. Rima, tell us.
Thanks so much for that. So IT has been the leader in today's rally on hopes that the Fed rate cuts begin as early as September. And we know, history tells us that whenever there is a rate cutting cycle, technology stocks, whether in the US or in India, tend to do well. But there is an interesting note from Jefferies where they talk about Indian IT having outperformed the Nifty since calendar year 2023. So after a sharp underperformance in 2022, the Nifty IT outperformed the Nifty by 4% last year. And even this year, it's outperforming. But this outperformance has come despite there being earnings downgrades. Except for TCS, large cap and mid cap IT companies have seen earnings downgrade. So therefore, Jefferies is arguing that this upmove seen, this outperformance seen in Nifty IT is led by PE re-rating. So the 16% year-to-date upmove in Nifty IT is driven by an 11% PE re-rating. And now, Indian IT stocks are trading at a premium to their historical averages, while Accenture is trading at a discount to Indian IT names. So divergent trends seen between Indian IT and Accenture. According to Jefferies, valuations are rich. The Nifty IT is at 29 times. It's trading at a significant premium to Nifty IT at 40% more than what we historically see. And therefore, they say it's time to be selective on this sector. They like Infi and TCS, given the limited risk to their earnings and relative valuation comfort. So yes, IT is doing well, but as Jefferies argues that this outperformance seen by IT has been driven by a PE re-rating and not by earnings upgrades.
Very interesting note indeed from Jefferies. Reema, thanks a lot for that. And their preferred picks, Infosys and TCS, contributing in equal proportion to the Nifty upside today, around 12 points coming from both of these stocks. Take a short break here on Business Lunch. On the other side, we get you excerpts from our exclusive interview with Bajaj Auto's Rajiv Bajaj as he outlines the launch pipeline for the company going ahead. Stay tuned. Back on the other side. Back with us here on Business Lunch. Now let's also get you some index-related updates. And Bharat Electronics and Trent will be entering the Nifty 50 from the 30th of September. The FTSE semi-annual index review will also come into effect from the 23rd of next month. Now Vivek is joining in with more details. Vivek, tell us more about this index rejig.
Well, that's right. All through Friday, we had intimated you and we had alerted you that there was, number one, the NSE subcommittee for index rebalancing, they were scheduled to meet, and along expected lines, they've gone ahead and announced a whole raft of changes across all of the NSE indices. The ones that we're tracking are the Nifty 50 as well as the Nifty Bank, given the fact that this is where majority of the passive fund flow will be concentrated upon. So when you're talking about the Nifty, Bharat Electronics and Trend come in, they will see flows of close to $461 and $645 million respectively. Adjustments will take place on September 27th. The exclusions are Divi's Lab as well as LTI Mindtree. Divi's will see outflows of a little over $264 million. LTI Mindtree will see outflows of over $220 million. Coming to the Nifty Bank Index, Canara Bank comes in, almost $80 million of inflows is what is expected to see. Bandhan Bank goes out, $40 million of outflows. Now, coming to the FTSE semi-annual index review, a whole lot of changes for both, the all cap as well as the all world index. The all world index is the one that has a lot more liquidity, a lot more tracking, and which is where you will see the majority of the impact. Rebalancing will lead to inflows for India of close to $1 billion this time around. Adjustments will take place on September 20th, 2024. 13 additions to the FTSE all world index. Key amongst them being Bank of Maharashtra, Bharat Dynamics, Central Bank of India. Escorts is seeing some inflows, GE, T&D, and Motilal Oswal Financial Services. In fact, the stock is doing quite well in the session today. Along with that, they've also gone ahead and announced 48 additions to the FTSE all cap index. Interestingly, no deletions this time around. So India's weightage, as far as the passive indices is concerned, continuously is increasing, both as far as the MSCI as well as the FTSE is concerned.
All right, thanks so much, Vivek, for getting us all those important details. Also flashing on your screen, an important news-worthy, flash on Godfrey Phillips, and it is the advisory firm, proxy advisory firm, which is questioning the reappointment of one of the directors, which is the mother and also Beena Modi as the MD of Godfrey Phillips, and also the advisory firm is questioning the board's decision to not reappoint Samir Modi as the director, says no compelling evidence. So that's an important bit to note ahead of the shareholders meet in this particular company, and also the proxy advisory firm's recommendations to the shareholders while they cast their vote on some of these critical decisions on the appointment and reappointment of the directors. So keep that in mind. The stock is 4.8% up in trade. All right, moving on to the pharma space, and Zydus corrects nearly 4% after Teva Pharma receives an approval from the US FDA for an ulcerative colitis drug threatening Zydus' monopoly in the generic market. Now, Zydus will also pick up a 50% stake in Sterling Biotech for 550 crore rupees. Ekta Batra is right here with all the details. Ekta, tell us.
Well, I'll start with the fact that Teva has received US FDA approval for the ulcerative colitis drug Asacol HD. They will be launching the generic version. Zydus was the only generic in the market for a long time, and it is estimated that the drug accounted for around 3 to 5% of Zydus' revenue and 8 to 10% of their EBITDA in FY24. Now, Jefferies assumes that the product contribution for Zydus is going to fall to less than 1% of revenue and less than 3% of EBITDA in FY26. But the sharp decline in earnings from new entrants in Asacol HD is going to decline or not going to impact Zydus as much due to factors that they've launched a recent drug which is basically, used for overactive bladders, Mirabegron generic, and there is increasing contribution from Revlimid generic as well. Plus, they believe they have a strong pipeline of launches for the US, so all this should negate the impact of more competition in Asacol HD, according to Jefferies. Now, IIFL says that the competition has entered a couple of quarters earlier than expected. The impact is likely to play out from Q2 of FY25 versus Q4 is what they had anticipated. Zydus is likely to see an erosion of $25 million EBITDA from this product, according to IIFL. Now, the additional piece of news is that Zydus is going to buy 50% in Sterling Biotech for 550 crores. It's one of the biggest producers of pharma gelatin. FY24 revenue 455 odd crores. Now, Nomura has written on it. We have a neutral and a target price of 1,020. They believe that Sterling Biotech is valued at a 70% premium of around 1,100 crores versus the valuation of 640 crores under the IBC, and the current profitability is weak given the revenue growth and low EBITDA margins. They don't believe the acquisition is going to be earnings accretive in the near term.
Rising competition and the street does not like it. Ekta, thanks a lot for that. Lowest point of the day now for Zydus, almost 6% lower as we speak now at around 1110 is Zydus. But moving on then, in an exclusive interview with Rajiv Bajaj, the CEO of the two-wheeler company Bajaj Auto shared his goal of surpassing 1 lakh clean energy vehicle sales. Now, Bajaj also shared insights on the progress of their latest launch, the Chetak. Listen into a slice of that conversation.
As we head into the festive season, in the months of September, October, November, we are very likely to cross a monthly sales production and sales rate of over 100,000 clean energy two-wheelers and three-wheelers. But I would hazard that definitely over 25% of our current revenue is already coming from or about to come from clean energy vehicles, which is quite remarkable. See that Chetak is now close to about 18% market share or just above 18% market share. We are neck to neck with our able competitor TVS and their iQube. I think just a few hundred vehicles separate us. Having just launched a third product, there are more due later this year, within this financial year. We talked about it the last time we met a couple of months back. And I think post the festive season, and before March, certainly there will be more Chetaks in the marketplace. And I could reiterate what I shared with you the last time, that not only will there be more Chetaks in the market of the current platform, hopefully very sharply positioned, but there will also be a new Chetak platform.
All right, so that's a big corporate voice on CNBC TV18 today. Let's, on that note, slip into a short breather on Business Lunch. And up next, we'll focus on the conflict-hit regions of West Asia and Ukraine. Stay tuned for all the developments. You're watching Business Lunch, and in top global news today, in yet another escalation in the ongoing Russia-Ukraine conflict, at least 7 explosions were reported this morning across Kyiv as Russia launched a series of missiles towards Ukraine. Now, Russia also attacked energy facilities in West Ukraine, causing outages. The attacks come just days after Ukraine marked its 33rd Independence Day and follows its recent surprise incursion into the Kursk region of Russia.
Geopolitical tensions continue to escalate across West Asia. But with that, it's a wrap on this edition of Business Lunch. From Nisha, me and the team that put this show together, thank you so much for watching. Midcap Radar takes the action forward.
US Vice President Kamala Harris created history when she accepted the nomination to contest the US presidential election. She's the first woman of color and the first South Asian American to become the presidential candidate. She has Indian roots. 59-year-old Kamala Harris is half Indian and half Jamaican. Her full name is Kamala Devi Harris, daughter of Shyamala Gopalan Harris, a biologist from India, and Donald J. Harris, an economist from Jamaica. Kamala Harris's mother is from Thulasendrapuram, a small village in Thiruvarur district of Tamil Nadu. Shyamala Gopalan, a cancer researcher, had migrated to the US in 1958 and graduated from the University of California, Berkeley. She met her husband, Donald J. Harris, at the university, and the two got married in 1963. Kamala Harris has a sister, Maya, who was seen at the Democrat National Convention as well. Now, throughout her campaign ahead of the 2020 presidential election, and even now in the run-up to the 2024 presidential election, Kamala Harris has spoken about the profound impact her mother had on her life.
My mother, our mother, Shyamala Harris, had one of her own, and I miss her every day, and especially right now. And I know she's looking down smiling.
Kamala further said that after finishing her graduation in the United States, her mother was going to return home to India. But she met her father, Donald J. Harris, fell in love and got married. The Democrat nominee described her mother as a tough, courageous trailblazer in a fight for women's health. Harris said that her mother taught her to never complain about injustice, but do something about it. Dr. Shyamala Gopalan Harris died in 2009, a year before Kamala Harris was elected as California's Attorney General. In the past, Kamala Harris has often said that India was a very important part of her life, and her mother would take her to India pretty much every year. Those trips to Chennai helped her to understand where she came from. She got to spend time with her grandparents, with her uncle and her chitties or aunts, and got to understand the love of a good idli. Kamala Harris's grandfather was a civil servant who participated in India's freedom struggle against the British. Her mother, Shyamala, herself participated in the civil rights movement in the United States. In the small village of Thulasendrapuram in Tamil Nadu, where Kamala Harris's mother grew up, a set of people have been praying for Kamala Harris to win the presidential election. They hope Kamala Harris will one day visit the village and do something for their community.
Overall, the economy continues to grow at a solid pace, but the inflation and labor market data show an evolving situation.
Good afternoon. Welcome to Midcap Radar here on CNBC TV18. I'm Hormuz Fatakia. With me is Vivek Eicher. Vivek, there and thereabouts for the Nifty, almost nearing a record high. It's the start of an expiry week, so there is a lot to catch up on.
And very positive commentary coming in from overnight. Qs looking very positive. We started off higher, above the 25,000 mark as far as the Nifty is concerned, and the mid-cap and small-cap index also trading the gain. So nothing much to complain about, doing very well. But quite a lot lined up in today's show. Let's start off with the top headlines. US Federal Reserve Chairman Jerome Powell sparks an equity rally with his comments at the Jackson Hole Symposium, suggesting rate cuts ahead. IT and consumer durables are the big gainers, even as capital goods and realty lag. Mid-caps relatively underperform.
IT stocks are among the top gainers today on hopes of a rate-cutting cycle beginning in the United States.
Zydus Life Sciences tips after global peer Teva gets a nod from the US FDA to launch a generic that it was the sole supplier of earlier. The promising acquisition as well of a 50% stake in Sterling Biotech fails to offset this concern.
Now, shares of MedPlus have recovered in trade today and are now over 3% now after a big block deal that saw nearly 13% equity change hands at 616 rupees a share.
Shares of NIIT are locked in an upper circuit of 20% after veteran investor Ramesh Damani emerges as one of the buyers in the block that took place on Friday. Damani acquired 8 lakh shares of 0.6% equity at an average price of 127.5 rupees a share.
As we just mentioned, it's there and thereabouts for the Nifty, but still struggling to get to that record high level of 25,078, remaining hovering around that mark of 25,000 near the highest point of the day and continuing to remain where it was through most parts of the first half of the trading session. Now 0.8% higher for the Nifty, but can't really complain because this is the 8th day of gains for the index. So it's doing fairly well. From the budget day low that we had of around 21,280, the index is up almost 4,000 points in just a month. Shows you the kind of recovery that we have had. For the Nifty Bank also was down almost 600 points for the series as of closing on Friday. It has recovered some bits of that, up nearly to almost 270 points now, slightly off the highs of the day, but remaining around above that mark of 51,200, which is a key level to watch out for. The broader markets, though, they are continuing to do well, but the rate sensitives are actually the ones that are doing very well in today's session. Be it IT, be it metals, be it realty, they are the ones that are outperforming in today's session, Vivek.
Absolutely right. Rate sensitives, that was what I was getting to as well. Real estate, in fact, today we've spoken about IT in depth, but real estate, some of the names like Oberoi Realty, DLF, some of the other names too, as far as the real estate pack, were doing quite well. The other pocket of the market that's doing quite well are the oil refiners. Have a look at Reliance. Even if you pull up a 5-day chart ahead of its AGM, this particular stock was outperforming. In the last hour and a half, you've also seen quite a bit of buying emerge as far as ONGC is concerned. That stock too trading near the day's highest point. But this particular show is Mid-Cap Radar. This is our special segment, Mid-Cap Movers. Vamakshi today is at the wall to take us through all of the mid-caps that are moving around in the session.
Well, absolutely, Vivek. There's no complaining here. It's green across the screen, but it is the benchmark indices which are outshining the gains in the mid-cap index. But nevertheless, the mid-cap index does have its share of gainers. We first have Kalyan Jewellers, which has surged by almost 6% in the trading session today. Tata Elxsi, M&M Financial and Macrotech Developers have also surged over 3%. And in fact, when we look at some of the top losers this time around, not much, but still, we're seeing some downtick as far as Torrent Power, GE Shipping, Reddington and Raymond is concerned. IT stocks have gained in the trading session today after Fed Chair Powell says that it is now time to adjust the policies. Resultantly, we're seeing some big moves on Birlasoft, which is up nearly 5%. Tata Elxsi, like I mentioned before, is up nearly 3.7%, and Cyient and Mphasis are also up in the trading session today. But apart from that, there are some big moves coming on the back of strong volumes as well. Honasa is up nearly 12% in the trading session today. In fact, earlier today, it hit an all-time high after NCLT nod came in for Just for Kids, Fusion, Cosmecutics merger as well. KEC is also up nearly 3%, and that is because the company has won orders worth 1,079 crores. And lastly, Bansal Wires is up nearly 6%, and that is because Investec has a buy call. 25% potential upside is what they see.
Plenty of movers in the broader markets. Vamakshi, thanks a lot for joining in with those. But one particular stock that I wanted to highlight is NIIT, and that is locked in a 20% upper circuit, as Vivek just mentioned about Ramesh Damani acquiring stake in the company. So on a 20% upper circuit is NIIT at 153. Good time to get in. Dharmesh Shah of ICICI Securities for a quick chart check on the markets. Dharmesh, good afternoon. Thank you so much for joining in. Well, it's expiry week for the Nifty. There has been a lot of positive commentary that has come in from the globe. But do you think this expiry-related volatility will keep the upsides on the index in check, at least for this week?
Yeah, good afternoon. Yes, definitely. I think the week started with a very optimistic note. You see, on the back of strong global news, we see a gap up for the market. We believe, yes, this momentum should continue for the Nifty, and we should be looking for a target of 25,400. the coming week. So yes, the buy the dip should be the strategy. And if you look at the market breadth, I think it's a good indicator judge the sentiment, where the percentage of stock in 50-day moving average has improved from 40% to 60% of CNX 500. So it's clearly showing it's a broad-based buying happening right now. And we expect this momentum to continue towards 25,400 with strong support at 23,700.
Dharmesh, good afternoon and thank you so much for joining us. What are the individual stocks on your radar today? What is it that you're recommending?
Yes, as far as stocks are concerned, we remain to be positive for oil and gas as a sector as a whole. Yes, sector has been clearly a relatively outperformer in this current corrective phase from where you see from 25,000 to 24,000 for Nifty. But we believe, I think, this sector should continue this positive momentum going forward, where Gas Authority of India again remains to be a top pick. Again, the stock from a bigger picture, a long middle breakout, and post earnings, I think, so we see a GAIL trading this narrow range of 15 to 30. We believe, I think, so GAIL should be looking for a target around 278, in a stop loss of 224. Apart from GAIL, we remain to be positive for insurance sector as a whole. Again, this sector was not in limelight for a long time, a long consolidation breakout happening for most of these insurance stocks. We remain to be positive for HDFC Life. Again, the stock since for last 3 years has been into more of a corrective phase and has been witnessing a falling channel breakout. The end of the corrective phase for HDFC Life, and we should be looking for a target of around 798 to 800, giving a stop loss of around 654. So HDFC Life and Gas Authority of India should be at top.
Thank you. Thank you so much for joining us, Dharmesh. We seem to have had you on a bit of a scratchy line, but GAIL and HDFC Life were the two stocks that you mentioned. Let's now slip into a short break. When we return, we will be joined by Gulam Zia of Knight Frank India to discuss the recent report on growth in prime residential prices.
The upside risks to inflation have diminished, and the downside risks to employment have increased. As we highlighted in our last FOMC statement, we are attentive to the risks to both sides of our dual mandate. The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. We will do everything we can to support a strong labor market as we make further progress toward price stability. With an appropriate dialing back of policy restraint, there is good reason to think that the economy will get back to 2% inflation while maintaining a strong labor market. The current level of our policy rate gives us ample room to respond to any risks we may face, including the risk of unwelcome further weakening in labor market conditions. Pandemic-related distortions to supply and demand, as well as severe shocks to energy and commodity markets, were important drivers of high inflation, and their reversal has been a key part of the story of its decline. The unwinding of these factors took much longer than expected, but ultimately played a large role in the subsequent disinflation. Our restrictive monetary policy contributed to a moderation in aggregate demand, which combined with improvements in aggregate supply to reduce inflationary pressures, while allowing growth to continue at a healthy pace. As labor demand also moderated, the historically high level of vacancies relative to unemployment has normalized primarily through a decline in vacancies, without sizable and disruptive layoffs, bringing the labor market to a state where it is no longer a source of inflationary pressures. An important takeaway from recent experience is that anchored inflation expectations, reinforced by vigorous central bank actions, can facilitate disinflation without the need for slack. This narrative attributes much of the increase in inflation to an extraordinary collision between overheated and temporarily distorted demand and constrained supply. While researchers differ in their approaches and to some extent in their conclusions, a consensus seems to be emerging, which I see as attributing most of the rise in inflation to this collision. All told, the healing from pandemic distortions, our efforts to moderate aggregate demand, and the anchoring of expectations have worked together to put inflation on what increasingly appears to be a sustainable path to our 2% objective. Disinflation while preserving labor market strength is only possible with anchored inflation expectations, which reflect the public's confidence that the central bank will bring about 2% inflation over time.
Investing.
Welcome back to Midcap Radar. Well, one particular sector or segment of the market that's done very well, especially in the last year and a half, has been the realty pack. When you're looking at stock prices, number one, a lot of these stocks have given very significantly higher returns. Have a look at the one-year chart of names like, let's say, a DLF, an Oberoi Realty, a Godrej Properties. All of these stocks have given significant returns. In this context, and also in the context where we try and understand how exactly to look at prices, both on-ground prices for real estate in some of the top-tier cities, we have today Ghulam Zia of Nighttrack. They've come out with a very interesting report which reveals that Mumbai has recorded the second highest annual price growth in the world for prime residential properties in Q2 2024. Good afternoon, Ghulam. Thank you so much for joining us. First up, Mumbai, not very surprisingly, tops the chart as far as price increases are concerned. What's driving the significant increase as far as on-ground real estate prices are concerned? Is it demand or is it more of a lack of supply?
Well, to start with, let's look at this phenomenal increase, like 13% on a year is a huge number when we're talking about Mumbai, or even if it is Delhi, 10.5% odd. The reason, your question is about how do you justify this? Well, I would still not talk about lack of supply. I would rather talk about abundance of wealth creation. The ability of buyers to go out and buy these luxury properties is what is keeping the luxury market or the prime residential, not just in India, but all over the world, on the boil. Everybody is out there to buy. So net, the reason is simple. It's not so much of a lack of supply, but abundance of wealth, which is driving the prices so high.
Ghulam, you may complain all you want about the civic amenities that you get in most of these metro cities, but prices are shooting through the roof. But as you mentioned in your survey as well, right, demand in the premium pricing category has been the one that has been driving this pricing growth. Do you see that trend of premium pricing continuing to drive sales going forward? And what is the pecking order in terms of driving sales, be it premium, then mid-pricing, and then entry level? Or does entry level has seen some bit of improvement compared to when we last spoke?
Okay, let's put the picture straight here. The index that we are talking about is the prime property index alone. And in every of the 44 cities across the world that we map, we only take the luxury project in each of these cities and measure their performances. And the index that we're talking about is just that. Since your question is larger, you're talking about the whole market, mid and lower end. That is not a part of the study, but since the question is that how are they performing, let me tell you, there is not much of a growth in the lowest end of the market. In fact, lowest end, the affordable housing has been suffering consecutively for last 4 odd years. And that fatigue is unfortunately seemingly creeping into even the mid segment, which is worrisome. And let's also, since we're talking about the prime properties globally, let's also look at the last 1 quarter. The 13.5% or 10.5% that we're talking as far as Mumbai and Delhi, standing at place number 2 and 3 respectively, just after Manila, where it is 26%. That also, if you look at only the last quarter, not just in Mumbai, Delhi, but all over the world, last quarter has been a drag. It's been very low. I think 2.5 to 2.3% is roughly the growth all over of those 44 cities. And that even Mumbai and Delhi are also not different. Like Mumbai has seen barely 2.6% growth in last quarter. If you compare it with the annual growth of 13.5%, that means there is a slowdown. On the other side, Delhi is at 0.1%, Bangalore at negative 0.1% the last quarter, which is showing that even the super luxury, the upper end, the uber prime properties are also showing some drags. Some amount of fatigue is coming in. But definitely to close, the lowest end is in not really improving at all. The mid end is also showing sign of fatigue. That is a big concern.
Ghulam, very, very interesting point that you've put out there. Mumbai ranks 2, Delhi ranks 3, Bangalore ranks 15th on this particular index that you're talking about. So the premium end of the market doing quite well. Some amount of exhaustion is what you've seen in the last month. Now, give us a sense of, especially if we were to forecast demand going forward, in the backdrop of likely rate cuts, how exactly do you see demand panning out? Is it elastic or is it largely inelastic, especially in the premium end of the market?
Well, at least the premium end is still not showing any sign of reduction in velocity of sales or number of transactions that are transpiring month on month for last almost about 2.5, 3 odd years. And that is something which is giving us a little confidence that even in short term, we don't really expect this to turn so drastically so soon. As I said, even the mid-term market, the mid-end market was also doing exceedingly well for same kind of period, but right now showing some fatigue, signs of fatigue. But as far as super luxury, the upper end of the market is concerned, the number of transactions that we see in, say, Mumbai or a few projects in Delhi, Gurugram or Bengaluru, these are locations where the transactions in the upper end of the market is still not showing any signs of reduction. So that gives us comfort to say that if I have to talk about some amount of crystal ball gazing, at least next quarter or two at least, the upper end of the market is not going to be changing so drastically. Mid-end point of concern arising, lower end continues to be a big concern. And as you rightly said, the reason is simple. The central banks have to now, if at all real estate is their priority, they have to consider rate cuts now. Otherwise, it will be reflecting on real estate sector as well.
You know, you spoke of exhaustion, Ghulam, and I wanted to ask you this, that you mentioned for a quarter or two at least the premium market will continue to grow the way it is, even if there is a slight slowdown. But there will come a point, right, if the prices keep going up the way they are, that there will be buyers who would put their hand up and say, okay, even if we are capable of buying this, we are not going to buy it because the prices are just too high. And even if there are divergent opinions on this, but still for most Indians, real estate is still considered an investment opportunity and not just something that you reside in and things like that. So do you see that bit of exhaustion or a bit of a decline coming into the premium end of the market? Because the lower end is already suffering, but do you see that happening in the premium end as well if prices keep going up?
Well, price continuously going up will definitely be a problem. You know, whether it is taken as an investment class or not, that the point have gone beyond anybody's comprehension will be a pain point, and which is true for the whole market, not just the premium segment, but mid to lower end. Of course, the lowest end is the most susceptible to a price rise continuously seen. In fact, that's where the price rise is not as much. In the upper end, the price rise is high. Let me also bring in another aspect, that as far as upper end is concerned, the buying of property is not so much to do with investment as well as return on investment, as well as the investment of passion. So when you're buying an absolute upper end property, like for example, if you're buying something in Gurgaon, these days it's showing a lot of such projects where more than 100,000 rupees a square feet product you're buying, or in Mumbai where it is 150,000 rupees a product, a square feet of product, you're obviously not expecting these prices to double up in next 4 to 5 years or even 10 years. So the rate growth in the upper end of the market is not expected to be that high. But you're right that if the prices continue to rise as much as they are, say 13.5% that we saw in last 1 year in Mumbai, it's a big sign of concern.
Ghulam, thank you so much for joining us, and thank you so much, for helping us break down and understand what exactly is going up, especially in the upper end or in the premium end as far as the real estate market is concerned. Let's now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Dr. Deshpande, the crux of our problem is probably our diet. Statistics show that 51% of students eat junk food, 38% of adult Indians eat poorly. So what is wrong with our diet to that extent? Is it the lack of protein? Is it too much carbohydrates? Or is it the incremental amount of junk food that our diet has, turned towards in the past couple of years?
Right. So yes, you're very right. The problem is calorie excess because of abundance of food. The other problem is carbohydrate excess. And the third is protein deficiency. So all these three put together are a recipe for disaster, because you are increasing your calories, which is going to make you fat and obese. And you are increasing your carbohydrate intake with all the junk food that is there. And you're also increasing your fat content. And all of this is ultimately going to lead to a lot of insulin resistance, fatty liver, and this is inviting all the metabolic diseases that are associated with obesity. So junk food is very high on processing, and processing is really bad because it can cause a lot of what we call oxidative damage.
What is a good source of vegetarian protein according to you, Dr. Deshpande, and how much protein should one consume?
Yeah, so typically, if you're really very active, the formula is that you should get 1 gram per kg of your body weight. But if you're not very physically active, if you're much older, you can go to 0.8 grams per kg body weight. If you talk about vegetarian sources, there is no complete protein. So you will have to eat multiple sources of protein because all the amino acids are not contained in any single food. So vegetarian protein is basically not a complete protein. So you'll have to make a mix and match of different things like cereals, sprouts, maybe paneer, dairy, basically. So mushrooms. So these are all the ways that
Back with us here on Midcap Radar. Now in our special segment, Midcap Spotlight, Nigel is joining us today to focus on Bansal Wire Industries, which is surging in trade after Investec initiated coverage with a buy rating. Nigel.
Well, that's right. You know, Investec has made a few crisp points out here. Keep in mind, this is the newly listed company, Bansal Wires. Now, they've initiated coverage with a buy rating and the target price is around 440 rupees per share. They're saying that the company has created a niche for itself in the commoditized steel and stainless steel wire market. They also go out to say that they have been, offering a wide range of products and also reducing the concentration risk with regard to customers, which is important. They have undertaken 2 initiatives, and Investec believes that this will hold them in good stead because these segments are more profitable. They have named 2 of them as they're foraying into steel cords as well as backward integration into the stainless steel cords. So backward integration as well as a new foray, they say that this will help their profitability going ahead. And that's why they're seeing a 40% EBITDA CAGR over the next few years. That's between 2024 and 2027 with high teens ROCE. They've also gone on to say that valuations at around 24 times, well, it's not very, very expensive and they look undemanding. So that's why Investec is positive on them. Valuations undemanding. They like the way the company has diversified itself, and also the foray into 2 new lines is going to hold their profitability in good stead. Back to you.
Thank you so much, Nigel. Stock high by almost 6% in the session today. The next stock on our radar is Emcure Pharma. The stock is also trading with gains as Jefferies has initiated coverage on the stock. Ekta joins us to tell us more.
Well, yes, Jefferies has initiated coverage on Emcure with a buy and a target price of 1,600. They believe there are key differentiators for Emcure: strong chemistry skills in complex molecules, no exposure to the volatile US markets. Following should benefit Emcure in the near term, which is basically high growth in India and Canada, operating leverage, debt reduction. They estimate 11% revenue CAGR from market share gains in India, new launches in exports, and estimate a profit of 29% CAGR FY24 to 27, led by 2.2% EBITDA margin expansion and lower finance cost.
From one listed company to another, a newly listed company, Emcure Pharma. Ekta, thanks a lot for that. Already up almost 40% from its IPO price. So positive commentary coming in on both Bansal Wires as well as Emcure Pharma. But the latest happenings in the Religare case now, and Religare informed the exchanges that the Enforcement Directorate conducted searches at several premises linked to senior officials of the company. Vivek, you've been following this very closely. What do you have for us?
Well, quite a lot has happened, especially in the last week. So first thing, what's actually happened is that the Enforcement Directorate went ahead and conducted searches at the premises of all the key managerial personnel of Religare Enterprises. That includes Dr. Rashmi Saluja, the Executive Chairperson, the Group CFO, the General Counsel, as well as the Chief Operating Officer. So while there were no findings from the ED, what actually happened is that the ED has gone ahead and frozen the ESOP shares that were issued of Care Health that were issued to Dr. Rashmi Saluja, and now she cannot do any further dealings on that. Now remember, the most important thing as far as markets are concerned is what exactly is the status of the open offer. Now remember, June 2024, SEBI had gone ahead and issued a 12-page show cause notice to Religare Board and to the Chairperson Saluja as well, and they had directed both the board as well as Chairperson Saluja to go ahead and give an undertaking to file an application for the open offer with all of the regulators. Newspaper reports indicate that the company has gone ahead and submitted all of the documents required for the open offer to proceed, and this was done on August 6, 2024. Now coming to another key point, that is Care ESOPs. Now Care ESOPs, remember, the SAT had gone ahead and stayed the IRDAI order cancelling allocation of CARE ESOPs to Rashmi Saluja. So now basically, however, what SAT also did was that they went ahead and ensured that there would be no further dealings or no further allocation of the ESOPs of CARE. Remember, CARE Health Insurance, one of the key earning parts as far as Relicare is concerned, and CARE also was in the IPO route some time ago. Lot of uncertainty still prevails, but at this point of time, the open offer will be moving forward because the company has gone ahead and filed with the exchanges, and also regulatory concerns mount as far as the existing board is concerned.
Interesting. Thanks a lot for that update, Vivek, because the stock also now is 4% lower, almost at the lowest point of the day. And moving on then from a stock that is not having a very good day to a stock that is having a very good day, and that is NIIT. We highlighted earlier in the show as well. The stock is in an upper circuit of 20% after Ramesh Damani bought 8 lakh shares in the block deal that happened on Friday. Rima is joining in with more details. Rima.
Thanks so much for that. Big mover today. NIIT Limited, as you pointed out, Ramesh Damani, marquee investor, has bought 8 lakh shares last week at a price of 127. That's about 0.6% of the equity. But he's not the only large investor in the company. You also have Nippon Small Cap Fund with an 8% holding. Marathon Edge has holding. MIT has close to about a 5% holding. Now, just to give a sense about the fundamentals of this company. Now, in July, the company has guided that in Q2, they will see a top-line growth similar to Q1, which is 10% on a quarter-on-quarter basis. But the company is making investments, and therefore margins in Q2 could be negative. They're talking about single-digit margins at this point, though they will turn positive in Q3 and Q4, and therefore for the full year, the company is guiding for a top-line growth of 380 to 400 crore rupees with low single-digit margins.
Thank you so much for that, Rima. NIIT today locked in the upper circuit. One particular stock, especially in the last 5-7 minutes of trade, that's seen quite a bit of a dip is Paytm, 197 communication. We'll stand by if there's any developments on the same, but if you look at the intraday chart of Paytm, this particular stock is down quite sharply, almost 4% lower. But that's all the time we have on this edition of Midcap Radar. Your stocks when we return.
But not one of them is a complete protein. So one has to be very vigilant. It's not a way. You have to be really careful where your protein is coming from, and maybe meet up with a dietitian to actually find out where the protein is coming from in your food. So it's not very easy to get all the protein that you need from vegetarian sources. But mushrooms, dairy, all these are very few sources are there of protein. Sprouts do have protein, but they also have a lot of carbs, which people don't understand. Everyone thinks that sprouts is full of proteins. It has protein, but it also has a lot of carbs. And ultimately, if you had to get all your protein from the natural vegetarian sources, your calorie count is going to increase exponentially. So, so that is what you have to be careful about.
Dr. Mufiam, I'm going to start with you. The Lancet study says that 50% of Indian adults are unfit and not physically active. Why do you think that is the case?
Hi, Ekta. Thank you for welcoming me on the show. I think there are 2 or 3 reasons mainly. One, I would say, is urbanization and lifestyle. So urbanization, there was a 2023 study which actually showed that that's led to around 40% increase in lack of time for physical activities, only because people have adopted to motorization as transports, use lifts instead of climbing, and various other things. The next thing is in terms of cultural acceptances. So we as Indians don't believe, and there's a lack of mental awareness that exercise is regularly needed. And a 2022 study actually showed that 40% of Indians don't believe that exercise is required for sustained a healthy lifestyle. And finally, there was a 2023 study that showed high stress and long working hours. So what individuals actually said is that 45% of Indians quoted that as a reason for lack of time to.
Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a day where we are celebrating what Jerome Powell, in fact, said at Jackson Hole indicating that, yes, it is the time to probably soften up when it comes to rates. As of now, we have the Nifty, which is up around 206 odd points, holding above 25,000. We have the mid-cap index, which is not step in step. It's still up only around for 0.4%. So we have the frontliners or the heavyweights, which are really taking the step forward in today's trading session. The Bank Nifty up around 0.6%, advanced decline ratio, which is in positive terrain, so that really stands out. But we do have a whole host of stocks to cover, and joining us today is Aastha Jain, analyst at HCL Securities, and Vaishali Parekh will be with us soon as well, or she's with us now. She's the head of tech research at Prabhudas Leeladhar to answer all the queries that we have today. Ladies, welcome to the show. Well, Vaishali, let's start with you. It's turning out to be a session which is quite solid at this point in time. What would your approach be in today's trade?
Hi, good afternoon, both of you. And yes, market has opened very buoyant, and we are looking forward to a target of 25,300 to 25,500 as the next projected target. And the support levels are elevated now to 24,700 levels.
Okay, all right. In terms of specific stocks, anything that you would like or sectors that you would like today? For example, we have a couple of these old world economy stocks doing well, Hindalco, NTPC, ONGC. Anything you like within that space, or even IT?
Surely. So actually, the one positive thing that we are observing today is, first of all, Bank Nifty, which has been quite a laggard all this while, has come out of its consolidation. So focus would be more on the private sector banks from here on. And along with that, IT sector is also doing very well. So we continue to have a positive bias, and among which I think today HCL Tech is also showing a lot of strength. Along with that, Wipro. These are still technically very well placed to look for further higher targets. And besides that, of course, there is ONGC, also some of the pharma stocks. Overall, there is good participation. So sector specific, stock specific. And as you mentioned about metal sector, well, aluminium stocks have already done a good run-up, but we would still be looking at Hindustan Copper, SAIL, Tata Steel, Vedanta. These are the stocks which still show a lot of strength for further upside. So yes, overall, I think one needs to cherry pick as and when the opportunity arises.
Okay, all right, fair enough. Well, we do have a couple of queries now. We have Sridhar, who writes to us from New Delhi, holds 225 shares of VIP Industries, which is bought at around 578 and can hold these shares for another 6 months odd. He's sitting on a loss at this point in time. He wants to know what to do, whether he should hold or sell with a loss or not. Well, Aastha, let's toss this over to you. What would you recommend on this particular counter? VIP sitting on a loss at this point, but do you think that there's any kind of turnaround on this one?
Hi, good afternoon to both of you. Yes, talking about this counter, we are expecting turnaround to be there, but not in the immediate term. So maybe it will take at least 3 to 4 months more. And maybe Q2 of FY25 numbers will also be muted at what we have seen in the Q1 of FY25. So we have seen the muted performance. But what we have seen and what is positive about this company, that still they have shown the muted performance because the wedding dates were very fewer and we have that heat wave also. So all these have affected the numbers. But going ahead, I think what we have seen is that volume is still rising because we have seen 11% rise in the volume, as well as they have shown the increase in the market share also. So these are some positive points as of now. But going ahead, I think from Q3 FY25 onwards, we will start seeing the positive numbers also. So I think by that time, definitely we can see that the cost price will definitely arrive for this investor. So I'm recommending a hold with the initial price target of at around 510 to 550 odd levels. So maybe it will take another 3 to 4 months more. So a hold is recommended with the time period of 4 months and the price target of 510 to 550.
Okay, all right. And what about you, Vaishali? You know, it's not done well in the past 12 months. What's your sense?
So I agree totally that, well, the stock is showing a lot of weakness. I mean, there isn't much happening, but the only consolation is technically it is just showing bounce back from the oversold zones. And as Aastha rightly mentioned, I mean, it matches our technical target. I would expect a bounce back up to 510, 520. And from there on, we can have a relook. If it sustains above that, we could aim for higher targets. But if one were to look into luggage industry and all, then I think Safari has a very strong trend and it should do well even from there on. So if one has to buy, I would recommend the Safari. But since this gentleman is already holding a VIP, I guess just continue holding.
Okay, all right. So that's on VIP. Stock is down around 10% in the past 3 months. We have Parag, who writes to us from New Delhi. He holds 50 shares of UTI AMC, which he's bought at an average rate of around 564. He wants to know what to do, whether he should hold or sell at these current levels or not. So this is basically UTI AMC. He's sitting on a profit at this point in time. So it's doing well at this point in terms of an investment. So that's, before we get to that, there's some news coming in from Money Control, which we need to keep note of. SEBI has issued a showed cause notice to the Paytm founder as well as board members. So this is just an additional update which you should just keep in mind. Remember, Paytm was in focus on account of that big transaction that took place with Zomato. And now we have additional details coming in about a show cause notice. This is coming in from Money Control. We wait by for more additional details. As you can see, the stock is sharply lower in today's trade, down around 7%. Before we get to UTI AMC, Asta, any thoughts on Paytm?
So what was the news before was that about the Zomato and the ticketing business, which the Zomato will be taking over. And that was a positive news from both the counters. Because if we talk about the Paytm, so definitely it will help the Paytm in their financial performance, while Zomato will also be getting advantage to this in the longer term. But now if this news has come, then definitely it will have a negative impact. So our stance here is we are not recommending buy on Paytm as of now. Previously also we have not recommended buy. So right now, please stay away from the counter. This is our advice to all the investor, because the news which has come is negative. So meanwhile, we need to really see the news in detail. But as of now, it's stay away from this counter, and wait and watch strategy should be applied for all those who have this counter in their portfolio.
Okay, all right. Well, now on UTI AMC, Asta, the Parag has bought it. He holds 50 shares. He's sitting on a profit. He bought it at 564. What should one do with it?
So we think UTI AMC will continue to show positive momentum, because we have seen their SIP inflow has increased by 45% in the June quarter. And what we have seen is that their ratio of the equity AUM versus non-equity AUM is higher than the industry average, because their ratio of equity AUM in the total AUM is around 78%, which is higher than the industry ratio of 71%. So that itself signifies that the company has a positive momentum on that part also, and they have a strong AUM growth, and their AUM currently stands at around 3 lakh crore. So we think all things are falling in place for this counter. So we are positive on this counter as of now. So if the investor has no need to book the profit as of now, then definitely a hold is recommended. Initial price target can be set at around 1200 to 1250 odd levels.
Okay, and what about you? It's given very good returns in the past 1 year. It's gained around over 50% Vaishali. So UTI AMC, what would your approach be?
So I would say that the trend is very strong, but I think it's a one-way move. So it's better to hold with a trailing stop loss, or actually book partial profit, because if the stock dips to an extent, he can better the rate and move on for higher targets. Right now, there is no sign of exhaustion, nothing, but always better when it's already so much in an overbought zone, hold with a trailing stop loss.
Okay, hold with a trailing stop loss. That's the word coming in on UTI AMC. Hardik now writes to us from Madhya Pradesh. He holds 100 shares of LIC, which is at the price of around 1120, sitting on a loss there. Wants to know the future prospects of his investment. Vaishali, let's start with you on this one. Let's get in a technical call, and then we'll toss it over to Asta.
Yes, so right now it is in a downtrend, but continue holding with 1020 as a stop loss, because we may see a bounce coming in from here on. But if 1020 levels break, then it negates the trend and we could see in further weakness. So right now hold with a stop loss of 1020.
Okay, hold with a stop loss of 1020. And Astha, what about you? LIC?
Even we are recommending a hold. Our initial price target is around 1130 to 1150. So I think very near to the cost price where the investor has invested in this counter. Now talking about this counter, what we have taken from their con call transcript is that the management is really positive. The share of non-par business is really increasing, which is again on the positive side for the company. In fact, their AUM has also shown growth of around 16%, and their AUM right now is standing more than 50 lakh crore. This is what we believe. So I think, I beg your pardon, more than 5 lakh crore. So I think with the strong growth in the AUM, with the increase in their non-par business, and in fact, the persistency ratios are also on the positive side. So all these are signifying towards the upside momentum of the stock prices. Maybe it will take some time. So maybe a 3-month or a 4-month time horizon can be kept for this counter. But a hold is recommended. Initial price target 1130 to 1150 can be set on this counter.
Okay, all right. Well, now we have another query. We have Sania Sheikh, who writes to us from Mumbai, holds 20 shares of Trent, which is bought at around 1286. And as a long-term investor, wants to know if she could hold the shares for another 10 years. Another 10 years. So she's a long-term investor, but, you know, it's just made its way into the Nifty now. So it's probably on a different trajectory in terms of perception and growth as well, if it hasn't already been. So let's toss it over to you, Astha. What's your call on Trent?
So 10-year time horizon is really a long period. So yes, then definitely a hold is recommended from our side. For the initial price target, if someone wants to keep, then I think 7,100 or 7,200 can be set as an initial price target. Talking about this counter, they are showing strong performance. The Star Bazaar has shown the reduction in losses. The other formats are working well for this company, which can be seen from the increased footfall. So I think the strategies which the company is adopting is really working well for the company. And I think they will continue to show strong performance going ahead. Recommending a hold. Initial price target is 7,200.
Okay, initial price target is 7,200. But do you believe that this would be a portfolio stock?
Yes, for the long-term time, definitely a portfolio stock. And for 10 years, it is a hold from our side.
Okay, all right. Vaishali, what about you? I know it's tough to, track the technicals for such a long period. But based on what you've seen and what you are seeing for Trent, what would you recommend?
Well, I would always say that, partial profit booking cannot be ruled out. Either that should be the strategy, or if the stock corrects to an extent, say around 6,500, 6,300, some more can be added. So choose the way you want it. I mean, either book partial profit to have a re-entry at lower levels, or hold to what you are having, and for a longer term perspective, add more at lower levels.
Okay, all right. Well, on that note, we need to take a short break. We'll answer more stock queries on the other side. Stay tuned.
For having a healthier body, there are two other factors. One is technology. A 2022 study said that there's a 150% increase in screen time. Tablets, computers, phones, people are addicted to their Insta profiles or their Facebook, Twitter, whichever handle, all right? And people don't have time to physically exercise. And then diet, like you correctly said, Ekta. There has been a 40% increase in processed food diets that Indians have consumed over the last 10 years or so. And that, including the added predisposition to having sugar. We have so many festivals and we are so addicted to sugar that that's a deadly cocktail that the Indians can ill afford. And that's why you are seeing not only one pandemic, which I believe we have already reached. We are the number 3rd country in the world to probably have obesity, but we're even number 2 in terms of diabetes. And diabesity is a bigger problem than obesity alone, because that's taking lives, affecting our loss in man hours and affecting overall growth in India.
The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them and how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC TV18 and CNBCTV18.com.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Investing.
Welcome back. Well, you're still tuned into Your Stocks. We have with us Vaishali and Astha on the show to answer all of your queries. We have Amit now, Amit Suresh Das, who writes to us from Kolkata. He has an investment question. He wants to buy shares of NTPC and asks what to do. He wants to know whether to hold or sell. Hasn't specified if he's a short or a long-term investor. So let's get a query. Let's get your perspective on both sides. Let's start with a short call on the technicals. Vaishali, let's start with you.
Well, with today's move and good volume, I would say it's ready for a new round of momentum. Current market price is 413. So with today's low, that is nearly 400 rupees as stop loss, for a short-term perspective, can buy this stock for a target of 420 to 425. So that's how I can look at it with a shorter-term time frame. But with a longer-term perspective, maybe as a positional trade, I would still be recommending a buy with the same stop loss for a target of 460 to 480.
Okay. All right. And now what about you, Astha? What would your long-term as well as short-term call be on NMDC? On NTPC rather.
Right. So we are positive on the NTPC counter. We are positive from short-term as well as long-term point of view. Initial price target which we are giving is at around 460 to 480 odd levels. Now talking about this counter, they have a strong thermal power capacity, and now they're pouring into the renewable space will definitely help the company showing very strong financial performance. So we are believing that company will continue to post strong performance, and one can invest at the present juncture also. Initial price target can be set at around 460 to 480 odd levels.
Okay, all right. Now we have a question on NMDC. Om Jindal writes to us from Mumbai, holds 1,065 shares of NMDC, which he's bought at 260. Wants to know what to do, whether he should book his losses or not, or whether he should stay invested. What's your opinion, Vaishali, on this?
So I would say, see, a long-term chart is quite okay, and we have seen good corrective move in the recent past after making a high of around 286 to now 226. So the stock is really showing signs of bounce back and improvement. So I would say one can add more, keeping 200 as a prominent support. And from today's move, the way metals have started surging, I think even NMDC is ready for a takeoff. So I suggest a buy with 220 as support.
Okay, buy with 220 as support. What about you, Astha, on NMDC?
So NMDC, what we have seen is that strong numbers, especially in the volume front, due to the strong steel demand. So now we really need to look at how the steel demand going to pan out in the coming future. Meanwhile, we are expecting the stock to continue to perform strongly, but not in the near term, because we can see some sort of weakness in the iron ore prices that can affect the earnings as well as realizations. So I think in the longer term, the stock can perform better. So there is no need to book the losses at current juncture. continue to hold the stock with the initial price target of around 250, which is very near to the cost price of around 260. But the time horizon here can be set as more than 3 months, because in the immediate term, we are expecting some softness in the steel prices, and that definitely will going to affect the financial performance of the company. So for the time horizon of more than 3 months, a hold from our side, initial price target can be set at around 250 to 260 odd levels.
Okay, all right. Now we have Kurian, who writes to us from Kerala, holds 500 shares of Indian Hotels, which is purchased at around 430. He wants to know what to do with this particular counter. He's sitting on a very good profit at this point in time. Vaishali, do you think it's prudent to probably take some profits off the table in this case as well?
I don't think so, because I mean, there is no exhaustion. Of course, it is showing a lot of strength. It has retested the previous high and likely to give a breakout about 665. So if that is what is going to happen, we would be now looking at a next projected target of 700 to 720. So overall, all hotel stocks are doing well, and particularly Indian Hotel. As a disclaimer, we have already recommended this stock as well as NMDC as a positional trading strategy. So my view is positive on these two stocks.
Okay, your view is positive on this counter. Well, it's given returns of around 11% just in the past couple of months. But Indian Hotels on the fundamentals, Astha?
Fundamentals are looking very strong, and we are recommending a hold. So even I'm also of the same view that there's no need to book profit, because we are expecting price to move around the 700 or more than those levels also. So recommending a hold. Now talking about this counter, they have a plan to open 25 new hotels in this new fiscal. So again, I mean, opening or the expansion will definitely lead to strong financial performance. In fact, they have also entered into the branded residence segment. So I think that will also help the company in showing a strong performance. So we are believing that this counter will continue to show strong performance, recommending a hold with a price target of 700. In fact, if some fall can be seen, then definitely it can be a buying opportunity also. So both recommendations are there, buying as well as hold. Initial price target can be set at around 700.
Okay, initial price target can be set at around 700 odd for Indian Hotels. We do have Ola Electric now. Question on that. Karthik Kamble writes to us from Pune. He holds 200 shares of Ola Electric Mobility at 145. He wants to know the future prospects of his particular holding. Well, not much in terms of technical details on this one, Vaishali. So I'm going to toss it over to Astha. Well, Ola Electric, you know, a lot of comparisons have been made in terms of the kind of gains we've seen post-listing and about the promoter. But give us a sense, Astha, what do you recommend to your clients when it comes to this stock?
The IPO came, we were very much constructive on the IPO. We have recommended subscribe with the listing gain as well as long term, and our both strategies fall in place. Now talking about this counter, why we are positive. We think that this counter, I mean their product, because when we have to differentiate any automobile company, their product is the key feature. So talking about the Ola's product, I think they have a strong applicability in the rural areas. Because of the cheaper product as compared to the other brands. And talking about their market share also, they have a strong market share. Now talking about the cost feature, because the battery cost is the major cost, I think around 30% is the battery cost in the total cost. And in fact now this cost will also be going to reduce, because now they are turning to be self-sufficient in the battery making. So I think that is also a positive point. Although they are in the losses right now, in fact, on the EBITDA level also, they are into the minor losses. But what we believe that going ahead with the launch of motorbikes and with the cost reduction, they will be turning around maybe 2 years down the line. So it is a good long-term story. But now here the investor has entered into the high price of around 145 from 75 IPO price. If someone has made entry on those levels, then definitely it is a high valuation price, and that's why we have seen some sort of correction. So the investor really need to wait for at least 6 to 8 months. So our stance here is continue to hold, but please wait for some more time and don't enter into the stock when the IPO price is 75 and entering at 145 makes no sense. But all in all, wait for more time. I think 145, 150 can again be seen, but here the time horizon can be set to around 3 to 4 months.
Okay, all right. Thanks very much for that, Astha, as well as Vaishali, for taking us through all of those queries. Well, for the markets, the mid-cap index has picked up a little more pace, so it's up around 0.4%. The Bank Nifty also up around 0.5%. That's all the time that we have in the show. Closing bell up.
discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today. Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and
Most of the indices are trading positive, but the Japanese markets are in the red.
The time has come for policy to adjust. The direction of travel is clear.
Promising, pretty much promising, and leaving absolutely no room for doubt that rate cuts are coming.
Metals as well as tech. Both those two indices are going to be in focus in today's trading session.
This drug has been very important for Zydus.
24,900 on the Nifty, so it's slightly higher, 70 point.
Financialization of the Indian equity markets is growing at a pace that none of us have seen before.
Adjustments, remember, will take place on September 27th, 2024.
45% higher on Interarch. That's the new listing.
Great Monday morning. The Nifty reclaimed 25,000 as we speak.
It has demonstrated an outstanding ability to adapt.
There and thereabouts for the Nifty, almost nearing a record high. It's the start of an expiry week.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC TV18 Motilal Oswal Studios in Mumbai.
Well, that's the day so far, and indeed 25,000 is here on the Nifty, and we are practically 50 points away from hitting the all-time high levels. This is Closing Bell. We're here to take you through the last 1 hour. I'm Surabhi Upadhyay, as always with me. It's Nigel D'Souza. Nigel, good Monday.
Well, it's a good start to the week, Surabhi. You know, if you said that in the getting to the final hour of trade, if you're going to be 200 points higher, well, you'll be very, very pleased with that. So the Nifty is up 200 points. As we mentioned earlier today, the two sectors that are firing are tech as well as metals. And I think if we need to have that flourish in the final 60 minutes or so, the Nifty Bank is going to be in focus. 51,300 is the mark, but there is some kind of resistance. If it can get past that mark, maybe in fact we end the day with a bit of a flourish. But we've got close to 50 points to the fresh all-time highs in the Nifty. Let's see whether or not the bulls have a bit of a surprise for us in the final 60 minutes.
No, absolutely. IT has been absolutely phenomenal. And I think that's something that was along expected lines because of the strong finish that we had on Wall Street, NASDAQ doing what it did with all the expectations of the rate cut after the Jackson Hole speech. So a lot of the large cap tech is still retaining that gain. There's no sort of profit taking. That's what the IT index is also telling you. So your LTI, Mindtree, HCL Tech, all of them. Metals is another strong pocket of the market, like Nigel pointed out. Hindalco, for instance, 4%. That's the kind of gain that stock is pushing. And you have on the steel side as well, something like a Tata Steel and many others. But the good news for the market is that the trio of the heavy hitters, the big batsmen, they're firing. So Reliance Industries, HDFC Bank and L&T, some examples of where the top boys, the big boys, they're right now on the upside of the screen, 1% higher. So if any of them decide to move, and if the banks, the others beyond HDFC Bank also come and join the party, then we know what that means for the bulls. So overall, it's been looking good. The mid-cap index as well, about 0.5%. But today is more of a day of large caps. Yeah. At an index level, actually, there is some underperformance in the broader market.
Well, that's right. And Surbhi, this post Ola Electric's listing, this EV theme seems to be catching on yet again. Ola Electric, I recall, was down close to 4%. The last I checked, the stock, in fact, had moved into the green. So pull up the intraday chart out there. That's moving quite well. Another stock like Greaves Cotton, it has a small element of two-wheelers out there, 2- and 3-wheelers of EV. Well, that stock as well is moving high. In the last few sessions as well as moved up, and it's perked up in the last few minutes. And Precision Camshaft, they do retrofitting. That is, they take your old vehicle and they make it into an EV. And if you look at it during the last 1 week or so, that stock as well has moved well. So anything with regard to EV, has suddenly started moving post this Ola Electric. So it seems this EV theme is back. Greaves Cotton, Precision Camshaft, they were ranked underperformers. They seem to be coming back. And Ola Electric itself up 5% from the low point of the day. But let's get to the call for the final 60 minutes.
No, absolutely. We'll talk about a lot of these big movers and shakers in the broader market as we go along. But how do you look at the last 1 hour? What are the trades to consider? We have Ashish Katyal joining in. Ashish, good to have you. Good afternoon. So it's turned out to be quite a green Monday afternoon for the bulls. What's your call on the index, if you would open out any trades now, and of course individual stocks?
Good afternoon to you and all the viewers as well. Like we were discussing even on Friday, I was expecting Nifty to cross that 25,000 psychological mark, and we are there. And despite of the global events that are happening around, we are managing to sustain that today. That clearly shows a sign of strength. Also, there were a lot of build-up on the short call side at 25,000. I'm sure they might be running for cover now. If Nifty breaks above that 25,050, my target remains at 25,360 mark. So yes, long positions can be created even here. On the downside, one can maintain a stop loss of 24,900, and we can head towards 25,360 levels on the upside, which is a GAN level. So the overall tone is bullish for me. And also what is interesting is that Bank Nifty has started participating now. Bank Nifty showed some consolidation. It has not yet moved higher substantially, not yet filled the gap that was created about a few weeks back. So there is a lot of potential. If Bank Nifty starts performing and catching up, I'm sure Nifty is going to be on fire. So Bank Nifty is the index which can now move on the upside. And if 51,300 is broken on Bank Nifty on the closing basis, I think Bank Nifty is going to be crossing even that 52,000 mark and maybe inching towards the lifetime high. That's an optimistic scenario. So overall undertone remains bullish. We can see a lot of buzz around the mid-cap space as well. So I'm expecting any kind of a dip should be used as a buying opportunity.
Okay, you're sounding optimistic on both the headline indices, Ashish. What about individual stocks? What's on your radar?
On the radar, it's Mahindra Life space. We can clearly see a very strong move in today's session. Some kind of a profit booking from the highs, of course, but I think the space should buzz and we should start seeing an upward tick in this stock. And Mahindra Life can be a good buy, and we can expect a target of around 650 on the upside. On the downside, one can maintain a stop loss of around 570 levels. The next stock on the buy side is going to be from the large cap is HCL Tech. We can see it's the top gainer. Now, very strong breakout happening. IT is definitely buzzing. If you look at the ratio analysis of IT sector compared to Nifty, that ratio has turned sharply on the upside, suggesting that the outperformance will come from the IT sector as well. So HCL Tech is leading all the way on the upside. I think the stock can head towards the level of around 1800 on the upside, as long as on the downside 1670 remains intact.
Okay, all right, got that. By the way, in the broader market, just to name a few names, the kind of surge, as I said, at the index level, you would imagine that it's a weak day for the broader market just because the mid-cap index is underperforming the Nifty. But look at individual high flyers. I mean, NIIT hasn't stopped ever since it became, public that, Mr. Damani is having some interest in the company. He's bought equity worth just a little over 0.5%. That stock come in rocket. It's just a circuit over there. Motilal Oswal, there's that index inclusion FTSE, FTSE index, all world index. That's working very well for the stock. Godfrey Phillips 7% higher, GSPL 11% higher. So many names out there really. Honasa has had a brilliant day today, 10 to 11% on that one. Quick Heal, you can just go on and on. And also RPSG Ventures. Nigel was pointing out the stock in the morning itself. Look at that, 20% circuit. Most of the RP Sanjeev Goenka group stocks have done really well over the last few weeks. And today Ventures has been just flying away. Well, can't fly too much because there's a circuit now. But Nigel, let's not take our eye off on the metal screen as well, because all kinds of stocks, PSU, non-PSU, ferrous, non-ferrous, everything is surging. Picking up anything specific or just trading momentum?
Surbi, on the day that we had the Supreme Court verdict, I recall I made this point that the metal stocks have got knocked, but they haven't got knocked out, because that retrospective penalty, the breathing space was given that they can pay it within the next 12 years or so. So it wasn't a one-time hit. And from there, all those stocks are much higher in comparison to the lows that we saw on the day of the Supreme Court verdict. Now, in today's session, the metal stocks are at the day's high and the index as well. So I've put down 4 broad reasons. The first up is the commentary that came in from the Fed chair, Jerome Powell. He said that the time has come for rate adjustments. The street liked that very much because the dollar index is softer. And also there is optimism that we're going to see rate cuts. That's normally positive for metals, and that's why that's the global factor at play. Point number 2, China is always of prime importance, right? What's going on there? Now, there was some commentary that came in over the weekend, and that was that China has halted any kind of approvals for new steel capacity. That is good, because as of now, supply is way more than demand. So there's not going to be more approvals, then that will be good news as well. So that's why, in fact, that's good for the ferrous space. Also, we have seen a sharp correction, both in steel as well as in iron ore prices. But in the last week or so, you've seen a bit of a bounce on HRC, billet, rebar, even on iron ore. Those prices are up close to around 3%. So the China factor is positive in the right direction. The third factor, base metal prices have bounced. A softer dollar is normally good for base metal. And that's why you've seen, whether aluminium, zinc, copper, all of them have moved up. There is some supply curtailment as well that we have seen. In fact, Chinese zinc smelters, they are contemplating shutting down some of their production to stem the losses, which is very, very good for Hindustan Zinc and in turn good for Vedanta as well. Aluminium prices, by the way, in the last month or so, they're up close to 15% from the lows that we saw at the end of July. So that's been a good bounce that we've seen out there. And point number 4 is the domestic factor. JSW Steel has announced that they've gone ahead and they've increased rebar prices by 750 rupees per ton. This is good news because we're still in monsoon season. Normally you expect this in the second half of September. So there is some confidence that's coming back there, and that will be positive. When rebar prices move up, it's positive for long product prices as well. So that was a pleasant surprise. And Jindal Stainless, they went ahead and they've increased a part of their mix, or series mix out there of around 304, 316 series. That's the term that's given out there, by 3,000 rupees per ton. Input costs have gone up. Nickel prices have gone up, so that's why they've increased prices. So put these 4 factors together, the metal index is at the high point of the day, and a lot of those stocks are flying away as we speak. Well, let's get in our guest on the show then. Sudeep Bandyopadhyay joins us. Hi Sudeep, good afternoon. What's your view on this space? I mean, what's the pick of the pack? As we speak, we have Nalco that's moved to the high point of the day. You have some of these aluminium players. Vedanta has moved higher. Nalco, Hindalco, all of them. What do you like?
Well, good afternoon, Nigel. I think, you summed it up pretty well. With US interest rates expected to come down, China, things are getting better in terms of metal demand and domestic demand being strong. I think metals may be in for a good time for a while. Under these circumstances, I think most of the metal companies we are talking about are going to enjoy a bout of success for at least the foreseeable, maybe a couple of months at least. unless things change drastically in any of these fronts, which is unlikely to happen. As far as the specific stock is concerned, I've been positing on Vedanta for some time and have spoken about it multiple times. But Vedanta now again, with the zinc production being curtailed in China, Hindustan Zinc, I think, getting into a positive territory, and with all the metals getting into a situation where the prices are going up, Vedanta definitely benefits. Of course, on top of all this is what Vedanta has been doing as far as repairing their balance sheet and the balance sheet of the parent company. That does add significantly to the positivity around the stock. So the OFS they did and the money they collected will probably come back to the shareholders as dividend at some point in time. Also, the demerger process is on advanced stage. So at some stage, some of the companies will be, maybe sold in part or full. So that will again lead to value unlocking in a big way. So I think Vedanta is a good buy, even at current levels, from an investor's point of view.
Okay, all right, got it. So that's sort of 360-degree perspective on metals and what could be powering this kind of a rally today. Sudeep, hi, good afternoon. Thank you so much for joining in. There's so many individual stocks that are also catching the limelight, right? So I want to start first with the NIIT and what you made of this buzz around the investment that Mr. Damani made in the company, right? It's got the market so excited that the stock is up on 20% circuit now. What do you make of it if you've seen the company off late? Any views, any thoughts here?
Well, I think, I would say that overall technology space is getting hot. And we have seen that today happening with US recovery and US interest rates coming down. Very clearly, there is the fear of recession around, US is not there. And that augurs well for Indian IT companies. Now, as far as NIIT specifically is concerned, of course, the acquisition of stake by one of the leading investors definitely calls for attention. And apart from that, we have to remember that NIIT has stake by some other prominent mutual funds as well. So overall, I think there are a lot of smart managers who are banking and betting on NIIT. So under the circumstances, I'm not surprised that this stock is showing some excitement. So fundamentally, there is nothing wrong. Yes, today it has really moved up 20%. So maybe it's not the right time to buy today. Let it cool down a bit. Let things stabilize a bit, then one can look at it again.
Okay, got that. Just stay on. Let's actually bring in Rima as well to understand what that block was all about and how much equity has Mr. Ramesh Damani actually picked up. Rima, fill us in on the details.
Thanks so much for that. Big mover today. NIIT Limited, as you pointed out, Ramesh Damani, marquee investor, has bought 8 lakh shares last week at a price of 127. That's about 0.6% of the equity. But he's not the only large investor in the company. You also have Nippon Small Cap Fund with an 8% holding. Marathon Edge has holding. MIT has close to about a 5% holding. Now, just to give a sense about the fundamentals of this company. Now, in July, the company has guided that in Q2, they will see a top-line growth similar to Q1, which is 10% on a quarter-on-quarter basis. But the company is making investments, and therefore margins in Q2 could be negative. They're talking about single-digit margins at this point, though they will turn positive in Q3 and Q4, and therefore for the full year, the company is guiding for a top-line growth of 380 to 400 crore rupees with low single-digit margins.
All right, understood. Got that, Rima. Thanks so much. But before you go, Rima, tell us a bit more about the buzz on IT. The sector seeing so much buying, despite the fact that fundamentally, I mean, again, this quarter did not throw up any major positive surprises. But I know you've been looking at some brokerage notes as well. So what's the latest?
Thanks so much for that. So IT has been the leader in today's rally on hopes that the Fed rate cuts begin as early as September. And we know, history tells us that whenever there is a rate cutting cycle, technology stocks, whether in the US or in India, tend to do well. But there is an interesting note from Jefferies where they talk about Indian IT having outperformed the Nifty since calendar year 2023. So after a sharp underperformance in 2022, the Nifty IT outperformed the Nifty by 4% last year. And even this year, it's outperforming. But this outperformance has come despite there being earnings downgrades. Except for TCS, large cap and mid cap IT companies have seen earnings downgrade. So therefore, Jefferies is arguing that this upmove seen, this outperformance seen in Nifty IT is led by PE re-rating. So the 16% year-to-date upmove in Nifty IT is driven by an 11% PE re-rating, and now Indian IT stocks are trading at a premium to their historical averages, while Accenture is trading at a discount to Indian IT names. So divergent trends seen between Indian IT and Accenture. According to Jefferies, valuations are rich. The Nifty IT is at 29 times. It's trading at a significant premium to Nifty IT at 40% more than what we historically see, and therefore they say it's time to be selective on this sector. They like Infi and TCS given the limited risk to their earnings and relative valuation comfort. So yes, IT is doing well, but as Jefferies argues that this outperformance seen by IT has been driven by a PE re-rating and not by earnings upgrades.
All right, Rima, thanks very much for that. So, Sudeep, there you go. I guess macro tailwinds, sentiment, something or the other seems to always work well for the IT sector, even though the numbers aren't still showing up. The growth, we're still talking about anemic growth. What would your stance be? Would you look at adding to any positions on IT now? Any stocks?
Well, I think I completely agree with this, report which was mentioned by Rima. One thing is very clear. Whenever there is a interest rate reduction cycle, IT does well. The second factor, which is here most important and one needs to notice, is that there was a fear that US is getting into a recession. The new projects will not come, existing projects will be held back, and things like that. Now, that definitely is not there. With US economy continuing to grow and grow much better than most other developed countries, leave aside India and few of the outliers. So under the circumstances, I think IT companies' order book will continue to grow and there will be no project stoppages or project cancellations. So this does augur well. Now coming to the valuation, yes, Indian IT companies, particularly I find the mid-cap segment quite kind of richly valued. So under the circumstances, if somebody has to look at IT, I've been recommending that, TCS, Infosys, the leading companies, I think the valuation comfort is still there, and there is very little which can go wrong in terms of earnings in these companies. So it's better to stay in these companies under the circumstances.
Okay, all right. So that's a view on IT. Let's take a look at some more stocks that are managing to move around. One of them, as we mentioned, is Motilal Oswal. The other is DCW, the whole story around the anti-dumping duty on CPVC. That seems to be working well for this one manufacturer of the CPVC resin. That stock's been up and about. We spoke to some of the pipe manufacturers. Some of them, like Finolex, said that it's a pass-through, so won't really have much of an impact on either volumes or pricing. Epigral is the other one that is into the CPVC chain. That stock, however, has cooled off from the morning. Any thoughts on this entire complex, PVC pipe makers or CPVC pipe makers, Sudeep, and what you made of this anti-dumping duty? Basically, it's an extension. It was set to expire, I think, in the next couple of days, but now it's been extended.
So it's pretty much a continuation of the existing regime, Surabhi, and I don't think anything changes drastically. Yes, there was an apprehension that if this goes out, there will be challenges as far as these manufacturers are concerned. So that's been taken care of, and rightly so. So I don't think we need to look at specially into this segment because of this anti-dumping duty continuation. As far as these pipe companies are concerned, some of these do look good from a long-term point of view, considering the emphasis on infrastructure, construction, and what's happening in the economy.
Okay, all right. As we speak, we are seeing a bit of a spike up both on MCX Gold that our ticker team is alerting, as well as Brent. Both of them have moved to the high point of the day. Both have moved up post that news that flashed for you on the screen on Russian military aggression. So that's why we're seeing a bit of a pop up there, because the energy part is where they have attacked. So that in all probability could create some bit of a shortage. At least that's the way the market is viewing it. And the flight to safety because of this, this war cry again coming to the fore. So I think that's the reason why both those two commodities have moved up. Well, Sudeep, wanted to ask you about the EV play. We'll play bites later coming in from Mr. Rajiv Bajaj as well on how does he see things shape up. But what's your view out there? There's Ola, there's Hero MotoCorp that has a stake as well, in one of those EV players. Bajaj Auto is there, and there's bits and pieces players like Greaves Cotton. What do you like from this space?
Well, very honestly, I'm yet to make up my mind whether this sector is really worth at the kind of valuation where Ola Electric is trading. I think it's a very, very small niche segment of the market as of date. Yes, we all agree that there is significant potential, but globally, Nigel, the EV part in two-wheelers hasn't picked up. Now, having said that, I must say that as far as India is concerned, two-wheelers is a very large segment, and two-wheelers and three-wheelers both. And maybe India is the market where this trend may change. But it's too early to comment on a winner as far as this segment is concerned. Ola has made the right start, right noises. The battery plant is coming up, which should improve their margin, provided international battery prices don't crash and it doesn't become a millstone around its neck. So we have a whole lot of things to see. The volumes are too low at this stage to really move the needle for a large manufacturer like a Bajaj or a Hero MotoCorp. So I don't think we need to take a very strong position or a very firm view on this. We have to let it play out for some time before we take a call. If somebody needs to participate, I think Bajaj or Hero MotoCorp will be a better bet because they are established players and they have the IC business going and chugging very well.
All right. Okay. Got it. Thank you so much for that, Sudeep. Good to have you on and to get all that perspective from you. You have a good rest of the day. By the way, the geopolitical updates coming out of the Middle East that Nigel was just talking about, let's pull up Brent oil prices as well, because when we started the day in the morning, Brent was close to 79. Now it's inching closer and closer to $80 a barrel. So there's been a move of about, $1, near about $1 on oil as some of these updates keep coming through. So yeah, eye out on the commodity complex for sure. We'll take that break, come back on the other side, and there's lots more to talk about. We'll also be joined by Nikhil Ranka of Nuvama Asset Management, get some perspective on the long-short strategies that he manages.
Key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
Investing.
Welcome back. It's time to say hello to our next guest on the show. We have Nikhil Ranka, CIO Equity Alternatives at Nuvama Asset Management, joining in. Nikhil, good to have you on the show. Welcome to Closing Bell. So we were just going through the kind of funds that you manage. I think the two strategies that you look at, it's a mix of long, short, and I think you also look at some technical indicators and positions and, of course, fundamentals as well. So just tell us, what's the market call as you see things right now?
So good afternoon, Surbi and Nigel, and thanks for having me on the show. So as you said, we have our flagship fund Edge, which is a long-short fund, and we also have our absolute return strategy. Now coming to the market outlook, if you look at the longer-term valuations at where markets have traded, broadly the median multiple is closer to 19.5 times 1 year forward earnings. Today, as we stand, if you look at the Nifty EPS, consensus Nifty EPS for FY25, we are somewhere closer to 1130. And for FY26, we are closer to 1260 rupees of earnings estimate. Now, if I put a 20 times multiple to that 1260 rupees of EPS, then we get a fair value of Nifty closer to 25,200, which is not very far away from here on. And typically what we have seen is we get a multiple re-rating cycle when we see earnings upgrade. If you see the Q1 earnings that we just finished for FY25, on an ex-OMC basis, we have seen high single-digit growth on Nifty earnings. And if you take OMCs as well, we are sub 5% in terms of earnings growth for this quarter. So my sense is the base case is that we will have some sort of time consolidation in the near term. However, 6-9 months down the line, when we roll over to FY27 earnings, we will probably be looking at closer to 1,400 rupees of EPS for FY27. And then using the same valuation framework of 20 times, we could then be staring at a Nifty target of closer to 28,000. So if we get a decent dip of 4-5% on the markets, then one should look to add back positions in markets.
All right. Hi, Nikhil. Good afternoon and good to have you on the show. Nikhil, the markets today are reminding you of Mike Tyson in its prime, right? You throw it anything and it's punching it out. Whether you talk about a war, you talk about weak data, you talk about good data, you throw anything at it and it's knocking it back out. So we've got the upside targets. Near term, 25,200. Maybe in the longer term, we head towards 28,000 odd. What's the downside risk though? What's the, you said maybe you could, look to add if you get a 4-5% correction. But at the extreme end, what should the downside look like? That's the worry, right? So I wanted to ask you your view.
Correct. So typically, Nigel, negatives which are known to the markets will not lead to a major fall in markets. So be it the Middle East crisis, we've seen crude flaring up because of that, but this is something which is well known to the markets. If there's some sort of political instability that comes through, if we see BJP losing their grip in the state elections, then that's some sort of worry, because markets will then start building that there could be some populism that can come through, and that could lead to a 4-5% correction in the markets. But if you look at the cash levels with mutual funds and the liquidity that is slashing around, I think unless there is something which markets cannot see today, it is unlikely that we will have more than a 4-5% correction in the markets. And if we get to that 4-5% correction mark, we get to 24,000 levels, then as I said, from a 12 to 15 month horizon, you are looking at a levels closer to 28,000, which would mean that you will still make 15-17% in the markets. And my sense is everybody will start to get their dry powder deployed if we get that 4-5% dip in the markets.
Nikhil, let's go with the key overweights on the long side. What are the major positions that you have and what do you like at the moment?
So in terms of overweight, if you look at it, banking and OMCs are the two sectors that we are positive on. So firstly, if you look at banking, some of the large cap banking names, if you look at it 2-3 years back, they were trading at closer to 3-3.5 times 1 year forward price to book. Today, if you look at that sector, valuations have compressed to probably 1.8 to 2 times FY26 price to book. And these are still making 15% ROE profile. So the base case is that even if multiples do not re-rate from here, you will at least compound at the book value. And therefore, if 15% is what the book will compound at, one can look to make at least 15% from the large cap banking names. If you look at some of the larger PSU names on the banking side and you strip off the value of subsidiaries at closer to 240 rupees and you take standalone book FY26 book at close to 560 rupees, then probably, it becomes more closer to one-time price to book for a 15% ROE profile. And we feel from here on, the downside will be very limited in those names. The street is obviously concerned about the NIM compression that will come through once we have the rate cut cycle coming up. Because if you look for most of the banks, almost 40% of the book is linked to repo rates. So when the first rate cut happens, banks will have to pass on the lending rate cut immediately. But given the challenges on deposit mobilization, the fall in deposit rates will happen with a lag. So you could have 4 or 5 bips of NIM compression that can come through. And we've also seen some sort of credit cost inching up on the retail side. Having said that, my sense is valuations are factoring most of the negatives for banking names. And these are good levels to enter into banking with a medium-term horizon. Second, if you look at OMCs, you have two components of earnings for OMCs. One is on the refining side and one is on the marketing side. Refining, undoubtedly, we've seen some cool off. Indian refining margins have come closer to $5.5, $6 per barrel. But if you look at, 2-3 days back, the marketing margins on petrol, they were closer to 8 rupees. On diesel, they were closer to 7 rupees. And our view is, notwithstanding the near-term volatility in crude prices, if you look at the spare capacity that is available with OPEC, OPEC is today at a production of close to 27 million barrels, and they have close to 6.5 million barrels as the spare capacity which they can raise output if there is some supply disruption that happens in the near term. Iran total production is close to 3.3 million barrels. So even if there is some sort of geopolitical tension that spikes up, my sense is the up move in crude oil prices will be pretty short-lived. And those corrections can actually give very good entry points for some of the OMC's names.
Okay, all right. Nikhil, all that glitters is not steel. I believe that's the mantra. We have been talking about how these metal stocks are doing well. You wouldn't be allocating out there. But what if someone has it? Will you be advising them that maybe gradually book out some of these positions on these bounces?
So Nigel, we have a cautious view on steel actually. So 2-3 factors for our cautious view. Firstly, if you look at our FY24 consumption of steel, we were closer to 135 million tons. Now, in the next 6-8 months, as a whole, the industry is likely to add closer to 25 million tons of steel capacity. All the major guys are adding 4-5 million tons individually, be it JSW Steel, HCL, Tata's Kalinganagar project, even NTPC Steel will ramp up to its full 3 million ton capacity. And we've seen historically that demand growth has been in the high single-digit number. So once all this capacity comes up, it's likely to put some pressure on the utilization rates for most of the large guys. Secondly, if you look at the pricing dynamics, today the domestic prices are at a 4,000 rupees premium to what the import parity pricing works to. So even if there is some sort of uptick in the international steel markets, my sense is our prices will move up with a lag. The third point is, if you look at the recent Supreme Court ruling, they have allowed states to levy taxes retrospectively on the minerals. And so, therefore, you will see that, whenever states are short on some sort of budget, they can increase the royalty on minerals, and that will create another headwind. And finally, if you look at it post 2020, some of the captive mines which were allocated to large cap steel guys, there they will come up for rebidding. You will have to bid at some sort of royalty to the Indian Bureau of Mine Prices. So a combination of all these factors makes us feel that probably profitability will get capped for steel names, and they are still trading at closer to 7 times FY26 EV/EBITDA. So the risks on the steel seem to be more on the downside for us rather than on the upside. So we are underweight on that sector.
Okay, underweight on steel. So just to round that off, are you running shorts? I mean, is that one sector where your maximum shorts would be? We discussed the long. So on the short side, is it metal? Is it something else? Just very quickly, just the sector, so we know the strategy and the portfolio mix.
So broadly, I would say our major hedges are through indices should be so because that's more representative of the overall portfolio that we run. So there can be some short position here or there, but broadly, I would say whatever exposures that we have to manage in terms of our net deltas, that we typically do through indices, Nifty and Bank.
Okay. Got it, got it. So the shorts and the hedging there managed more through the indices than rather stocks or sectors. Got it. Thank you very much, Nikhil. Good to have you on the show today. Appreciate you taking out the time and being with us. All right, let's move on now to a big CNBC TV18 exclusive. In a conversation with us, Rajiv Bajaj, the CEO of two-wheeler giant Bajaj Auto, shared the company's goal of surpassing 100,000 clean energy vehicle sales. That's, unit sales per month. So the run rate is going to cross in excess of 1 lakh in the coming months. That's what Mr. Bajaj said. Of course, he was in conversation with Parikshit, and a whole host of very interesting takeaways came up. We actually have Parikshit joining in. Parikshit, there was so much that you discussed with Mr. Bajaj. So let's go through one by one some of the main highlights as this stood out for you.
One thing that really stands out is that clean energy technologies will be the big focus of Bajaj Auto into the next decade. Yes, they are soon going to reach the milestone of 100,000 clean energy vehicles, including CNG, CNG three-wheelers, electric, and also maybe an ethanol motorcycle very soon. He also told us that the next 100,000 clean energy vehicles would come in a shorter span of time, that is in the next 2 years or so. Some of the big announcements, that 25% of Bajaj Auto's revenues are already coming from clean energy vehicles, and they could end FY25 on a higher note. They are delivering around 9,000 Freedom 125 CNG bikes this month. Next month, the capacity and the company is also hoping to sell 20,000 CNG bikes by September, and this number could go up to 40,000 by January. So they're targeting a big segment, that is the 100 to 125cc segment, and they want to increase their market share by at least 5% over there. As we said, an ethanol motorcycle and an ethanol three-wheeler will be showcased by Bajaj Auto next month during the SIAM convention, and probably sometime early next year, they could launch that ethanol motorcycle and ethanol three-wheeler as well. On the EV front, when many companies are struggling with profitability, Bajaj Auto says they have already become profitable with their entire EV portfolio. They also have a completely new Chetak platform being launched very soon. They have a 36% market share in electric three-wheelers. This is a space they would like to expand and become a market leader in and have a 80% market share. Rajiv Bajaj also told us that a CNG motorcycle, a second CNG motorcycle is coming soon from Bajaj Auto, and batting for a reduction of GST on CNG two-wheelers. He said government must consider GST reduction on CNG two-wheelers because we have to follow a two-pronged strategy towards energy transition and make sure that by 2030, majority of India's two-wheelers move to either EVs or CNG. And he hopes the government is looking at his recommendations favorably. On the possibility of more partnerships, he said that the company is considering and working on a very strong and meaningful partnership with an international company, but more on that later. And in the end, ever since their 17th AGM, where he said in lighter vein that probably it's time for Bajaj Auto to have a new MD, there has been a bit of speculation about his succession plans. But on CNBC TV18, he clarified and said he has no plans to go anywhere and no plans to retire either.
As we head into the festive season, in the months of September, October, November, we are very likely to cross a monthly sales production and sales rate of over 100,000 clean energy two-wheelers and three-wheelers. But I would hazard that definitely over 25% of our current revenue is already coming from or about to come from clean energy vehicles, which is quite remarkable. See that Chetak is now close to about 18% market share, or just above 18% market share. We are neck to neck with our able competitor TVS and their iQube. I think just a few hundred vehicles separate us. Having just launched a third product, there are more due later this year, within this financial year. We talked about it the last time we met a couple of months back. And I think post the festive season, and before March, certainly there will be more Chetaks in the marketplace. And I could reiterate what I shared with you the last time, that not only will there be more Chetaks in the market of the current platform, hopefully very sharply positioned, but there will also be a new Chetak platform.
Well, Rajiv is smashing it as always. Interesting conversation that he had with Parikshit earlier today. For the time being, we'll slip into a short break. You come back, we'll get you some trading ideas. Our technical expert will be back with us. Welcome back. Markets holding steady above that 25,000 odd mark. We're not getting that final dash that some would have expected, but there are stocks moving around. Tata Elxsi, that's taken off, now up closer on 7%, so big up move is what we are seeing. The dip that we saw in IndiGlobe Aviation, that got bought into, so that stock as well has done quite well. On the flip side, you have a few stocks that have moved lower. Strides has seen profit taken from the high of the day, so pull that one up. And Syngene as well is a little bit lower as we speak. Ashish Kayal is back with us. Ashish, tell us what's the call you have for us at around 3:15 for a buy or a sell call for a reverse trade in the next few days?
Hi, if you look at the entire space is buzzing, and I do not have the guts to go short on the market when we can see that there are many stocks that are buzzing around, and yes, on the upside. So the first buy call is going to be Poly Medicure. We can clearly see a very strong rise in the stock from past few days, and even today there is a strong attempt on the upside. We can expect the stock to reach towards the level of around 2,500 or possibly higher from there. And on the downside, one can maintain a stop loss of around 2230 levels. The next stock on the buy side is going to be MotoCorp. We can see a huge run up that happened yesterday, consolidation today, but I think the entire technology space is going to buzz around, and we can expect MotoCorp to reach towards the level of 700 on the upside. One can create long positions on any dips here, and on the downside, maintain a stop loss of around 580 levels.
Got it. Okay. All right. We've got that. Ashish, thanks a lot for joining in and giving us that call. Well, I think we have Gurmeet Chadda as well, who's joining in. Before that, actually, let's get in Vivek. He's been updating us about those possible changes that could have taken place in Nifty, and that's been officially announced. Vivek joins us to help us out with a quick revision of that. Vivek?
Well, that's right. All through Friday, we had told you about how the NSE Index Subcommittee would be meeting, and they would most likely be going ahead and announcing changes of the constituents of the various NSE indices along expected lines. They've announced a whole raft of changes. The ones that we are highlighting are the ones where you will see some passive index fund impact. And on the back of that, the first index that we're looking at, of course, is the Nifty 50. Nifty 50 will see two new inclusions come September 27th. We'll see Bharat Electronics and Trent be a part of the Nifty 50, and Divi's Lab and Mindtree will be exiting the Nifty. Bharat Electronics, on the back of that, expect to see inflows of over $460 million. Trent expect to see inflows of over $640 million. On the other hand, Divi's Lab as well as LTI Mindtree will see outflows of over $260 and $220 million respectively. Nifty Bank, Canara Bank comes in at the expense of Bandhan Bank. Canara Bank will see inflows of a little close to $80 million. Now, talking about FTSE semi-annual review changes, again, Friday evening, FTSE went ahead and announced a whole host of additions, as far as the Indian market was concerned. Now, this is for the FTSE All Cap as well as the All World Index. The index that we generally track is the All World Index, given the fact that it is the one that generally sees a higher tracking position. Rebalancing on the back of all of these changes will lead to net inflows for India of close to $1 billion, and the adjustments will take place on September 20th, 2024. Whole host of changes as far as the All World Index is concerned. 13 additions, no deletions. Amongst the top names, Bank of Maharashtra, Central Bank of India, Escorts Kubota. Two new additions, into that particular index itself, GTND as well as Hitachi Energy India. Now, when you're talking about the All Cap Index, they've gone ahead and announced 48 additions. There are no deletions over here as well. So almost $1 billion of inflows on the back of the FTSE, announcement that came in post-market hours on Friday.
Okay, all right, got that. Thank you very much for that, Vivek, for all the movers and shakers. By the way, look what's happened to the mid-cap market. Remember, when we started the show, I was talking about index-level underperformance. That's been completely corrected because now the mid-cap index, look at the surge on that index, and that's something you can't ignore. And a lot of newer names are joining the party. Case in point would be Tata Elxsi. Look at a 9% up move right now on Tata Elxsi. PB Fintech is suddenly, flying high, 7.5% on the upside. Of course, there are the usual names that we've been discussing, like, GSPL right from the morning, Motilal Oswal, Honasa, NetWeb, there's Quest Corp, which is up 6-7%, Quick Heal 14%. So massive moves coming through on many of these stocks. So it seems mid caps and small caps are saying that why should we be a step behind? We want to tango in tandem with the large caps today.
They're jiving, doing the salsa, as we speak, because it's a big catch-up that's taking place. Let's talk about one such stock, Bansal Wires. Investec, well, they have initiated coverage buy rating, target price of around 440 rupees. This is one of the new listings, by the way. A few factors that they have pointed out. One is that the company has created a niche for itself on the commoditized steel, stainless steel wire market as well. And they're also offering wide range of products, and they have diversified their customer as well as their industry base, which they believe is good news. Now, they've undertaken two initiatives, and both those initiatives are sharply profitable. The two initiatives are they are foraying into steel cords as well as backward integration and stainless steel rods. So Investec likes that. In terms of profitability, they are factoring in 40% CAGR on the EBITDA front over the next 3 years. And they're saying that the post-tax ROCE will be in high teens, which they like. Valuations as well, they believe, is undemanding at around 24 times its forward earnings. If they're looking at FY26, then it's 24 times. If you're looking at FY27, it's at around 17 times. But all this together, Investec likes it, and the market as well likes what they had to say. That's why the stock is up close to around 5% as we speak. Gurmeet Chadda is with us to help us with some fundamental analysis. Hi, Gurmeet. Good afternoon. Good to speak to you after a while. What's the view? Bansal Wires, do you all have a view out here? Anything you like from this space?
No, we do not have Bansal Wires in the portfolio. We have KEI Industries and Polycab, not exactly correlated, but Polycab we've been holding for quite long. We continue to gain market share. There was a bit of a hiccup due to the tax-related news. So it's a good play on housing. Second, it's a larger play on infrastructure and capex revival. While the valuations, do look stretched, but if they can continue to gain market share and probably grow at 20-25%, they can probably justify that. And we have in some portfolios, KI Industries in a non-discretionary portfolio.
Okay. Gurmeet, hi, great to have you on. I mean, I don't know what to make of it. Just sudden trading flare in so many mid-caps. We were just discussing this right now, including names like Tata Elxsi. Now, this is not a very small stock. It's a well-owned name. 10% up on Tata Elxsi now. Any thoughts here?
See, it's been underperforming, Surbhi, for a while. If you see, it used to be 10,000, 11,000 plus, and I'm not comparing it with KPIT, but similar play, more on auto and aerospace. Tata Elxsi is more towards JLR, and KPIT is more to CASE, which is connected autonomous shared electric, and with top 15 out of 20 auto labels in the world. The only thing is you got to be a little careful in this mid cap rally. So if you see the BSE 500 results which have gone by, almost the result season was hardly 4-5% earning growth. About 300 stocks are at 45-50 times earnings out of BSE 500. And I don't think so a large of them can repeat 20-30% earning performance. So it could be a bit of a catch up the way other mid-cap IT stocks have rallied. Mind you, I have nothing against Tata Elxsi. It's a great company, great skill sets they have. It's just that the valuation wise on mid-cap, especially mid-cap IT, you've got to be a little careful. You can't be paying 50-60 times earnings, in an environment like this when US is actually thinking of cutting rates.
Fair enough. So we need to tread with caution. Take that point. Stay on. Gurmeet, we have lots of questions for you, but we do need to take a very quick break. We'll take that break, come back on the other side with, of course, some of the key movers and shakers this hour.
US Vice President Kamala Harris created history when she accepted the nomination to contest the US presidential election. She's the first woman of color and the first South Asian American to become the presidential candidate. She has Indian roots. 59-year-old Kamala Harris is half Indian and half Jamaican. Her full name is Kamala Devi Harris, daughter of Shamla Gopalan Harris, a biologist from India, and Donald J. Harris, an economist from Jamaica. Kamala Harris's mother is from Thulasendrapuram, a small village in Thiruvarur district of Tamil Nadu. Shamla Gopalan, a cancer researcher, had migrated to the US in 1958 and graduated from the University of California, Berkeley. She met her husband, Donald J. Harris, at the university, and the two got married in 1963. Kamala Harris has a sister, Maya, who was seen at the Democrat National Convention as well.
Welcome back. You're with us on Closing Bell. Let's get you some more market opinion. We caught up with Gautam Trivedi of Nepean Capital earlier in the day. We spoke to him about the current market situation, the way fundamentals are shaping up, valuations, and of course, some of the concerns emanating from geopolitics. Take a look at what he had to say.
It's 41 consecutive months of net inflows coming into the market. If you look at the additions, last month alone, we added 2.3 million new registered investors. And that takes the absolute number to beyond 100 million. The reality is, if I were to generalize, the market is invariably still very expensive. And, whether you look at cement, whether you look at auto, whether you look at the metal space, everything's expensive. So it's very hard to actually generalize with respect to sectors. But if you dig deeper and find individual stocks that have been beaten up, now they could be beaten up for a variety of reasons. But like I said, if there's a turnaround happening in a specific sector or a stock, I think that's the time to focus on. We still like Zomato a lot, and I think the fact is Blinkit is starting to outshine the core Zomato food delivery business. So quick commerce has taken off in a major way, and I think with a 45% market share, we're banking on Zomato as a way to play the quick commerce space. So the new age tech companies, and I think they've come a full circle in terms of now being appreciated as companies that will create huge wealth over the next 5 to 10 years.
Okay, all right. Well, just take a note of this company, Aarti Drugs. They have announced a buyback. Just to give you a few details, the reason that the stock is surging is because the street has only taken note of the buyback price, which is 900 rupees. But it's a very, very small buyback. So just want to alert our viewers, the stock is up 10%, but the buyback is only around 59 crores. The market capitalization is 57 crores. So ideally, the stock shouldn't be running away. On fundamentals, 10% up on such a small buyback, it's extremely small, only around 59 crores odd. Gurmeet, the comment on this one. Aarti Drugs, do you all track it? Any view out there? It's up 10% when the buyback size is extremely measly.
Did they miss a couple of zeros maybe in the print in the release? I don't know.
Bull market.
57 crores buyback, right?
Yeah.
Okay.
59. Gurmeet, your view?
Classic bull market, Nigel. And, the pharma in general, I think one big trigger could be post-US elections. You're just talking about a biosecure law, which means they want to only secure raw materials, APIs, and contract research only from non-adversary nations, which basically excludes China, Russia. Now, that could be a huge opportunity for a lot of API names in both formulations as well as molecules, as well as, in CDMO names, also in general generics. So I think that's something we'll closely follow. For now, I think we're right now focused on branded pharma, especially like, Mankind Pharma. Post the acquisition, there was some correction in the stock. We have a few CDMO names. One of them is done very well, which is Newland Labs. The other one is still flat, which is Laurus. And now also looking at selectively at diagnostic space as well. So we are confined to these 4 or 5 names for now.
Okay, got that. Gurmeet, what about some of these other movers and shakers, especially in the RP Sanjeev Goenka group, right? It started with Philips Carbon Black, and then last I saw Saregama was up, and then there's RPSG Ventures. Not sure what's really going on here. Have you had the time to apply your thought to it? Any views?
Not really. I think could be a bit of a catch-up. And, market prices, if the entire group is moving, I think there could be some corporate action. I don't want to speculate here, but there could be some corporate action. We did have Saregama at some point of time in our portfolio during the COVID period. But, the entire hypothesis there was, the online content and music streaming will continue to go up. That got challenged when markets started reopening up and we exited Saregama. Other than that, we do not have any exposure to the RPG.
Okay, so leave us with the one interesting stock on your radar. It's a big day for mid caps today. Has been lots of flair in the market. What's interesting you of late?
So one space we got lucky was the recycling space. So we got into Ganesha Ecosphere very early. We had Gravita. So we're very keen on playing this theme. The other one which is catching our attention is now some IC engine auto ancillaries who are now transitioning to the EV play or green energy play. One of them is Precision Camshaft, market leader, 60-70% market share in camshafts. Now they are getting into the electric powertrain in terms of converting the old vehicles into EV. So it is called retrofitting. They have a subsidiary called EMOS based out of Netherlands. Currently they are doing about 10 per day. And if there's more demand, that can be they can increase the capacity. M&M used to make their own camshaft. They've started also coming to them. So the core business does very well. And retrofitting can have savings of 4-5 lakhs. You can actually convert 4-5-year-old vehicle sub 4 ton on commercial vehicles to this. Right. So that's an interesting play we are looking at.
Interesting one. Got that. The bell's going to go any second now, Gurmeet. Thank you very much. But we'll talk to you on the other side. Let's just get through the recap of what's been a good day for the market. 25,000 on the board as we are counting down to the close. Some of the big gainers today included stocks from the IT space and the metals and the commodity space. So HCL Tech is leading away with an over 4% up move. Hindalco is a close second with a 3.9% up move. NTPC, ONGC, these are some of the PSUs that have had a good run today. Then you have, of course, Tech Mahindra, LTI Mindtree, Wipro, these names from the IT side. And, of course, names like HDFC Bank, L&T, they supported the bulls with gains coming through. Actually, the Nifty tally is looking pretty good, barring a couple of names. Like Apollo Hospitals, there was a brokerage note which was not very favorable for Apollo today, so there was some profit taking. Hero Moto on the lower side. Grasim and Eicher Motors were some other stocks which were down 0.5%. But other than that, the Nifty was okay. Not too much lost. And by the end of it, Nigel, even mid-caps playing a very smart catch-up.
Well, that's right. Surabhi, just a quick couple of points. There could be possible F&O stocks that are in the band that come out. Hindustan Copper, Granules, as well as GNFC and Nalco. I'm going to keep an eye out on all these stocks. The list will come out later today. So we'll keep an eye out on these: Hindalco, Granule, GNFC, as well as Nalco. And there could be a few stocks that will come back into the F&O band, which include Bandhan as well as PEL. So we'll keep an eye out on those stocks as well. For the time being, we'll wrap up on this edition of Closing Bell. You don't go anywhere. We come back. Markets Forward is waiting for you.
Campaign ahead of the 2020 presidential election, and even now in the run-up to the 2024 presidential election, Kamala Harris has spoken about the profound impact her mother had on her life.
My mother, our mother, Shamala Harris, had one of her own, and I miss her every day, and especially right now. And I know she's looking down smiling.
Kamala further said that after finishing her graduation in the United States, her mother was going to return home to India. But she met her father, Donald J. Harris, fell in love and got married. The Democrat nominee described her mother as a tough, courageous trailblazer in a fight for women's health. Harris said that her mother taught her to never complain about injustice, but do something about it. Dr. Shamla Gopalan Harris died in 2009, a year before Kamala Harris was elected as California's Attorney General. In the past, Kamala Harris has often said that India was a very important part of her life, and her mother would take her to India pretty much every year. Those trips to Chennai helped her to understand where she came from. She got to spend time with her grandparents, with her uncle and her chitties or aunts, and got to understand the love of a good idli. Kamala Harris's grandfather was a civil servant who participated in India's freedom struggle against the British. Her mother, Shamla herself, participated in the civil rights movement in the United States. In the small village of Thulasendrapuram in Tamil Nadu, where Kamala Harris's mother grew up, a set of people have been praying for Kamala Harris to win the presidential election. They hope Kamala Harris will one day visit the village and do something for their community.
Overall, the economy continues to grow at a solid pace, but the inflation and labor market data show an evolving situation. The upside risks to inflation have diminished, and the downside risks to employment have increased. As we highlighted in our last FOMC statement, we are attentive to the risks to both sides of our dual mandate. The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. We will do everything we can to support a strong labor market as we make further progress toward price stability. With an appropriate dialing back of policy restraint, there is good reason to think that the economy will get back to 2% inflation while maintaining a strong labor market. The current level of our policy rate gives us ample room to respond to any risks we may face, including the risk of unwelcome further weakening in labor market conditions. Pandemic-related distortions to supply and demand, as well as severe shocks to energy and commodity markets, were important drivers of high inflation, and their reversal has been a key part of the story of its decline. The unwinding of these factors took much longer than expected, but ultimately played a large role in the subsequent disinflation. Our restrictive monetary policy contributed to a moderation.
Positive global cues helped the Nifty post a record close. Holds above the 25,000 mark. Metals and IT back for the bulls. Banks and mid-caps underperform in trade.
Metal and IT stocks rally after Federal Reserve Chairman Jerome Powell points towards a rate cut in September. Jefferies bets big on Indian IT services, says the stocks will benefit hugely from a rate cut.
Zydus Life Sciences dips after global peer Teva gets a nod from the US FDA to launch a generic that it was a sole supplier of. NIIT soars after veteran investor Mr. Ramesh Damani buys 8 lakh shares in the block deal on Friday. And ONGC gains as it buys its 5th of its 13 oil wells on stream in the Krishna Godavari basin. Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points with regard to today's trading action, and we'll gear you up for tomorrow's session as well. I'm Michael D'Souza. Joining me as always, my colleague Surabhi Upadhyay. Well, Surabhi, a good, steady session today.
Yes, and not too far away from fresh all-time highs. Lots of green today.
Well, that's right. And in the next 20 minutes or so, we'll get you up to speed with regard to what went on today. Big news, top corporate voices, all that and more is covered in the next 20 minutes. But first up, let's run you through all that went on today. But it was a good session. The Nifty opened gap up and we ended with a gain of a double century. So the bulls were like that. What was missing today was that knockout punch. You know, the Nifty bank actually couldn't get past that resistance mark of around 51,300. Otherwise, in fact, we could have easily made fresh all-time highs today. What helped us was the overnight cues. You know, you had the Fed chair, Jerome Powell, that sounded dovish, and he suggested that maybe rate hikes are almost a certainty in September itself. So the global cues were positive, the dollar index was weaker, and that's why, in fact, you know, the markets ended higher. What we're ignoring, though, is any kind of negative news on the geopolitical front. The markets, for the time being, are brushing that aside and just marching away on the northward side. The intraday chart of the Nifty bank actually will tell you the picture, because that couldn't really build on to the gains. But what was encouraging us towards the end of trade, the mid-cap index as well came to the party. It was doing a relative underperformance getting into the final hour of trade, but that played catch up as well. So good going on that front. All in all, your portfolio will be feeling good today. Good session, almost at all-time highs, Surabhi.
Absolutely, and lots of sort of pillars supporting this market move. Like you said, banks kind of decided to move along. And then you had the twin engines firing IT, which was very, very strong. Let's pull up the IT index. It remained rock steady. I mean, there was no profit taking, so to speak, by the end of day. That's the IT index for you. And metals, in a bit, will tell you just how shiny this part of the market was. Ferrous, non-ferrous, all kinds of stocks were up and about. So that was another very, very strong showing. Commodities in general, even beyond metals, are in sharp focus because of what's happening with geopolitics. I mean, there's a Russia-Ukraine issue. While we were trading, there were talks of some major strikes at oil installation infrastructure in Ukraine. And oil prices actually moved higher. In fact, if you look at Brent oil prices, from a start of around 78, 79, we're almost touching 80 by the time we closed out trade. So this is going to be a very, very important watch point even as we go forward. But the mid-cap flare is really where the action was. The party, as Nigel called it. And I'll just call out some stocks as examples. I mean, the intraday charts will tell you the sort of money flows coming in and the way these stocks are flying around. Look at something like Tata Elxsi. Sudden move, 9%, 10% on the upside. And these are large mid-caps. They're not very small stocks. That was one. PB Fintech, again, you know, cruising along and really rising high towards the end of the trading action. And then there were others like Honasa, which were very solid, very steady right from the word go. So we'll run you through more such examples as we go forward. Let's tell you what the lineup is like today. We'll start off with, of course, more of these movers and shakers. Vivek will have the complete lowdown for us in terms of what went up and what went down. Some of the key stocks we're looking at include Zydus, NIIT. The sector in focus, as I just pointed out, was IT as well as metals. So we'll get to more reasons why these sectors saw such buying today. And of course, we'll get you then all the key events to watch out for tomorrow as well. But first, the up and the down with Vivek. And Vivek, more up than down today.
Absolutely, more up than down today. The screen was green, advances outpacing declines all throughout. Whole host of stocks on the radar, but you can't escape the fact that it was the metal index that shone very brightly today. All of the metal names, ended higher. Have a look at some of the names like Hindalco, top Nifty gainer, JSW Steel, Vedanta, SAIL, NALCO, NMD. All of them were up in the session today. The next set of stocks, along expected lines was the IT pack. After the strong positive commentary that came in overnight, the entire IT pack, both, the large cap names as well as the mid cap IT names, all of them moved higher in the session today. Look at names like HCL Tech, ended near the highest point of the day as well. Birla Soft, from the broader end of the market, almost 5% higher. So very strong move as far as the IT pack was concerned. The next set of stocks, or the next stock on the radar, was RPSG Ventures. The entire Sanjeev Goenka group companies today were in focus after they had held an analyst meet, for analysts across all of the group companies. This particular stock today on strong volumes ended at the upper circuit. NIIT was another stock, that ended at the upper circuit today. A noted investor, Ramesh Tamani, picking up stake on Friday in a block deal, stock higher by 20%. And the other stock, the last stock as far as the gainers list was concerned, was GSPL. This particular stock moved higher by over 11%. Very strong volumes. It will be interesting to see what is the development that comes about over here. But on the other hand, quite a few stocks that also ended in the red. The first stock on the radar was Apollo Hospitals. A downgrade coming in from Nomura, and this particular name stock ended marginally lower by a little over 1%. Zydus Life Sciences, we've been highlighting it all throughout the day. One of the most important drugs, finally seeing some competition. Stock ended lower by almost 6%. And lastly, Paytm, some negative news flow coming. Money Control ran an article saying that, there were some worries in terms of Vijay Shekhar Sharma and other directors facing SEBI show cause notices. After that, the stock, tanked quite significantly, almost 4.5% lower, and ended again, near the day's lowest point.
Okay, plenty of action. Vivek, you've summarized it nice and neatly, so thanks for that. But let's get in our guests. We have Shilpa Raut, Senior Analyst at Derivatives at Prabhudas Leeladhar, as well as Gurpreet Chadha, Managing Partner and CIO at Complete Circle. Ladies first, so let's go across to you, Shilpa. Tell me, what did you make of today's trading session on the Nifty, the levels that you're looking at, and also the Nifty Bank, it's facing resistance at higher levels. Your view.
Nigel, Nifty, yes, we have been talking about that it is due to now cross 25,000 mark. So it has done today. The closing has been very, very strong. So I believe tomorrow we might see 25,200 to 300 levels as well being tested. So that is where one can start booking profits. But 25,300 is something that definitely you should wait for. Talking of Bank Nifty needs to close above 51,200 to see some very strong short covering happening. So this level has to be tested and sustained, then only the move towards 51,700 to 52,000 can come in very quickly.
Okay, all right, got that. Shilpa, stay on. We'll have some more questions for you, but let's quickly get to the individual stocks and all the sectors that we have to track as well. So metals, of course, in focus, and a huge performance coming in. The index itself was up about 1.5%. And Nigel, it was just across the board. Almost every single metal stock was flying away. What are the triggers that you think led to it?
I've got 4 on my radar. And you recall on the day of the Supreme Court verdict, I said it's negative for metals. It's a knock, but not a knockout punch. And today those stocks, most of them are up nearly around 10% or 8 to 10% from the lows that we saw in that trading session. Let's run you through 4 big points why metals did well today. 1, the Federal Chair, his commentary sounded dovish. That's good news for metals because the dollar index goes softer. You have commodity prices that moved up. Next up, the cues coming in from China. They are positive as well. China has reportedly halted approvals of new steel capacity. We already know supply is in excess of demand in China. And if China doesn't consume as much as they produce, it becomes a worry for the globe because they start supplying more in the global space. So that's why, in fact, no new approvals will be good news. Also, you had that prices of steel as well as iron ore in the past week, they moved up. They've been rank underperformers under big pressure, but there was a bit of a bounce on that front. Base metal prices as well have bounced up. Whether you look at aluminium, zinc, lead, copper, all of them had a good bounce in the last few sessions. And there are some news points that are coming there. Chinese zinc smelters, well, they are contemplating output cuts to stem the losses, which will be good for Hindustan Zinc as well as Vedanta. Aluminium prices themselves in the last 1 month or so, it went to around $2,700, then it corrected around $2,200. Today, it's holding at around $2,500 per ton. So aluminium prices surging up is always good news for NALCO, Hindalco as well as Vedanta. And finally, price hikes. JSW Steel, they have announced a price hike on rebars, which is good for long. So that's a positive because we're still in the monsoon. Normally, you expect this in the second half of September. It's coming sooner than anticipated, so good news. And stainless steel as well. Prices have been moved up by close to 3,000 rupees. JSL, they have increased prices on a particular grade of stainless steel. And that's because input costs, that's nickel cost, have moved up. So put all this together, the 4 big reasons why metals did well today. Gurmeet, I wanted your verdict on this. How you're playing this theme. Metals can do anything, right? Just a short while ago, you saw Vedanta at 410 rupees, Tata Steel at 140 rupees, Nalco went down to 160 rupees odd. All of them firing all cylinders. What do you like?
So, as you rightly said, we play it tactically. We don't have any fundamental positions here. We prefer to play it largely through the large cap route, largely with ferrous names with Tata Steel and non-ferrous with Hindalco. Hindalco, if you see there was the last quarter, the numbers were pretty good. In fact, EBITDA was a little ahead of estimate, led by both copper and aluminium. Copper EBITDA per ton actually surprised, present across the value chain, backward integrated, upstream, downstream. So that's and the pointers are in front of you. Our in general view on commodities is positive. I think we are in a new era where probably you see a lot of fresh capex in a lot of countries with the kind of geopolitical situations we are in, and in general that is positive for commodities. China is the only, as I say, you can call it a black box which can influence short-term trades. So we play it tactically. Sometimes we play it through special situations, like you mentioned, Vedanta. We also got into Mukan Steel when it was in 2-digit, when Bajaj acquired the ownership. So any negative news in metals is when we come in, and we're happy to take some money off the table as and when we get some.
Okay, got it. So tactical play on metals there for Gurmeet. That's one sector that was in the limelight today. The other, of course, was IT, because a lot of the large cap IT names, even some mid caps, they had a fair amount of flair thanks to the expectations of a rate cut in the US, with the Fed chair himself now saying that rate cuts are indeed coming in September. We had Jefferies come out with a note on the IT sector, and Jefferies says that the Indian IT industry is going to be a big beneficiary of these rate cuts. Rima is here to explain the details. Rima, fill us in.
Thanks so much for that. So IT has been the leader in today's rally on hopes that the Fed rate cuts begin as early as September. And we know, history tells us that whenever there is a rate cutting cycle, technology stocks, whether in the US or in India, tend to do well. But there is an interesting note from Jefferies where they talk about Indian IT having outperformed the Nifty since calendar year 2023. So after a sharp underperformance in 2022, the Nifty IT outperformed the Nifty by 4% last year, and even this year it's outperforming. But this outperformance has come despite there being earnings downgrades. Except for TCS, large cap and mid cap IT companies have seen earnings downgrade. So therefore, Jefferies is arguing that this outperformance seen in Nifty IT is led by PE re-rating. So the 16% year-to-date up move in Nifty IT is driven by an 11% PE re-rating. And now, Indian IT stocks are trading at a premium to their historical averages, while Accenture is trading at a discount to Indian IT names. So divergent trends seen between Indian IT and Accenture. According to Jefferies, valuations are rich. The Nifty IT is at 29 times. It's trading at a significant premium to Nifty IT at 40% more than what we historically see. And therefore, they say it's time to be selective on this sector. They like Infi and TCS, given the limited risk to their earnings and relative valuation comfort. So yes, IT is doing well, but as Jefferies argues that this outperformance seen by IT has been driven by a PE re-rating and not by earnings upgrades.
Got that. Thanks for that, Rima. Well, Shilpa, tell us, what's your view? Anything looking good on the chart? Some of these mid-cap names, in fact, they went through the roof today. How do you like IT? Any particular stocks?
Yes, definitely IT and particularly mid-cap, yes. I would go with Naukri. Naukri has given a very good closing, probably the career best closing till now. Stock closing at above 7,500 is a very, very strong move. And I believe that could be a good gap up also tomorrow. And the stock is all well set to test 7,800 from here. So I believe IT and particularly Naukri, one should definitely keep on radar.
Okay, all right. So some of these stocks in focus. Let's quickly move on and talk about one more stock that was in the limelight today, and it was, on the way down actually. And I'm talking about Zydus Life. The stock fell almost 6%. after Teva Pharma received an approval from the US FDA for a drug which is also manufactured by Zydus. It perhaps threatens Zydus' monopoly in terms of the generic version of that drug. Separately, there's also news that Zydus is picking up 50% stake in Sterling Biotech for a little over 500 crore rupees. Let's go across to Ekta to understand why the stock fell 6% today. Ekta?
Well, I'll start with the fact that Teva has received US FDA approval for the ulcerative colitis drug Asacol HD. They will be launching the generic version. Zydus was the only generic in the market for a long time, and it is estimated that the drug accounted for around 3 to 5% of Zydus' revenue and 8 to 10% of their EBITDA in FY24. Now, Jefferies assumes that the product contribution for Zydus is going to fall to less than 1% of revenue and less than 3% of EBITDA in FY26. But the sharp decline in earnings from new entrants in Asacol HD is going to decline or not going to impact Zydus as much due to factors that they've launched a recent drug which is basically used for overactive bladders, Mirabegron generic, and there is increasing contribution from Revlimid generic as well. Plus, they believe they have a strong pipeline of launches for the US, so all this should negate the impact of more competition in Asacol HD, according to Jefferies. Now, IIFL says that the competition has entered a couple of quarters earlier than expected. The impact is likely to play out from Q2 of FY25 versus Q4 is what they had anticipated. Zydus is likely to see an erosion of $25 million EBITDA from this product, according to IIFL. Now, the additional piece of news is that Zydus is going to buy 50% in Sterling Biotech for 550 crores. It's one of the biggest producers of pharma gelatin. FY24 revenue 455 odd crores. Now, Nomura has written on it. They have a neutral and a target price of 1,020. They believe that Sterling Biotech is valued at a 70% premium of around 1,100 crores versus the valuation of 640 crores under the IBC, and the current profitability is weak given the revenue growth and low EBITDA margins. They don't believe the acquisition is going to be earnings accretive in the near term.
Okay, all right, Ekta, got it. Thanks very much for that. Gurmeet, any views, any thoughts on Zydus Life?
So we don't own Zydus. As I said, we have Mankind in our portfolio. These 2 years back, they acquired Panacea. There were some concerns raised then. It was a smaller acquisition of about 1,800 crores. Now they acquired a big one, which is Bharat Serum, which is BSV, which gives them completely, the women health portfolio, a lot of footprint, and those skill sets and capabilities are required, take very long. And they have the network, it's like an FMCG brand, in terms of number of prescription, they are the most prescribed. So in India, it's actually drugs are sourced by prescription by doctors and not like US where you order for a particular drug. And I think they can clear the debt of 6,000-7,000 crores, which they're likely to take in next 2 to 3 years. And they have huge growth plans. So this is something, we have in our portfolio, and probably we added more when it came up 2,000. I think it's a great fit, and this one company looks very good for the long term.
Okay, all right, got that. So you prefer Mankind, point taken. Let's quickly move on and get Rima back to talk about what probably was the stock of the day. And I'm referring to NIIT. So a 20% circuit on the stock after noted investor Ramesh Damani bought, quite a bit of shares, a little chunk of equity in a block deal, which happened on Friday. The company has also given a guidance of 10% quarter on quarter in terms of growth in FY25. We have Rima back to give us the details here. Rima.
Thanks so much for that. Big mover today. NIIT Limited, as you pointed out, Ramesh Damani, marquee investor, has bought 8 lakh shares last week at a price of 127. That's about 0.6% of the equity. But he's not the only large investor in the company. You also have Nippon Small Cap Fund with an 8% holding. Marathon Edge has holding. MIT has close to about a 5% holding. Now, just to give a sense about the fundamentals of this company. Now, in July, the company has guided that in Q2, they will see a top-line growth similar to Q1, which is 10% on a quarter-on-quarter basis. But the company is making investments, and therefore margins in Q2 could be negative. They're talking about single-digit margins at this point, though they will turn positive in Q3 and Q4, and therefore for the full year, the company is guiding for a top-line growth of 380 to 400 crore rupees with low single-digit margins.
Okay, all right. Thanks a lot for that, Reema. Well, on that note, we'll slip into a short break. You come back. We'll get you all the top corporate voices along with the key market events you need to track. Don't go anywhere.
Which combined with improvements in aggregate supply to reduce inflationary pressures, while allowing growth to continue at a healthy pace. As labor demand also moderated, the historically high level of vacancies relative to unemployment has normalized primarily through a decline in vacancies, without sizable and disruptive layoffs, bringing the labor market to a state where it is no longer a source of inflationary pressures. An important takeaway from recent experience is that anchored inflation expectations, reinforced by vigorous central bank actions, can facilitate disinflation without the need for slack. This narrative attributes much of the increase in inflation to an extraordinary collision between overheated and temporarily distorted demand and constrained supply. While researchers differ in their approaches and to some extent in their conclusions, a consensus seems to be emerging, which I see as attributing most of the rise in inflation to this collision. All told, the healing from pandemic distortions, our efforts to moderate aggregate demand, and the anchoring of expectations have worked together to put inflation on what
Welcome back. You're with us on Markets Forward, and let's take a look at the corporate commentary and the top corporate voices that we spoke with today. The first stock on the radar is Finolex Industries. The stock was up about 1% in today's action. The company's management told us that there has been a minimal impact of the anti-dumping duty levy on CPVC resin imports. The company has also marked stocks to volume growth of 10 to 15%. That's Finolex Industries.
Well, Interart Building, they listed on the Wall Street trade. The management said that the company is looking to continue to grow at around 20%. They expect to maintain margins, and also they have an order book of around 1,300 crore rupees listed today. And what a blockbuster listing that we have on that one. But let's focus on the big newsmaker of the day. Bajaj Auto's MD, Rajiv Bajaj, is betting big on clean energy vehicles. In an exclusive conversation with CNBC TV18, Bajaj said that the company is likely to cross the threshold of 1 lakh clean energy vehicle sales by September. He highlighted that 25% of its revenue is coming in from clean energy vehicles. He also said that a new CNG bike brand will be launched shortly. Remember, Bajaj Auto has recently launched the Freedom 125, its first CNG offering. Further, Bajaj said that they will be showcasing ethanol 2 and 3-wheelers in the coming month.
As we head into the festive season, in the months of September, October, November, we are very likely to cross a monthly sales production and sales rate of over 100,000 clean energy 2-wheelers and 3-wheelers. But I would hazard that definitely over 25% of our current revenue is already coming from or about to come from clean energy vehicles, which is quite remarkable. See that Chetak is now close to about 18% market share, or just above 18% market share. We are neck to neck with our able competitor TVS and their iQube. I think just a few hundred vehicles separate us. Having just launched a third product, there are more due later this year, within this financial year. We talked about it the last time we met a couple of months back. And I think post the festive season, and before March, certainly there will be more Chetaks in the marketplace. And I could reiterate what I shared with you the last time, that not only will there be more Chetaks in the market of the current platform, hopefully very sharply positioned, but there will also be a new Chetak platform.
All right, so that was commentary coming in from Bajaj Auto today. Well, before we wrap out, let's bring you some of the key events to watch out for tomorrow. Ekta is standing by with the list. Ekta.
Well, I'll start with a couple of AGMs which are lined up tomorrow. For example, Maruti Indocent Bank, UPL, KPIT Technologies, PI Industries, Imami. There will be a board meet by Paris Defence to mull fundraising via QIP, rights issue or other means tomorrow. There is also the financial services expiry and Premier Energy's IPO, which is worth around 2,830 odd crores, will open for subscription tomorrow. In terms of the global cues, we have Germany Q2 GDP, Hong Kong trade data. In terms of the US, we have the Redbook Index, House Price Index, S&P Case-Shiller Home Price data, as well as the CB Consumer Confidence and the Richmond Fed Manufacturing Index. All will be released from the US tomorrow.
All right, Ekta, thanks very much for that. With that, it's a wrap on this edition of Markets Forward. We'll be back with more news and updates in just a moment.
Appears to be a sustainable path to our 2% objective. Disinflation while preserving labor market strength is only possible with anchored inflation expectations, which reflect the public's confidence that the central bank will bring about 2% inflation over time.
Dr. Deshpande, the crux of our problem is probably our diet. Statistics show that 51% of students eat junk food, 38% of adult Indians eat poorly. So what is wrong with our diet to that extent? Is it the lack of protein? Is it too much carbohydrates? Or is it the incremental amount of junk food that our diet has turned towards in the past couple of years?
Right. So yes, you're very right. The problem is calorie excess because of abundance of food. The other problem is carbohydrate excess. And the third is protein deficiency. So all these three put together are a recipe for disaster because you are increasing your calories, which is going to make you fat and obese. And you are increasing your carbohydrate intake with all the junk food that is there. And you're also increasing your fat content. And all of this is ultimately going to lead to a lot of insulin resistance, fatty liver, and this is inviting all the metabolic diseases that are associated with obesity. So junk food is very high on processing, and processing is really bad because it can cause a lot of what we call oxidative damage.
What is a good source of vegetarian protein according to you, Dr. Deshpande, and how much protein should one consume?
Yeah, so typically if you're really very active, the formula is that you should get 1 gram per kg of your body weight. But if you're not very physically active, if you're much older, you can go to 0.8 grams per kg body weight. If you talk about vegetarian sources, there is no complete protein. So you will have to eat multiple sources of protein because all the amino acids are not contained in any single food. So vegetarian protein is basically not a complete protein. So you'll have to make a mix and match of different things like cereals, sprouts, maybe paneer, dairy, basically. So mushrooms. So these are all the ways that you can get proteins, but not one of them is a complete protein. So one has to be very vigilant. It's not a way. You have to be really careful where your protein is coming from, and maybe meet up with a dietitian to actually find out where the protein is coming from in your food. So it's not very easy to get all the protein that you need from vegetarian sources. But mushrooms, dairy, all these are very few sources are there of protein. Sprouts do have protein, but they also have a lot of carbs, which people don't understand.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. No Monday blues on Dalal Street. The Sensex up over 600 points. The Nifty reclaims 25,000. The US Fed chair hints at a rate cut in September, sending stock markets higher across the world. Tensions rise in the Middle East after Israel and Hezbollah launch major airstrikes on each other. Israel's Prime Minister Netanyahu hints at more strikes, raising fears of an all-out regional conflict. Crude oil climbs as analysts warn prices are likely to stay elevated. Russia launches a barrage of drones and missiles targeting Ukrainian cities, including the capital, Kyiv. Local media reports say at least 4 people have been killed and dozens wounded. The government decides to set aside a separate corpus to manage the likely fund shortfall under the newly announced Unified Pension Scheme. The new scheme, which comes into effect from the next fiscal, will give a section of retired central government employees the option to choose for guaranteed pension along with provision for a lump sum payment. Bajaj Auto is on the cusp of selling 1 lakh clean energy vehicles every month starting September. Rajiv Bajaj promises to launch a new CNG bike and ethanol vehicles this fiscal. Says cleaner vehicles contribute to 25% of overall revenue. That's an exclusive. SEBI issues a show-cause notice to Paytm's Vijay Shekhar Sharma and directors of the company for allegedly misrepresenting facts in its IPO document. Sources say the notices pertain to non-compliance with promoter classification norms. That's a money control exclusive. After withdrawing an initial list with 44 candidates, BJP releases the first list for Jammu and Kashmir polls with 15 candidates. No candidates announced for 9 seats in South Kashmir. The last date to file the nomination for the first phase is tomorrow. Messaging app Telegram says its CEO Pavel Durov has nothing to hide after French authorities arrest him for failure to stop criminal activities on the platform. Moscow demands consular access for the Russian billionaire and claims authorities in France are refusing to cooperate. Well, let's start with the market action. Strong gains on the Lal Street as stock markets worldwide reacted to statements coming in from the US Fed Chair Jerome Powell, signaling a rate cut in September. The Sensex added over 600 points and Nifty 180 points, moving back above the 25,000 mark. Mid-caps and banks also gaining in trade today. Surabhi is standing by now to take us through the market action. Surabhi, just shy of a record close today. That's how we ended the day.
Well, it was a day of steady moves and moves that were taking the indices closer to the all-time high all over again. And you have to thank, of course, the very expected, predictable commentary that came in from the Fed chair at the Jackson Hole Symposium over the weekend. On Friday, those comments were made, and the indication is very clear that rate cuts are coming in September. So that sparked a bit of a global move, and India, of course, was participating in that entire setup. So let's talk about what happened here. Of course, intraday, we saw the Nifty move above 25,000. So we're, just a stone's throw away from the all-time high of 25,078. A lot of, sectors participating today. So it was a very well-rounded move. That's the other good aspect of it. IT, metals. You also have sectors like real estate, PSU stocks. So, lots of different colors and contours of the move. Let's talk about the winners. And IT was very strong because of the NASDAQ rally that we had and the expectation of the rate cuts. So names like HCL Tech Mahindra, LTI, Mindtree, anywhere between 1% to 3%, depending on which stock you are picking up. A lot of the geopolitics and the moves that we're seeing, both, Russia, Ukraine on one side, and then what's happening in the Middle East with Israel and Hamas and now Hezbollah, that kept commodity prices afloat. So oil was moving higher while we were trading. In general, the metals complex had a fantastic start to the week. In fact, if you look at some of the metal winners, it's across the board: ferrous, non-ferrous, large cap, mid cap, PSU, private. Look at this: JSW Steel, Hindalco, Tata Steel, SAIL, Nalco, and the gains are ranging between 2% to as much as 5% in some of these stocks. So very strong on metals today. Other Nifty winners, the big batsmen were also chipping in with the runs, and that helped the Nifty. So L&T, RIL, HDFC Bank were up and about, and a stupendous move in big mid caps, so large mid caps like a Motilal Oswal, JM Financials, NIIT with Mr. Ramesh Damani participating in a block deal, Honasa, PB Fintech, Tata Elxsi. So a huge move on a lot of these active mid-cap stocks. The market will have to eye geopolitics very closely because the oil is now moving back to 80, and that will remain a very important trigger and watch point as we come back for trade tomorrow.
All right, Surabhi, many thanks for joining us. Now, geopolitical tensions keeping investors on edge worldwide. Israel and Hezbollah have traded heavy fire in one of the biggest aerial attacks on the Lebanon border since the war broke out in Gaza. This comes after Israel killed a Hezbollah commander and allegedly assassinated the political leader of Hamas. Iran's foreign minister has pledged that the retaliation against Israel will be precise and calculated. Meanwhile, ceasefire talks in Egypt's Cairo hang in balance as neither Israel nor Hamas were able to agree on a compromise. But the negotiations continue, and the U.S. said it was still feverishly pursuing a deal. In central Gaza, Palestinians and patients are fleeing from the Al-Aqsa hospital to nearby areas seeking refuge. This comes after the Israeli army issued evacuation orders. Israel's Prime Minister Benjamin Netanyahu confirmed that Israel launched preemptive action against Hezbollah in Lebanon. He also signaled more attacks, warning that this was not the end of the story.
We are hitting Hezbollah with surprising trust. 3 weeks ago, we eliminated their chief of staff, and today we foiled his offensive plan. Nasrallah in Beirut and Khamenei in Tehran should know that this is another step on the way to changing the situation in the north and returning our citizens safely to their homes. And I repeat, this is not the end of the story.
Prime Minister Netanyahu and crude oil prices gaining for the third straight day as tensions rise in the Middle East. Some brokerages are now expecting oil prices to remain elevated for the rest of the year. Manisha standing by with more details. Manisha, what are we talking about on the upside now as far as prices are perhaps concerned?
Well, most asset classes have been gaining, but crude oil prices have more reasons to gain. We have seen prices move around $80 a barrel. It has been a $4 of a jump up in last 4 trading sessions. It was in the previous week that we saw 2024 lows of $76 a barrel. So $4 of a gain from there. We are way off from $91 of a high that we also have seen in this year. But the reasons for gains clearly are about Israel and Hezbollah exchanging missiles over the weekend. There's no progress on Israel and Gaza cease talks as well. And then the US rate cut expectations, the dollar index trading at a 13-month lows, have been supportive factors as well. For the crude prices, it also has to do with the US crude inventories constantly declining and now at a 2-year lows. If you look at the global crude inventories, those also are nearly 4% lower than the 10-year average at this point in time. So these are various supportive factors into the markets. What is not working for crude, though, is the fact that the demand from China is still on the weaker side. OPEC and allies from the month of October are going to add more production into the international markets. And then there are concerns about demand growth going forward into the next year as well. But a couple of reports are still on the positive side. JP Morgan, for one, says that the crude demand has not peaked yet. And if there is no incentivize or investment in production, then you could be looking at the crude oil prices going much higher, maybe into 3-digit as well. Morgan Stanley, for one, says that this year could be positive, but in the next year, they're looking at much lower crude oil prices, way below $80 as well. So it still is a wait and watch, and whether or not there are more retaliations coming in, and if the crude facilities are at all hurt. Remember, as of now, this is only premium and sentiment. No crude oil facilities have been hurt, and there is no disruption yet.
Right. Manisha, many thanks for joining us. And speaking of escalation, fresh developments in the Ukraine war with Russia launching a barrage of missiles and drones at Ukrainian cities. According to Ukrainian authorities, Russia deployed 11 strategic bombers in the air, killing several people and injuring many in 15 Ukrainian regions that were targeted. Authorities also claimed that multiple groups of Russian drones were seen moving in all directions. Several apartment complexes were reportedly damaged, and officials are verifying casualties. People were seen taking shelter at metro stations. In Kyiv, the Russian strike has caused massive damage to the city's infrastructure. Many residents were left without power and water supply. Ukraine's President Zelensky has called on the US and European allies for more weapons to strike back at Russia. Back home, the Reserve Bank of India has announced a new credit platform called the Unified Lending Interface, which will be launched soon. Speaking at an event, the governor said that the platform is in its pilot stage and will be launched soon across the nation, hailing it as a game changer for the lending space in India. Governor Das said the ULI will enable seamless delivery of credit. The governor expects ULI to transform the lending space just like UPI transformed digital payments. Take a look.
Unified lending interface is expected to cater to large unmet demand for credit across various sectors, particularly for agricultural and MSME borrowers. Based on our experience from the pilot project, a nationwide launch of the ULI will be done in due course. Just like the UPI transformed the payments ecosystem, we expect that ULI will play a similar role in transforming the lending ecosystem. The earlier Trinity was Jan Dhan Aadhaar Mobile, JAM Trinity. We are calling it the new Trinity. The new Trinity of JAM, UPI, and ULI will be a revolutionary step forward in India's digital infrastructure journey.
Well, that's Governor Das on ULI. Now, shares of Paytm down sharply today. This after Money Control reported that the market regulator has issued a show-cause notice to the founder Vijay Shekhar Sharma and board members for allegedly misrepresenting facts during the IPO process. Now, as per sources, the notices were issued after Vijay Shekhar Sharma allegedly failed to comply with the promoter classification norms. The probe was initiated based on inputs from the Reserve Bank of India. That's the latest on Paytm. Now, shares of Inter-Arc Building Products have seen a robust debut, listing at a premium of more than 44% over the issue price of 900 rupees. However, the stock declined from those early highs, still managing to close the day higher by nearly 33%. Hero Motor Company's auto component firm Hero Motors has filed a draft red herring prospectus to raise 900 crore rupees via an IPO. The public issue is a combination of a fresh issue of equity shares worth 500 crore rupees and an offer of sale of 400 crore rupees. The promoters, OP Munjal Holdings, is looking to sell 250 crore rupees worth of shares in the OFS. Hero Motors may also explore a pre-IPO placement of 100 crore rupees. Well, the big news maker of the day, Bajaj Auto MD Rajiv Bajaj, is betting big on clean energy vehicles. In an exclusive conversation with CNBC TV18, Bajaj said the company is likely to cross the threshold of 1 lakh clean energy vehicle sales by September. He highlighted that 25% of the company's revenue is coming in now from clean energy vehicles. He also said that a new CNG bike brand will be launched shortly. Remember, Bajaj Auto recently launched Freedom 125, its first CNG offering. Further, he said they will be showcasing ethanol 2- and 3-wheelers next month.
As we head into the festive season, in the months of September, October, November, we are very likely to cross a monthly sales production and sales rate of over 100,000 clean energy 2-wheelers and 3-wheelers. But I would hazard that definitely over 25% of our current revenue is already coming from or about to come from clean energy vehicles, which is quite remarkable. See that Chetak is now close to about 18% market share, or just above 18% market share. We are neck to neck with our able competitor TVS and their iQube. I think just a few hundred vehicles separate us. Having just launched a third product, there are more due later this year, within this financial year. We talked about it the last time we met a couple of months back. And I think post the festive season and before March, certainly there will be more Chetaks in the marketplace. And I could reiterate what I shared with you the last time, that not only will there be more Chetaks in the market of the current platform, hopefully very sharply positioned, but there will also be a new Chetak platform.
Well, you can catch the full interview with Rajiv Bajaj at 4:30 p.m. and 10 p.m. right here on CNBC TV18. And shares of Zydus Life Sciences down to a 2-month low after it acquired a 50% stake in Sterling Biotech through its wholly owned subsidiary. The pharma firm bought the stake from Temasek-backed Perfect Day for 550 crore rupees. The transaction makes Sterling Biotech a 50-50 JV and marks the foray of Zydus Life Sciences into specialized biotech products for health and nutrition. Now, here's the latest on the ongoing Godfrey Phillips promoter battle. US-based proxy advisory firm Glass Lewis has recommended that shareholders should vote against the reappointment of Beena Modi as the managing director of the company. That's not all. The proxy firm has also questioned the board's decision on failing to reappoint Sameer Modi as director. The proxy firm flagged concerns regarding the independence of members of the nomination committee. Remember, it is this committee that recommended against Sameer Modi's reappointment as a director. The recommendation was released ahead of the shareholder meeting, which is expected to take place on the 6th of September. Now, the second India-Singapore ministerial roundtable has commenced today. Finance Minister Nirmala Sitharaman led a high-level meeting with Singaporean President and Prime Minister, along with Commerce Minister Piyush Goyal, Foreign Minister S. Jaishankar and Railway Minister Ashwini Vaishnav. The discussions focused on deepening collaborations in areas including skill development and digitization. While the government has decided to set aside a separate corpus to manage the likely fund shortfall under the newly announced Unified Pension Scheme. The new scheme comes into effect from the 1st of April 2025. It will give a section of retired central government employees the option to choose guaranteed pension along with the provision for a lump sum payment. Sapna is standing by now with more details on the specifics of the scheme. Sapna, take us through this corpus that the government is hoping to create.
Well, the corpus is already there under the funds that are managed by the PFRDA, which is a regulator, and we're talking of big numbers here, around 10 lakh crore plus, of course, but this includes private sector investments. So, on the government side, it will be slightly lower, maybe the 7 to 8 lakh odd crores is what we're talking about. But the critical aspect here also is that what happens under UPS now from the employee perspective? How is the minimum assured pension going to come through? And it's important to understand understand that what the government is now proposing is, creation of two separate accounts under the pension fund. One would be the individual pension fund, in which the 10% of the employee plus 10% contribution to the government will go in. Government will also set aside a buffer account, so to speak, which will take care of future shortfalls, if any, which will, incorporate that the other 8.5% GOI contribution. So that has got nothing to do with the individual pension account holders. Their pension fund is separate. This 8.5% is going to be more like a contingency fund in case there are potential shortfalls to that assured minimum pension that the government is talking about, vis-a-vis the returns from the market. That will only be utilized in case there's a gap. Otherwise, the expectation is that it's a market that will make good the returns. The government will only have to intervene when required. So this is one thing that people have to keep in mind. Second, also your minimum assured pension is going to be calculated on the default option. What is the default option under the PFRDA regime? Basically, the investment pattern that they have, 85% in fixed income instruments, 15% in equity. So that is how the minimum assured pension is going to be calculated. You have other investment options also, like 2-3 more are there in terms of, higher exposure to equities, lower exposure to equities, hybrid instruments, so on and so forth. The government here is only saying that their minimum assured or basically the assured pension is already a pre-calculated number employee-wise, which is the basic of the 12 months salary that they have earned. So anything that's going to fall short under this default option is going to be made good by the government. Now, suppose I choose another investment option, I don't come under this default option. What happens to me? So in case I am having a shortfall, the government will only compensate me to the extent that this default option is there, on which they're calculating the minimum pension. They will not be compensating me on my entire loss. But anyway, some compensation is going to come through. So net, it's likely to be very beneficial. And the smart thing the government is doing is that even any future liabilities that will arise, they have already they will be creating a reserve fund. And that fund is also going to earn money from the market. So essentially, nobody is going to spend from the pocket, so to speak. Only the additional 4.5% that comes in terms of fiscal cost, from 14% GOI contribution going to 18.5%, that is what the government is going to spend, and 6,250 odd crores is the number that they've already stated for starting from FY26 onwards.
All right, Sapna, appreciate you joining us. Up next at 5 p.m. and 9:30 p.m, we explain the differences between the existing pension schemes and the new unified pension scheme. We also speak with experts on the financial and political implications. Well, we are going to head into a break, but up next, messaging app Telegram says its CEO Pavel Durov has nothing to hide after French authorities arrest him for failure to stop criminal activities on the platform. That and more when we return.
Sprouts is full of proteins. It has protein, but it also has a lot of carbs. And ultimately, if you had to get all your protein from the natural vegetarian sources, your calorie count is going to increase exponentially. So, so that is what you have to be careful about.
As we head into the festive season, in the months of September, October, November, we are very likely to cross a monthly sales production and sales rate of over 100,000 clean energy two-wheelers and three-wheelers. But I would hazard that definitely over 25% of our current revenue is already coming from or about to come from clean energy vehicles, which is quite remarkable.
Messaging app Telegram has said that its CEO Pavel Durov has nothing to hide after French authorities arrested him for failure to stop criminal activities on the platform. Moscow has demanded consular access to the Russian billionaire and has claimed authorities in France are refusing to cooperate. Ashmit is standing by now with more details. Ashmit, why is the Telegram CEO in the dock?
Well, at the heart of the matter essentially lies concerns on part of the French authorities about lack of moderation of content being hosted on Telegram. That's exactly at the heart of this issue. The genesis of this issue as to why he was arrested, the technicalities of it all essentially is a French agency by the name of OFMIN had issued an arrest warrant. This is the French agency that deals with crimes against minors. They were the ones who had issued this arrest warrants against him, which raised concerns, which raised the questions that there were possible questions being raised by the French authorities on CSAM or child sexual pornography. That is one concern that was on the minds of the French agency. But not just that, there are also larger issues with respect to drug trafficking, promotion of terror. These are, of course, some of the concerns that have been expressed by the French agency. As for him, he was arrested on August 24th. The French agencies can hold him for 4 days or for 96 hours, after which they either have to release him or have to press charges against him. As far as reactions again coming in, a lot of conversation around free speech. The likes of Elon Musk expressing surprise and shock at this arrest that has taken place, raising questions about free speech. Edward Snowden as well, talking about how this will impact the conversation around free speech, not just in Europe, but across the world. Even the likes of podcast owner Lex Friedman expressing concern here at this arrest that has taken place. As far as Durov is concerned, again, he's a multi-billionaire, $15.5 billion. Telegram hosts over 900 million active users. So this will impact a service that is in fact spread across a vast number of people. Of course, we're yet to uncover these details, which will begin to unravel once the formal court documents become available. For now, the Russian embassy in Paris saying that we're seeking access to him. We're looking to extend legal support, but the French agencies simply are not cooperating at this stage.
All right, Ashmit, appreciate you joining us. And German optical lens maker Carl Zeiss is all set to invest 2,500 crore rupees in India. The money will go towards constructing a new plant in Karnataka to augment production. The company had a turnover of 1,800 crore rupees in India last year and is targeting a turnover of 5,000 crore rupees by 2027. Shivani Bazar's caught up with the company's management to find out more about their India plans.
German lens maker Carl Zeiss has been known for innovations in vision care for the last 175 years. The company has completed 25 years in India and is now getting ready for the next phase of growth. Carl Zeiss had a turnover of 1,800 crore rupees in India in 2023 and is now targeting a 5,000 crore rupees turnover in the next 3 years. The next action plan is to set up a fourth manufacturing facility in India to rapidly increase production.
In India, we have been more than 25 years working here, and our plan now for the future is to double the capacity of our manufacturing plants. This is now building the factory that we expect to reach at the end of the next fiscal year probably, and then with this investment we are capable to double the size of the company in the next 2 or 3 years.
For the new plant and next phase of expansion, Carl Zeiss will be investing around 2,500 crore rupees. This will help in increasing production for Tier 2 and Tier 3 cities and also help in expanding the company's global footprint.
Our expansion growth is coming from 2 domains. One of the domains is related to customer segment. We want to expand our customer base and we want to penetrate much more in the new customer segments. The second part of the growth is coming from the territories. Currently our setup is very well covered in metro cities and Tier 1, but the plan for the future is to cover Tier 2 and Tier 3 cities in order to close the much better quality of healthcare and solution to our customers in these Tier 2 and Tier 3 cities.
As part of the growth plan, Zeiss will be focusing on healthcare equipment and also making India the R&D hub for its global operations.
India is now moving in the innovation area. We are providing a lot of technology in order to support the growth of India in research and development. Semicon is now a new technology, who is a new sector, who is now coming to India. Recently there was a lot of announcement by the government that there will be set up a clear semiconductor industrial here in India, and we are capable to support in many of these processes and in many of these value chains some technology to support this growth.
For Z's, India is currently the 8th biggest market globally, and with the latest investment of 2,500 crore, India could soon be among the top 5 markets for the German lens maker. In New Delhi, this is Shivani Bajaj.
Well, with that, it is time for us to wrap up this edition of Business 360. The news will continue after this break. Stay tuned to CNBC TV18. We're back in a moment with more.
US Vice President Kamala Harris created history when she accepted the nomination to contest the US presidential election. She is the first woman of color and the first South Asian American to become the presidential candidate. She has Indian roots. 59-year-old Kamala Harris is half Indian and half Jamaican. Her full name is Kamala Devi Harris, daughter of Shyamala Gopalan Harris, a biologist from India, and Donald J. Harris, an economist from Jamaica. Kamala Harris's mother is from Thulasendrapuram, a small village in Thiruvarur district of Tamil Nadu. Shyamala Gopalan, a cancer researcher, had migrated to the US in 1958 and graduated from the University of California, Berkeley. She met her husband, Donald J. Harris, at the university, and the two got married in 1963. Kamala Harris has a sister. Bajaj Auto, India's largest exporter of two-wheelers, has had a strong quarter-one performance. The maker of the iconic Pulsar brand of motorcycles, KTM, Triumph, Husqvarna, and a market leader in the three-wheeler segment with a 78% market share, is ramping up its clean energy portfolio. With the aim to drive growth over the next 10 years and making the company future-ready, the company is preparing a diverse portfolio of electric, CNG, flex fuel and other alternate fuel vehicles. Bajaj Auto is among the top 3 in the electric two-wheeler market and has a plan to increase production and sale of the Chetak scooter. The company hopes the Freedom 125 CNG bike could help increase market share in the 100 to 125cc segment. Also on the cards is an e-rickshaw, ethanol and hydrogen bikes and a twin-cylinder motorcycle in future as well. Joining us now to talk about the company's growth strategy is the company's Managing Director, Rajiv Bajaj. Mr. Bajaj, thank you very much for joining us. The company has been an outperformer in calendar year 2024, surging 50% compared to the 12% rise in the BSE Sensex. If we speak about the stock, what do you think is working in favor of the company right now? Do you feel, with all the disruptions behind, you've managed to put together a strong clean energy vehicle pipeline for the future, and this is something that you'll focus on for sustained growth?
Well, hi Parikshit, good afternoon. I think it's for all the reasons that I just heard you mention, but in one word, I would like to think it is because of this company's ability to adapt. You know, Charles Darwin said it's not the strongest or the most intelligent of the species that survives, but the ones that are most adaptive to change. And if you look at what's happened to Bajaj Auto in the last 25 years, it has demonstrated an outstanding ability to adapt. First, to adapt from being a domestic player to a global player, As you're aware, we now export about half of what we make to exactly 100 countries. Then came the transition. We adapted from being a scooter-centric company to becoming a motorcycle-centric company. And I would like to believe that it is that strategy which led us last year to become the world's most valuable 2- and 3-wheeler company in terms of market cap. And that has been only growing, as you just mentioned. And finally, to adapt from being a ICE company to also being a clean energy company. And in that context, I must share with you that we stand on the cusp of a very great milestone for us, which is that as we head into the festive season, in the months of September, October, November, we are very likely to cross a monthly sales production and sales rate of over 100,000 clean energy two-wheelers and three-wheelers. So it's a great time for us.
Right. Give us also a sense, how do you expect your clean energy portfolio to contribute to total revenues in FY25 and by FY30?
Okay. So FY30, it's a little too distant in the murky future. But I'll tell you where we stand right now. So in September, for example, we see a sales requirement of a shade under 500,000 vehicles, of which, as I said, almost 100,000, if not a little more, would be clean energy vehicles. So, in volume terms, that's a little more than 20%. And because CNG vehicles and EVs are significantly more expensive than their corresponding ICE vehicles. So I don't know the number, but I would hazard that definitely over 25% of our current revenue is already coming from or about to come from clean energy vehicles, which is quite remarkable. I can put a little more color on that for you. We are looking at, for example, 20,000 of the newly launched Freedom, the world's first CNG motorcycle. We are going to do our best to get closer to 30,000 Chetaks. Easier said than done, because it was only last month that we crossed 20,000 for the first time. We are a very, very strong player in the CNG three-wheeler market with over 80% share of that. So over 40,000 CNG three-wheelers should head out next month. And we are very pleased with our success of the electric three-wheeler, of which we will try to make closer to 6,000 or a little more next month. So if you add that all up, it tells you that the split between two-wheelers and three-wheelers is about 50-50. The split between EV and CNG is also close to 50-50. And altogether, it's a cumulative 100,000 vehicles a month, about 25% of our revenue.
Now, you had over 13,000 bookings for the Freedom 125 CNG motorcycle when we last checked about 2 weeks ago. What is the current production ramp-up plan for the Freedom motorcycle?
Last month we did about 2,000 vehicles. It was the first month of introduction. This month our goal was to do 10,000 vehicles, but due to some part shortages, I think we will be somewhere between 8,000 and 9,000 vehicles, the last I heard last week, which I still think is very good for what is practically the first full month of production after launch. As I just finished saying, we are going to hope to push that to 20,000 vehicles next month. And Rakesh just gave us clearance to expand to 40,000 vehicles. So I think by January, if not before, we should be headed to about 40,000 per month of this wonderful motorcycle.
Now, considering that the numbers are encouraging and you are receiving strong response to the Freedom 125 CNG motorcycle, could we expect you to launch more CNG models in the near future, maybe prepone the launch plans?
Well, yes and no. Yes, because we do have another CNG motorcycle due shortly. I can say within this financial year, sometime in the second half of this financial year. But at the same time, I would hasten to add, Parikshit, if you look at the stellar successes of brands in the last 30 years, the brands that really stand out are those like Hero Splendor, Honda's Activa and Shine, our own Pulsar and our three-wheeler, Royal Enfield's Classic. So you would see that, they really demonstrate the wisdom of less being more. So it's not about really spraying and praying after putting a lot of SKUs out there. It is about choosing your battles very carefully, being very focused in your understanding of what the customer wants, which the competition cannot easily provide at the moment, and then making that introduction as effectively as possible. So while we will have another bike coming in shortly, but I think the Freedom 125 that is currently in the marketplace, from all that I've heard in the last 6 weeks since launch, that really has the legs to go all the way to 40,000 a month, if not beyond.
You had also hinted to us earlier that CNG is not the only portfolio that you're working on. There is an ethanol or a flex fuel motorcycle, a hydrogen motorcycle that you're also working on for future. Any timeline that you could give us as to what we can expect next, considering that clean energy is a focus area for Bajaj Auto?
Well, clearly between the two, ethanol will come first. We have always been very encouraged by Mr. Gadkari's emphasis on this fuel. And next month, along with other players from the industry, we will be showcasing our ethanol motorcycle and three-wheeler in Delhi. And I think within this financial year, we will be ready to launch these products. Hydrogen is obviously, as you can imagine, still in the works as far as R&D is concerned. So Joe's working on that, but one day soon, why not?
Now, as the space is growing fast and this is the festive season, how soon can we expect more electric scooter launches, either in the affordable or in the premium segment from Bajaj Auto?
We will have launches at both ends of the market that you mentioned, because there are consumers at both ends of the market, and at the same time we also we need to keep the higher end going from a brand point of view, but also for the scale we need the products at the more competitive price point also. So having just launched a third product, there are more due later this year, within this financial year. We talked about it the last time we met a couple of months back. And I think post the festive season and before March, certainly there will be more Chetaks in the marketplace. And I could reiterate what I shared with you the last time, that not only will there be more Chetaks in the market of the current platform, hopefully very sharply positioned, but there will also be a new Chetak platform that I had mentioned to you when we met the last time, and that should be out early in the next financial year.
Now, speaking about electric motorcycles, Royal Enfield has already declared, it's in public domain, that they will be launching an electric motorcycle. Ultraviolet, Revolt have electric motorcycles in the market. Ola plans to launch them as well. Now, considering that the market is going to come up with these electric motorcycles, what is your thought on bringing one to market?
Well, I'm going to take two steps back and tell you the big picture as we see it, Parikshit. 30 years ago, 70% of the Indian two-wheeler market was scooters. And that is when this company started to place its bets on motorcycles. It was a very counterintuitive choice. A lot of people scoffed at it. A lot of people laughed it off. A lot of people were critical of it and are still critical of it. But, it has stood us well. It has paid off. And what is it that moved the needle from the market being 70% scooters to becoming 65% motorcycles? One simple metric, which was that the 100cc motorcycle was 50% more fuel efficient than the 100cc scooter on account of its transmission, which is much more efficient than that of the automatic transmission of the scooter. But now when you come to the EV world, and if you have the same drivetrain, which means primarily the same battery and the same motor in a scooter form factor and a motorcycle form factor, you will actually get the same performance. You will get the same speed, you will get the same range, you will have the same charging time requirement, etc. So that very big advantage that the motorcycle had over the scooter in an ICE format is now gone. And the other strengths of the scooter, in terms of all the comfort and convenience that it offers as a form factor over the motorcycle, will come to the fore. So, if I sit here and tell you today that I am imagining that India will go back to becoming a 70% scooter market. You would be inclined to laugh me off, as perhaps your predecessor did 30 years ago. And hopefully, I would be right a second time around. So the short story is that as a company, we strongly believe that, while scooters and motorcycles will both be popular, scooters in the electric format hold far greater potential than do motorcycles. That's why, there's nothing ultra about the sale of ultraviolet. It's 5 or 10 motorcycles a month, I believe. And there is no revolution that revolt has caused. As for Ola, as always, we will see what happens when they are in the marketplace. So we are staying very focused on EV scooters now. That's the short answer.
Now, when do you expect to become profitable with your electric vehicle segment, Mr. Bajaj? Because you're one of those who have been very candid at EVs losing money. So when it comes to the path for profitability, how far are you?
Not only is our revenue growing to a very significant level, but if I take our, not just our clean energy portfolio, which includes both CNG and electric, that's of course very profitable, as you can imagine. But if I were to take only our electric portfolio, and in that I include the little vehicles we make for Yulu, our associate company out of Bangalore, the leader in micro mobility in this country. I include all the Chetaks that we make and the electric three-wheeler that I mentioned. I was actually surprised to understand from our CFO Dinesh last month that portfolio is already profitable. Of course, with help from EMPS and FAME and PLI and whatever. I'm not even sure we have PLI factored in as yet, because we just received certification last week for all of our applications. But that portfolio is already positive. Now, obviously, every SKU there is not positive, but that's okay. That happens in an ICE portfolio also. We have SKUs out there in the domestic market, in some of our African markets, which are still not profitable. So that's fine. But as a total portfolio, not just our clean energy portfolio, but our EV portfolio is already positive.
The Democrat National Convention as well. Now, throughout her campaign ahead of the 2020 presidential election, and even now in the run-up to the 2024 presidential election, Kamala Harris has spoken about the profound impact her mother had on her life.
My mother, our mother, Shamala Harris, had one of her own, and I miss her every day, and especially right now. And I know she's looking down, smiling.
Kamala further said that after finishing her graduation in the United States, her mother was going to return home to India. But she met her father, Donald J. Harris, fell in love and got married. The Democrat nominee described her mother as a tough, courageous trailblazer in a fight for women's health. Harris said that her mother taught her to never complain about injustice, but do something about it. Dr. Shamla Gopalan Harris died in 2009, a year before Kamala Harris was elected as California's Attorney General. In the past, Kamala Harris has often said that India was a very important part of her life and her... Speaking about the three-wheeler segment specifically, you've got a strong 78% market share as per the Q1 earnings call. From a 26% market share in the E3-wheeler segment, how do you expect to grow the market share in the E3-wheeler segment? Are there more launches expected?
Well, we expect to grow it the way we've been growing it in the last 15 months since launch. As you're aware, a couple of our major competitors have been in the market for about 3 or 4 years. We ourselves entered the E3-wheeler market with the auto and the cargo variants only last May. We made a small beginning starting from Agra. And I was very pleasantly surprised again to learn around 20th of August, when we met for a review, that the Vahan data for August shows that Bajaj has actually become the market leader in the E3-wheeler segment, by which, again, I must clarify, I mean e-auto and e-cargo. I'm not including the e-rickshaw because we don't participate in that market, at least at the moment. So our market share, if I remember right, was about 36%, is what our president of the business, Samar, informed us. And, I was, as I said, delighted and surprised at the same time, because I didn't know that we had done that well. And then I understood also that in markets that we have launched for over 3 months, our share is very often 50% or above. So our goal is very clear, Parikshit, that